एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। फिलहाल देखोगे क्रूड ऑयल और नेचुरल गैस को। क्रूड ऑयल फ्लैट ओपन हुआ था। ओपन होने के बाद उसी लेवल के आसपास ही चल रहा है। नेचुरल गैस कॉन्ट्रैक्ट चेंज हुआ, एक बड़ा गैप डाउन है एंड कंटिन्यू सेल ऑफ चल रहा है। लेट्स सी यहाँ पर कुछ सपोर्ट बनता है तो एक बाइंग का प्लान करते हैं। एंड इंडियन मार्केट को भी देखोगे, फ्लैट ही ओपन हुए थे दोनों ही। निफ्टी 50 एंड बैंक निफ्टी हल्का सा पुल बैक दिया एंड देन कंटिन्यू सेलिंग में ही है। स्पेशली बैंक निफ्टी देखोगे थोड़ा सा ज़्यादा सेलिंग में आ गया है अभी फिलहाल के लिए। 130 न्यूयॉर्क सेशन की ओपनिंग एज वेल। एंड देन शाम को 6:30 पे न्यूयॉर्क सेशन ओपन, 8 बजे यूएस मार्केट ओपन, और फिर 8:30 पे पेंडिंग होम सेल्स का डेटा है। आज लास्ट वीक की इन्वेंट्री आएंगी क्रूड ऑयल की 9 PM, और 10:30 पर नेचुरल गैस की इन्वेंट्री इंडियन टाइम के अकॉर्डिंग। सो ये कुछ है, बाकी कोई डेटा तो नहीं है अभी फिलहाल के लिए, और या फिर कोई मेजर न्यूज़ का डायरेक्टली इम्पैक्ट पड़े मार्केट पे। नेचुरल गैस को देख लेते हैं। इसमें प्राइस क्या यहाँ पर होल्ड करेगा 4 आवर टाइम फ्रेम पे देखोगे नेचुरल गैस को, तो अगर प्राइस को रिटर्न करना है तो एक डब्ल्यू बनाना पड़ेगा, बिकॉज ऊपर एक एम पैटर्न का ब्रेक डाउन हुआ है। तो हो सकता है प्राइस कंटिन्यूसली सेल ऑफ में ना जाता रहे। नेक्स्ट मंथ का अगर फ्यूचर कॉन्ट्रैक्ट देखोगे तो वो तो और डिस्काउंट में चल रहा है। ये 348 चल रहा है जनवरी मंथ का। फेब्रुवरी मंथ का देखोगे प्राइस 229 चल रहा है, तो दैट इज़ टू बहुत ज़्यादा डिस्काउंट में है। इसका मतलब प्राइस कहीं ना कहीं अगर रिकवर नहीं करता है उस कॉन्ट्रैक्ट में, तो फिर हो सकता है अगले महीने भी हमें अगर डिफरेंस देखने के लिए मिले तो गैप डाउन हो, तो प्राइस हो सकता है और कंटिन्यूसली गिरता ही रहे। अभी लेट्स सी इंट्राडे में तो देखते हैं। यहाँ पर एक सपोर्ट है नेचुरल गैस में, एक बाइंग का यहाँ पर प्लान करते हैं 15 मिनट टाइम फ्रेम के अकॉर्डिंग। एटलीस्ट देयर इज सपोर्ट। दूसरी बार आ रहा है, सेकेंड टाइम इस सपोर्ट एरिया पे। एक बार पहले आ चुका है ऑलरेडी। सपोर्ट मान सकते हो उसको नेचुरल गैस का। इसके बाद तो मुझे सीधा फिर नीचे गैप ही दिख रहा है, उसके अलावा और कोई सपोर्ट नज़र नहीं आ रहा फिलहाल के लिए। तो चांसेस है अगर ये सपोर्ट हायर हाई में कन्वर्ट नहीं होता है तो फिर प्राइस ब्रेक डाउन करके और नीचे जा सकता है। नीचे कहीं ना कहीं फिर नेक्स्ट गैप ही देखना पड़ेगा, बिकॉज स्मॉलर टाइम फ्रेम पे तो वहाँ पर कोई सपोर्ट नज़र नहीं आ रहा बिल्कुल भी। रिटेस्ट करने वापस जाता है तो, क्योंकि ऊपर भी रेजिस्टेंस देखोगे तो जितने सपोर्ट से बड़ा गैप डाउन हुआ है, दोज रेजिस्टेंस एक्ट लाइक एज अ दो सपोर्ट एक्ट लाइक एज अ रेजिस्टेंस। रिटेस्ट करके आया है, मॉर्निंग पे देखोगे ना एग्जैक्टली सपोर्ट के नीचे ओपन हुआ था मार्केट, पहली कैंडल ने रिटेस्ट किया है, ये तो ये रिटेस्ट ऑलरेडी कर चुका है यहाँ पर एक बार। ठीक है, रिटेस्ट कर चुका है तो ध्यान रखना, बेरिश ही है अभी तक। अब जब तक डे हाई के ऊपर निकलता नहीं, सपोर्ट था स्ट्रॉन्ग, ऑलरेडी मार्केट ने उसके नीचे ओपनिंग दी है गैप डाउन की वजह से, तो ब्रेक डाउन तो हो गया है इसका ऑलरेडी। ऊपर के रिटेस्ट ही हैं पेंडिंग, अगर होने हैं तो। ऊपर जाता है तो फिर ये सेकंड रीटेस्ट रहेगा अगर यहाँ तक पहुंचा, क्योंकि ऑलरेडी रीटेस्ट कर चुका है, मुझे लगा रीटेस्ट नहीं किया है मॉर्निंग पे, रीटेस्ट करके चला गया इस लेवल पे। तो थोड़े से सेलर आप कह सकते हो, सेलिंग का प्रेशर है, ज़्यादा ही है। जब तक प्राइस डे हाई के ऊपर ब्रेक नहीं करता, मान के चलो थोड़ा बेयरिशनेस रह सकती है, हो सकता है साइड में चला जाए, बट सेलिंग का प्रेशर 350 657 के ऊपर ही कहीं ड्रेन होगा, तब तक तो मुझे लग रहा है सेलर इन अ स्ट्रॉन्ग कंडीशन। अपर हैंड उन्हीं का है अभी भी। 1.4, कोई नहीं। पे रिटेस्ट करके चला गया, सेल किया हुआ है तो किसी ने यहाँ पर प्रॉफिट बुक करना। बाकी इसके नीचे के सपोर्ट तो है नहीं यहाँ पर, बिकॉज वो बहुत पहले बड़ा एक गैप अप हुआ था मार्केट में, वहाँ कहीं रेजिस्टेंस रहे होंगे, बट वो 15 मिनट में तो शो नहीं कर रहे हैं, तो फिर वहाँ पर भी 4 आवर टाइम फ्रेम का यूज़ करना पड़ेगा। दैट इज़ ओनली ऑप्शन वी हैव देन। लाइक भी करते रहो गाइज, डोंट फॉरगेट टू लाइक द स्ट्रीम जिन लोगों ने लाइक नहीं किया है। बाकी कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हैं। और 4 आवर टाइम फ्रेम पे ही देखना पड़ेगा फिर इसके नीचे। स्मॉलर टाइम फ्रेम पे डिडंट सी एनी सपोर्ट। वैसे एक बार 30 मिनट देख यहाँ पर कुछ तो बना होगा। ओके, यहाँ पर नेचुरल गैस में एक 30 मिनट के लेवल, 30 मिनट टाइम फ्रेम पे एक लेवल दिखा है। इट इज अ सपोर्ट। का ब्रेक डाउन हुआ था, रीटेस्ट करके मार्केट नीचे गया है। 2 से 3 बार मार्केट ने यहाँ पर रीटेस्ट किया है, फिर सीधा इसका गैप अप हुआ था। ओके, देन इट विल टेक अगेन सपोर्ट। ठीक है, ये भी एक हमारे पास सपोर्ट है, बट ये थोड़ा सा लाइक मल्टीपल टाइम टेस्ट कह सकते हो इसको। वैसे सपोर्ट था, ब्रेकडाउन हुआ, रीटेस्ट बना, नेचुरल है, फिर बड़ा गैप अप हो गया लेवल में, कुछ लेवल ही नहीं था, देन अगेन इट एक्ट लाइक एज अ सपोर्ट। गई। और निफ्टी को देखोगे, थोड़ा सा निफ्टी भी पॉज हो गया है। निफ्टी फ्यूचर हिसाब से निफ्टी गिर रहा है ना, ऐसा लग रहा है वापस 25,850 तक ही जाएगा 15 मिनट फ्यूचर में। बाकी अगर ये वापस ऊपर जाता है तो डे हाई तो फिर से रेजिस्टेंस बना हुआ है 26,070। निफ्टी भी ऐसा लग रहा है मुझे बेरिस ही हो गया पूरा, कहीं गिरने तो वाला नहीं है। 24,000 950 टू 850 के बीच में, यहाँ से लगभग 4 से 5% आने वाले टाइम में। क्योंकि परसों परसों इन द नॉट परसों बट 22 दिसंबर को मार्केट ने एक ब्रेकआउट किया था बुलिश होने के लिए डब्ल्यू पैटर्न का, बट उसका रिटेस्ट नहीं हुआ। वापस प्राइस लास्ट ट्रेडिंग सेशन में 26,000 के नीचे ट्रेड करना शुरू कर दिया था क्लोजिंग बेसिस पे। तो वो फेक ब्रेकआउट था, इसका मतलब प्राइस वापस नीचे आ गया। तो वापस बेरिस हो गया। परसों एक ब्रेकआउट हुआ था तो बुलिश तो हम मान सकते हैं वैसे निफ्टी फिफ्टी को, बट लास्ट ट्रेडिंग सेशन में फिर से नीचे आया है तो इसका मतलब फेक ब्रेकआउट है। तो निफ्टी थोड़ा सा मुझे बेरिस ही लग रहा है। काफ़ी टाइम से एक रेंज के अंदर फंसा हुआ था, परसों एक ब्रेकआउट किया था, फेक है। इट मीन्स वापस बेरिस। अब अनटिल अनलेस 26,280 के ऊपर नहीं जाता तो बेरिस ही है। कॉल शॉर्ट करी जा सकती है यहाँ पर वैसे। कोई न्यूज़ नहीं आती है अगर इंडिया यूएस ट्रेड डील के रिगार्डिंग, तो मेरे अकॉर्डिंग तो ये थोड़ा सा फिर अब साइडवेज टू बेरिस ही रहना चाहिए निफ्टी 50 फ्यूचर। वैसे तो एक्सपायरी है अभी इस फ्यूचर की, तो नेक्स्ट फ्यूचर का कॉन्ट्रैक्ट ही देखना। स्पॉट का चार्ट क्या कह रहा है? स्पॉट का चार्ट अलग ही चल रहा है अभी। स्पॉट के चार्ट में प्राइस अभी भी उस डब्ल्यू पैटर्न के ब्रेकआउट के काइंड ऑफ रीटेस्ट जोन पर ही है, और इसमें नीचे एक सपोर्ट भी है 25,800 टू 25,700 के बीच में। बट फॉरेक्स फ्यूचर चार्ट में ऐसा नहीं है। फ्यूचर चार्ट में परसों ही लास्ट ट्रेडिंग सेशन में ही फेक ब्रेकआउट हुआ था, प्राइस के नीचे आ गया और नीचे सपोर्ट तो बिल्कुल भी नहीं है। देखना जो ऑप्शन की प्रीमियम है नॉर्मली फ्यूचर चार्ट के अकॉर्डिंग ही चलते हैं, बट बिकॉज एक्सपायरी भी होने वाली है फ्यूचर की निफ्टी में, तो फ्यूचर का चार्ट अगर एनालिसिस करोगे तो आने वाले टाइम 2-3 महीने का ही करना। निफ्टी को एक्सपायरी है, फ्यूचर की भी और ऑप्शन की भी। फिर 6 जनवरी, 13, 20, 27। ठीक है, बाकी जो लोग धन में ट्रेड करते हैं, को एडवांस ऑप्शन चेन मींस काफ़ी लॉन्ग टर्म की ऑप्शन चेन और फ्यूचर चार्ट देखने के लिए मिल जाएगा। बाकी ब्रोकर में तो नहीं है, खैर जितना मैंने चेक किया था। महीने तक का तो फ्यूचर आपको मिल ही जाएगा। दिसंबर मंथ का भी एक्सपायरी है, देन जनवरी और फरवरी। बाकी याद रखना, जो लोग अगर एडवांस फ्यूचर ट्रेड कर रहे हैं तो लॉट साइज चेंज होने वाला है सभी का। सभी मतलब निफ्टी, बैंक निफ्टी का स्पेशली। दिसंबर मंथ लास्ट फ्यूचर डेट ही है। इसके बाद जनवरी में जो फ्यूचर ट्रेड करेंगे वहाँ पर लॉट साइज 65 का रिड्यूस कर रहे हैं, 75 से 65। एक तो ये सेबी वाले, एनएससी बीएससी वाले पता नहीं कितने बार लॉट साइज चेंज करते हैं। पिछले 3-4 साल में इतने बार इन्होंने लॉट साइज चेंज कर दिया है। ठीक है, बाकी हाँ, ऑप्शन जैसा मैंने बताया था, अगर आप ऑप्शन ट्रेड करते हो, ऑप्शन बाई या सेल जो भी करते हो, तो वहाँ पर आपको एडवांस काफ़ी लॉन्ग टर्म के कॉन्ट्रैक्ट देखने के लिए मिल जाएंगे निफ्टी और बैंक निफ्टी में। लाइक आप अगले साल तक के कॉन्ट्रैक्ट भी ट्रेड कर सकते हो। मैंने कहीं और देखा नहीं वैसे, किसी और ब्रोकर में ऐसा फैसिलिटी है अगर अभी। थोड़ा सा वॉल्यूम वहाँ कम रहेगा, बट यू कैन ट्रेड इवन। अभी फिलहाल देखोगे तो 2028 29 तक के आपको, 2030 तक के ऑप्शन दिख जाएंगे आपको ऑब्वियसली वहाँ पे। बट ऑब्वियसली वहाँ पर वॉल्यूम बहुत कम होगा ऑप्शन चेन में देखोगे तो। बढ़िया, जो लॉन्ग टर्म में अगर कुछ बना के रखना चाह रहे हैं पोजीशन को अपनी, ऑप्शन सेलिंग में या हैच करके ऑप्शन बाइंग में, तो वो उनके लिए बेनिफिशियल है। इसलिए मैं हमेशा सजेस्ट करता हूँ कि अगर आप फ्यूचर का कभी चार्ट देखो ट्रेड करने के लिए ऑप्शन को या फिर फ्यूचर को ही क्यों ना, तो थोड़ा सा एडवांस मंथ का फ्यूचर देखा करो। क्योंकि अभी अगर आप दिसंबर मंथ का फ्यूचर देखोगे ना, वो बड़ा डिस्टॉर्ड है। मतलब रेजिस्टेंस जहाँ पर बने होने चाहिए वहाँ पर कैंडल ने ऊपर नीचे विक बना के बनाया ही नहीं है रेजिस्टेंस। बट सेम चार्ट को अगर आप एडवांस फ्यूचर में देखोगे, लाइक अभी मैं देख रहा हूँ दिसंबर मंथ का फ्यूचर, तो वहाँ पर टॉप पे कोई रेजिस्टेंस नहीं है हायर टाइम फ्रेम पे। बट फरवरी का देख रहा हूँ वहाँ पर क्लियर रेजिस्टेंस है। बट हाँ, वहाँ पर एक थोड़ा सा कंसर्न आपको ये भी आ जाएगा अगर आप ब्रोकर का चार्ट लगा के देखोगे, क्योंकि नॉर्मल चार्ट में तो नेक्स्ट मंथ का चार्ट आपको शो नहीं करेगा फ्यूचर का। तो वहाँ पर पूरा प्राइस एक्शन शो नहीं करता, सिर्फ एडवांस प्राइस एक्शन ही शो करेगा। थर्ड कॉन्ट्रैक्ट नहीं आता इसमें। फरवरी और जनवरी और फरवरी दोनों मंथ के चार्ट में क्लियर सपोर्ट रेजिस्टेंस दिख जाएंगे आपको फ्यूचर के चार्ट में। बट दिसंबर मंथ का एक्सपायरी होने वाला है तो वहाँ पर क्लियर नहीं है। कैंडल बड़ी इंपॉर्टेंट है नेचुरल गैस में। ये लास्ट कैंडल के नीचे क्लोज नहीं होनी चाहिए। अगर ये 346 के नीचे क्लोज हो गई तो बड़ी प्रॉब्लम हो जाएगी यहाँ पर बायर्स को। फिर से देयर इज अ वेरी हाई चांसेस कि प्राइस फिर से वापस इस सपोर्ट को ब्रेक कर दे, क्योंकि फिर ये लेवल हो जाएगा फाइट करने लायक। तो ध्यान रखना यहाँ पर ये नेचुरल गैस में ये कैंडल अगर क्लोज हो गई लास्ट कैंडल के नीचे, ट्रेड बड़ा रिस्की हो जाएगा बाइंग वाला। तो ध्यान रखेंगे इस कैंडल का। अगर ये प्रीवियस कैंडल के नीचे क्लोज आती है तो फिर इसकी ट्रेड हो जाएगा खाली में। फिर दोनों लेवल पे फाइट है जब तक वापस प्राइस 347 के ऊपर क्लोज नहीं देता। तो फाइट करने देंगे, किसी एक साइड पर निकलने देंगे, उसके बाद ही वापस री एंट्री करेंगे। अदरवाइज हाँ, अगर ये क्लोज हो जाता है तो फिर कोई इशू नहीं है। या फिर मैं कहूँ अगर 347.6 के ऊपर तक चली जाती है कैंडल, नेक्स्ट प्रीवियस कैंडल के ऊपर चले जाती है, बाय एनी चांस क्लोज नहीं भी करती है, ब्रेक कर देती है, तो भी कोई इशू नहीं है। बट अगर ये कैंडल डायरेक्टली क्लोजिंग बेसिस पे आ गई लास्ट कैंडल के नीचे, तो फिर इस लेवल पे बाइंग करना भी रिस्की है। अवॉइड करेंगे, फाइट होने देंगे, किसी एक साइड पे जाने देंगे प्राइस को। मैं ये नहीं कह रहा हूँ यहाँ से ऊपर जा नहीं सकता, सपोर्ट अभी भी है, बट ऊपर फिर ये एक कन्फ्लुएंस पॉइंट, पॉइंट ऑफ इंटरेस्ट बन जाएगा यहाँ पर, विच इज़ नॉट वर्थ इट। तो वहाँ से सेलर रिमूव नहीं होते फिर 347.8 के ऊपर। कैंडल की क्लोजिंग का वेट करेंगे। नेचुरल गैस में भी 9 मिनट हैं कैंडल क्लोज होने में, देखते हैं क्लोजिंग कहाँ पर आती है। नेचुरल गैस में भी एंट्री मत लेना, ठीक है, वेट करना लास्ट कैंडल के नीचे क्लोजिंग ना आ जाए। लास्ट कैंडल के नीचे क्लोजिंग आती है तो फिर इसमें एंट्री करके फ़ायदा नहीं है। प्राइस पुल बैक भी देगा तो वापस इस लेवल पर रुक जाएगा। पाँच मिनट है, देखते हैं, मुझे लग तो नहीं रहा वैसे कैंडल क्लोज देगा वापस 346 के ऊपर या फिर लास्ट कैंडल के हाई के ऊपर। रुकेगा जरूर पर फाइट। इसलिए तो नहीं निकलेगा खैर। नेचुरल गैस में देखो कैंडल हो गई है क्लोज। ये देखो प्रीवियस कैंडल के ना नीचे आ गई है क्लोज। नाउ दिस इज स्टिल अ सपोर्ट एरिया, बट एज आई सेड अर्लियर यहाँ पर बन गया अभी कन्फ्लुएंस पॉइंट। अब जब तक प्राइस वापस आप कह सकते हो 348 349 के ऊपर क्लोजिंग बेसिस पे नहीं जाता है, तो अगर यहाँ से पुल बैक आया भी तो ये यहीं तक ही आएगा। मोस्टली इसी रेंज में फाइट होना शुरू हो जाएगी। तो अब ऊपर जाना है तो आप कह सकते हो 348 49 के ऊपर क्लोजिंग चाहिए हमें, अदरवाइज प्राइस ऊपर जाएगा नहीं। इवन तो ये सपोर्ट भी अभी कोई ब्रेक नहीं हुआ है, कोई प्रॉपर ब्रेकडाउन तो हुआ नहीं है सपोर्ट का, तो इट इज स्टिल इंटैक्ट, बट फाइट विल बी देयर। यहाँ पर फाइट हो सकती है, फाइट हुई तो फिर कोई भी जीत सकता है, तो इसको हम अब थोड़ा सा रिस्की ट्रेड मान सकते हैं। तो दो चीज़ कर सकते हैं यहाँ पर। तो क्या कर सकते हैं, या तो अभी अवॉइड करो एंट्री लेने से पहले, ठीक है, बिल्कुल अवॉइड कर लो इस ट्रेड को, लो ही मत। दैट विल बी अ परफेक्ट वे टू अवॉइड एनी लॉसेस इन दिस ट्रेड। सेकंड, आप क्या कर सकते हो, अगर एंट्री कर रहे हो तो फिर क्वांटिटी कम रखना, क्योंकि हो सकता है ऐसे उठा ले फिर ऊपर जाए, क्योंकि फाइट में कौन जीतेगा ये तो नहीं कहा जा सकता। हाँ, इस लेवल के ऊपर अब जब तक कैंडल क्लोज नहीं होती तब तक आप इसको थोड़ा सा ये फाइटिंग लेवल समझ सकते हो। इस लेवल के ऊपर अगर कैंडल क्लोज हो गई तो फिर डेफिनेटली चला जाएगा ऊपर वापस डे हाई तक। नहीं होती है क्लोजिंग, अगर प्राइस हल्का सा पुल बैक में जाता है और यहाँ से फिर से रिजेक्शन मिल जाता है, तो फिर ये फाइटिंग लेवल है, किस साइड के बायर सेलो जीतेंगे कहा नहीं जा सकता। बट या सपोर्ट से पहले एक थोड़ा सा पॉइंट ऑफ इंटरेस्ट है विच इज़ नॉट सूटेबल फॉर परफेक्टली बाइंग, ठीक है। थोड़ा दूर दूर बनता तो अलग बात थी, जहाँ तक टारगेट लगा रखा है। सो नाउ यू कैन से इट इज अ पॉइंट ऑफ इंटरेस्ट। ठीक है, तो ये थोड़ा सा रिस्की हो गया ट्रेड, ध्यान रखना। ले रहे हो तो थोड़ा क्वांटिटी कम रखना, सो दैट अगर फाइटिंग में अल्टीमेटली जीते भी तो फिर मोमेंटम में कुछ प्रॉफिट मिल जाए, टारगेट बड़ा ही है, एसएल जाए तो छोटा जाए। बाकी अगर अवॉइड करना चाह रहे हो फ्रेश, अगर नहीं लेना चाह रहे हो इतना रिस्क भी, तो फिर उस केस में इस लेवल के ऊपर कैंडल क्लोज होने का वेट करो। फाइटिंग के बाद अगर इस लेवल के ऊपर कैंडल क्लोज आती है फिर नीचे आता है, तब फिर एंट्री करोगे तो फिर कोई इशू नहीं है। फिर उस केस में यहाँ पर जो भी फ्रेश सेलर एंटर हुए हैं दैट विल बी एग्जिटेड, वो निकल जाएंगे, और वो निकल जाएंगे तो फिर कोई इशू नहीं आएगा। बट याद रखना अभी थोड़ा सा रिस्की हो गया ट्रेड नाउ, बाइंग का नेचुरल गैस में, ठीक है। अब इसका मतलब ये नहीं कि सेल कर दो, सेल भी नहीं कर सकते, बिकॉज सेलिंग में भी वही सेम इशू आएगा जो बाइंग में आएगा। यहाँ पर अगर सेलिंग का प्लान करते हैं तो फिर वही सेम, ये बायर भी तो नहीं निकले अभी तक, तो हो सकता है यहाँ से नीचे जाके फिर यहाँ से ही बाइंग आ जाए। तो दोनों साइड पे अभी फिलहाल बायर और सेलर इंटैक्ट है। क्रूड ऑयल में कुछ हो नहीं रहा है, तो इसमें कुछ बना नहीं रहा है, मार्केट थोड़ा साइडवेज ही चल रहा है। थोड़ा सा कुछ प्रॉपर प्राइस एक्शन बने तो देखते हैं। इसको देखो एक बार, ये कौन सा चार्ट है। तो अभी क्रूड ऑयल में कोई ट्रेड नहीं है। इसमें सपोर्ट बहुत लो लेवल पे है, रेजिस्टेंस कुछ बना नहीं है। रेजिस्टेंस वैसे बना है वो हायर लेवल पे है, यहाँ पर अभी कुछ भी नहीं हो रहा है। लुक एट द कैंडल क्रूड ऑयल ओपन इक्वल टू हाई बनी, सडनली बिग बनाई है। एक्चुअली इस पर्टिकुलर जोन पे देखोगे तो यहाँ पर भी सेम ही नेचुरल गैस जैसा ही चल रहा है सिनेरियो। ये एक छोटी सी रेंज बना के बैठा हुआ है मार्केट। रेंज है, काफी देर से चल रही है इसी रेंज के अंदर फाइटिंग, दोनों साइड अपसाइड और डाउनसाइड मूवमेंट के लिए। एक्सपेक्ट है नीचे से थोड़ा सा बाइंग क्रूड ऑयल में आनी चाहिए अब, फाइट ओवर हो जाए तो यहाँ पे। थर्टी भी होने वाला है, थोड़ा सा रखना, मार्केट वॉलेटाइल हो सकता है 130 पर। ठीक है, न्यूयॉर्क सेशन की ओपनिंग रहेगी 1:30 PM इंडियन टाइम के अकॉर्डिंग। ओके। क्रूड ऑयल में बड़ी फाइट है, सपोर्ट रेजिस्टेंस की एक रेंज, किसी भी साइड के ना बायर निकल रहे हैं ना सेलर निकल रहे हैं अभी तक। बाकी नेचुरल गैस का ध्यान रखना, नेचुरल गैस में बता चुका हूँ, ये सपोर्ट जरूर है, बट अब मॉर्निंग पे ये एक सपोर्ट के नीचे बड़ा गैप डाउन हुआ था तो रीटेस्ट करके सेल ऑफ में ही था। इट इज़ अ सपोर्ट, बट यहाँ पर भी अब एक आप कह सकते हो पॉइंट ऑफ इंटरेस्ट रेजिस्टेंस का बन गया है। तो इसमें जब तक अभी इस लेवल के ऊपर क्लोजिंग नहीं देता 349 48 के ऊपर प्रॉपरली 15 मिनट में, तब तक बाइंग करना भी रिस्की है, इसलिए रिस्की ट्रेड लिखा हुआ है, इवन दो अभी भी सपोर्ट होल्ड करके बैठा हुआ है प्राइस में। तो बेस्ट के सिनेरियो यहाँ पर यही है कि अगर आप यहाँ पर ले रहे हो थोड़ा सा कम ही क्वांटिटी में लेना, नहीं तो एसएल जा सकता है। नंबर एक, थोड़ा सेफ प्ले करना चाह रहे हो तो फिर उस केस में दोनों साइड फाइट होने दो, यहाँ पर सपोर्ट अभी भी है, बायर अभी भी है, निकले नहीं है, बट ऊपर रेजिस्टेंस में सेलर भी बैठे हुए हैं। तो इस लेवल के ऊपर कहीं कैंडल क्लोज हो जाए और फिर पुल बैक आए, फिर लोगे तो वो सेफ रहेगा, नहीं तो यहाँ पर लोगे तो अगेन वही, फिर यहाँ से जब तक हो सकता है जाए फिर सेलर्स नीचे लेके आ जाए प्राइस को, टारगेट कुछ मिलेगा नहीं, या हो सकता है पहले ही ऐसा उड़ाए और फिर ऊपर जाए। तो अभी ये यहाँ पर भी फाइट हो गई है साइडवेज एक रेंज के अंदर। बाकी जब तक डे हाई के ऊपर अब निकलता नहीं है तो थोड़ा सा सेलिंग का प्रेशर ही। ठीक है, ऊपर सारे के सारे जितने भी सपोर्ट थे लास्ट ट्रेडिंग सेशन के, उनके नीचे गैप डाउन ओपनिंग हुई है, तो ऑल दीज एक्ट लाइक एज अ रेजिस्टेंस। जैसे मॉर्निंग पे एक रेजिस्टेंस यहाँ बना है, सपोर्ट था वो, गैप डाउन हुआ तो रेजिस्टेंस बना दिया। अगर जाएगा तो हम यहाँ वापस सेलिंग का ही प्लान करेंगे, क्योंकि ये भी रीटेस्ट ही है अभी भी। गाइस क्रूड ऑयल स्टिल साइडवेज। नेचुरल गैस पुल बैक दिया है बट अगेन यहाँ पर रेजिस्टेंस है, फाइट होगी, ध्यान रखना इस लेवल पे। 30 पे भी कुछ खास हुआ नहीं। कि बाकी क्रूड ऑयल में भी एक्सपेक्टेड है थोड़ा सा पुल बैक देता है, तो इसमें भी एक बाइंग आनी चाहिए यहाँ से। बाकी नेचुरल गैस का ध्यान रखना, ये अभी भी यहाँ पर ये पॉइंट ऑफ इंटरेस्ट का जो जोन है यहाँ पर फाइट करेगा डेफिनेटली। जब तक ये क्लोजिंग नहीं देता, ब्रेकआउट नहीं करता इस पॉइंट ऑफ इंटरेस्ट के ऊपर, दैट लेवल एक्ट लाइक अ रेजिस्टेंस। बाकी क्रूड में एक्सपेक्ट है वापस एक बाइंग लोअर एंड से। हाँ। से देखो रिजेक्शन ले रहा है नेचुरल गैस। जब तक ये निकलेगा नहीं ना यहाँ पर क्लियरली ब्रेकआउट करता हुआ। रिपीट कर रहा हूँ, नेचुरल गैस में ट्रेड का ध्यान रखना, रिस्की ट्रेड है। ऊपर यहाँ पर अभी भी रेजिस्टेंस में सेलर बैठे हुए हैं, ये नहीं निकल रहे हैं। जब तक इनका प्रॉपर ब्रेकआउट नहीं होगा तब तक ये और ऊपर जाने नहीं देंगे। हाँ, ब्रेकआउट रीटेस्ट हो जाता है तब डे हाई वापस मिलेगा, नहीं तो दैट इज अ फाइटिंग रेंज, फिर किसी भी साइड पे मार्केट मूव कर सकता है। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। Putin ends requirement for Russian officials to publish incomes. Putin ends requirement for Russian officials to publish incomes. Winter storm brings bilge condition, dangerous wind calls.
You were involved in a very famous short that didn't work out quite so well, called GameStop. Is that right?
Correct.
It seemed as if somebody was manipulating something or another so that a company that maybe should have been shorted all of a sudden became a heroic gainer. How do you deal with something like that?
Painful. That was the toughest. That was the toughest few weeks of my career, and I'm hoping that that period of time will be the toughest going forward. Unfortunately, we had never seen shorts go up 300, 400% in 2 weeks. It wasn't in, even a 5 standard deviation move based on history. No one had ever seen that. So, from a risk management perspective, we just weren't prepared for that, and we ended up taking off the positions at the worst possible time, knowing it was the worst possible time. But if it had gone on for another couple of weeks, it was that painful and that damaging that we had to do it.
So in the hedge fund world, when you take a position, let's suppose you take a long or short position, and it moves against you almost in the beginning, do you say, I made a mistake, I'm getting out of here? You say, I know more than the market knows, I'll wait a month, I'll wait 2 months, I'll wait a year. How long do you wait before you say the market knows more than you know?
It really just comes down to the research. If sometimes stocks move and they move for a reason which is driven by fundamental changes in the business, in which case we have to reevaluate our thesis and perhaps, change our position. If the stock is, but oftentimes stocks move irrespective of what's happening in the business or the fundamentals. And in that case, that's more of an opportunity to double down on an investment.
And today, when you are making investment decisions, is it a team effort? You have a consensus in your organization? Suppose somebody says, I just disagree with this, and the other people don't agree with that person. Can one person hold up something other than you, or you're the only person who can hold up an investment from being made?
I mean, we don't necessarily have layers of people approving or not approving of investments. We have a collaborative culture where we all sit down and talk about it. And it's okay if some people are, usually it's not about hard disagree or hard agree. Usually it's gradations of this is an amazing investment or it's okay. And ultimately it's my job to listen to all the different opinions and come out with a conclusion.
So in the business you're in, when you say an investment is okay or good, you were looking to get a rate of return, let's say annualized of 20% a year when you're all said and done, or higher than 20% a year, or 15% a year? What are you looking for when you say, I'm going to go ahead with this investment?
It depends on the risk profile of the company, but in a large cap, high quality company, 20% over 3 years projected IRR would be sufficient. If you're taking more risk because the company's products are earlier or has more leverage, you're going to be demanding IRRs that are closer to 30%.
So you've been a big investor, as I understand it, in SpaceX.
Yeah. So
SpaceX is a private company. Many times hedge fund people buy publicly traded stocks or they short them. They don't do privates as much because it's a different game, really. But you do publics and privates, and SpaceX is a company you're invested in, right?
Correct.
And it turns out to be a pretty successful company based on private market valuations, I guess.
Yeah.
Were you in there early?
We first invested probably 6 years ago.
So the valuation now is probably, I don't know, a couple $100 billion.
350, yeah.
350 billion is the last round they raised. Okay, and it was up, before that was like 175 or something like that. So you were in well below that. So
yeah,
pretty good
approximately
position.
$30 or $40 billion are probably where our entry point on a weighted average basis.
So in something like that, do you get concerned when the person who's the CEO of it or the founder of it is in the government and not running the company? Or I know they have a very good number two, but is that a worry or not so big deal?
It wasn't a concern for me. Look, I think that Elon's obviously, a generational talent, and I wish he spent all his time at SpaceX.
Right.
But he also has built up an amazing team that is quite capable of running the business day to day. And where he excels is stepping in and solving problems, not necessarily being there day to day to manage everything.
So I think you've been a big proponent of artificial intelligence as something that's really going to change the world. Do you invest in small companies that are in artificial intelligence, or you go to the well-known names in artificial intelligence? What's the best way to invest in artificial intelligence and make money?
The best way to, it's hard to say the best way. I would say the way that is most aligned with our business model is we've invested in OpenAI and Anthropic, which are two of the leading large language models. But I do think over time, there will be investment opportunities in many, many more companies driven by AI.
But you don't go look for the next young Anthropic or something like that. That's not your game, which is venture capital.
We don't go really early stage and try to compete with venture capital firms to invest in companies in the first year or two of their life cycle. We tend to invest when they get more mature.
Are there things beyond the internet and artificial intelligence do you think are the next technological waves that are going to merit your investing in them? So quantum computing or something like that?
Yeah, I think that AI probably for the next decade or two, if not longer, will be the most important technology. But just like the internet, you'll see other things that evolve because of AI, like robotics, biotech innovation. I think you'll see a lot of things driven by AI that are technological revolutions in and of themselves. Look, we never rest on reputation. I like to go out and meet clients, tell the story. Once clients get to know us, and the better they know us, the better the relationship is.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
In case you missed it, on the pulse.
Distinguish between companies are here because they're running international operations, the companies that are indigenous and working with the citizens of the UK, and make sure you get the regulation strategies right. With the rule of law and the great city that London and the great country that UK is, there's a plenty of upside.
What do you tell the Prime Minister?
I tell them to make sure the regulation's fair, be the best place for a non-UK based company to operate, and you'll get companies coming here.
Don't miss the pulse, live every weekday.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Let's talk about how you started this firm and how it's grown to be quite successful. So let's go with your background. Where were you born?
I was born outside of Philadelphia.
Okay, and what did your parents do? Were they in the investment world?
My father's a doctor, he's an internist. My mom is an occupational therapist by training. But my dad spent most of his time outside work investing. So I grew up around stocks.
And you always knew you wanted to be in business, so that's why you went to Wharton, I assume?
Correct.
And how did you find Wharton? The people were smarter than you thought or not as smart as you thought?
I was intimidated when I went because I came from a public school where I think we had 450 people who graduated and 2 went to Ivy League schools, including me. So, my going in assumption would be that everybody there would be better prepared and smarter than me. I think that, at the end of the day, the people were impressive. But I felt that the education I got was sufficient. And, when I left, I didn't feel like, I was in a worse position than anyone else.
Some people that go to Wharton get a joint degree, they get an undergrad degree, and they get an MBA almost at the same time. You got an undergraduate degree, and then you went into the business world?
I went right into the business world.
And where did you go?
I went to Bear Stearns. I started out in investment banking, and then about 2 months into it, I moved into a group that did private equity within Bear Stearns.
And you did that for how many years?
3 years.
And then you left for a firm called Viking?
Correct.
Now, Viking was a so-called Tiger Cub, and it was a firm that was set up by Julian Robertson, one of his proteges, and you were there for how long?
15 years.
15 years. It's a long time to be
a long time in a hedge fund, yeah.
Okay. And you rose up from the very bottom to the chief investment officer?
I started out as an analyst covering banks, and over time I picked up every other sector and became co-CIO and then CIO.
Hey, when you're the CIO of a firm like that, you're responsible for everything. So did you do stocks, bonds, macro, or were you mostly a stock person?
Viking and D1 are primarily focused on fundamental research in equities.
So where did you get the name D1 Capital Partners?
It was inspired by the phrase day one, which Jeff Bezos refers to a lot, and how he thinks about Amazon. And the idea is the first day when you start a business, there's entrepreneurial energy and a sense of motivation and open-ended growth opportunities. And the idea that I never wanted the firm to become slow and bureaucratic, and so every day should feel like day one.
And the firm is now, how old? What year did you start the firm?
We started in 2018, so it'll be 7 years this summer.
All right, so 2018, and did you say to people, I'm starting the firm, I've been the chief investment officer of Viking, and give me all the money you can, or was it easy to raise money or hard to raise money?
At that moment in time, it was a relatively easy time to raise money, and I've been doing it a long time, and Viking had an excellent reputation, and so raising capital was not the most difficult part at that moment in time.
So how much did you start with?
Approximately $5 billion.
$5 billion. And today you're managing AUM of?
About $23 billion.
$23 billion. And today the firm is headquartered in Miami?
We kind of joined headquarters in Miami and New York.
Okay. And today you still specialize in what you've always specialized in, which is stocks more than, let's say, macro kinds of things. Is that right?
Stocks, well, I would say fundamental research of companies expressed both in public equities and private equity.
So how many investment professionals do you have now?
Approximately 30.
And so you make all the final decisions. You're the chief investment officer. So do you say to anybody, you can invest up to a certain amount yourself, or everything goes through you?
D1 is a partnership, and the partners at D1 have the ability to make investments on their own in certain sizes, but probably 95% of the investment decisions are made by me.
And do you have to go out and make the sales presentation yourself, or your reputation is good enough you don't have to do that?
No, we have, look, we never rest on reputation. I like to go out and meet clients, tell the story, and I think once clients get to know us, and the better they know us, the better the relationship is, and the stickier it is over the long term. I hadn't ever failed before in that kind of a way, and so learning from that, getting better, and coming back from that is what I'm most proud of, and probably was the most difficult thing I've had to do.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
So young students often say, I want to get a job at a place like D1 Capital Partners or a place like that. I need to major in a STEM subject in order to get there, because if I'm not majoring in science, technology, engineering, math, I'm never going to get hired, so I can't major in English or history. Do you only take people who've majored in STEM subjects, or do you take people who major in other things, or does it make a difference?
Does it make a difference? I would tell you that increasingly I have found that there are tons of people who are very good analytically, people who are good communicators, especially written. It's harder to find. So I would say that we are indifferent to what people major in, but we do care that somebody is both analytical and quantitatively competent, but also is a good communicator, because in our business, you have to make the case for an investment, whether it's verbally or written. And if you can't do that, you're going to have a hard time.
So in your long history as an investor, what's the best investment advice you ever received?
I think the best investment advice probably came from indirectly from Warren Buffett. And, it was when he talked about his evolution as an investor, where he started out buying cigar butts at 50 cents on the dollar, and then eventually coming to the realization that the best way to create value is to buy great businesses at fair prices and then let them do the work for you by compounding value. That was probably the best advice, because when you start out investing, you start out with a very quantitative approach, and you're looking for things that are just like trading well below fair value. I think the idea of identifying, and then buying great businesses that may be trading at closer to what people perceive as a fair value, but over time will compound value, was a change in mindset that was important.
So what do you think the most common mistake that investors make is? Let's the average investor go. What advice would you give them about how they might start their own firm or their own career?
I think starting your own firm in this business is very difficult and usually a mistake, because you only get one shot to start your own firm. And if you fail, it's hard to do it again. So I would suggest start out by reading as much as you possibly can of whatever, if you're interested in fundamental investing, as I said, I think Buffett's fantastic. If you're interested in other forms of investing, I think reading is the best thing to do. And then go to the best firm you can and learn working for people that have done this for a long time. This is the kind of job that you're always learning. I learn every day. And so for anyone to think that they can start their own firm without any experience, I think is the wrong risk reward.
When GameStop was going on, did you find your friends looking at you differently, or do they call you all the time and say, how are you doing? Or is it a different kind of way you were treated or not?
I mean, it happened in a period of 2 or 3 weeks, and no one was looking at me because I was holed up in my office at home. I was getting calls, more kind of people trying to inquire what's going on, how bad is it, but generally people kind of kept the distance, because it was, it was like a patient in, it was quite intense, and that period of time though was about 2 weeks. And then we closed out the positions, and that was also very, very painful. But we had to deal with it afterwards. But then we had another setback in 2022, and I kind of think of both of those as being, a period of time where, there were just a lot of challenges for our business in particular, and we had to make a lot of changes. So coming back from that was difficult. It required us being very introspective about what we did wrong, what we had to do to fix it, and then, pushing ahead and putting one foot in front of the other.
So one final question. So as you look back on your career, very impressive career, what are you most proud of having achieved so far? And if you could live your 25 years, let's say, over again, what would you do differently?
Yeah, I think, look, I am most proud of, for a long part of my career, there was very little adversity. I joined Viking, and it was, we had 15 years of just, obviously there are periods of time when things weren't as good, but there was no real adversity. After starting D1, about 3 or 4 years after starting D1, we had several periods of pretty intense adversity in the investment part of the business. And you brought up GameStop as being, one event, then 2022. And for me, dealing with that kind of adversity and coming back from it is what I'm most proud of, because that was the most challenging part of my career. I hadn't ever failed before in that kind of a way. And so learning from that, getting better, and coming back from that is what I'm most proud of, and probably was the most difficult thing I've had to do.
Is conducting exercises around the island, which Taiwan has described as irrational and provocative. Beijing says it's a stern warning against Taiwan independence and is necessary to protect China's sovereignty. Copper has barreled towards a record $13,000 a ton on the London Metal Exchange in a stunning end-of-year rally. The metal surged more than 6% when trading resumed after a two-day public holiday in the UK. Copper made big gains in December as investors bet that a rush to get imports to the US ahead of possible tariffs would force buyers elsewhere to pay more. Major storms on both U.S. coasts are disrupting travel during the busy post-holiday period. Airports in New York, Detroit, Philadelphia, and Boston have been hit with heavy snowfall, with more than 1,600 flights canceled across the country. In California, heavy rain, mudslides, and flooding have led to road closures, while the Great Lakes region is facing hazardous travel conditions due to accumulating ice. And a check on markets. We are open for trade in Europe, dipping a little bit. The Stock 600 down 0.1%, S&P futures down 0.3, but still coming off very close to all-time record highs for the S&P. Silver plunging today, down 5.6%, pulling back from record highs there too, and a massive run-up into today. And Brent 61.50 is where we're at, 1.6% firmer on the session. And let's take a deeper dive into defense stocks as well, because what was one of the outperforming sectors in Europe today is seeing a bit of profit-taking going through. Leonardo down almost 4%. Other names
for him into the family business. It just so happens that family business is a $20 billion investment firm, Davis Advisors.
Both my grandfather and father loved what they did, so that has a huge influence on a kid.
Chris's grandfather, Shelby Davis, began investing in insurance stocks in the 1940s. He turned an initial investment of $100,000 into more than $800 million by the time he left the business in the 1990s.
He talked to people about this concept of owner earnings, that, don't just look at the reported earnings, look through at what the business, if you owned the whole business, the value creation.
As the third generation Davis to run the firm, Chris still uses his grandfather's value investment approach.
That's sort of the core of what we do, making an assessment about what the value of the business is, generated by the earnings of the business, rather than by a prediction about changing psychology or being lucky.
Chris is militant about his discipline of investing, in which a company's fundamentals are paramount.
In a sense, we always say we're value investors because the valuation discipline is so central to us, but we want to own businesses that we can own for a decade or longer.
In addition to his father and grandfather, Chris had another value investor as a mentor, the late Charlie Munger.
Outside of my family, Charlie mattered more to me than any mentor that I could think of. He had made a huge difference, both as somebody that taught me a lot about investing and business, but also taught me a lot about life and wisdom.
Even has a bust of Munger in his office.
Charlie Munger once said, deferring gratification gives him so much gratification that he's not sure he's actually deferring it.
And that patience is still a hallmark of Chris's investing style.
I don't mind that patience to let the value of the business appear over time. I don't need it all at once. I don't need the big payoff.
Tell me what a value investor really is.
Well, I think value investing is a redundancy. I think all investing is value investing, and if it isn't, it's either gambling or speculating. And if it's gambling, that means you're putting up money for something that has a negative return expectation, but you feel lucky. All the rest does is about investing. You're putting up money with the expectation of getting more in the future, and that expectation is based on an assessment of the cash flows and the probability of that assessment being validated. So that's sort of the core of what we do, is in a sense, making an assessment about what the value of the business is, generated by the earnings of the business, rather than by a prediction about changing psychology or being lucky.
But most investors would not describe themselves probably as value investors, so you're saying most investors are really buying some future anticipated earnings that they hope will be there but may not be there today.
Yeah, or often people make a distinction between growth investors and value investors. And I would say that to us is a strange distinction, because a company that grows profitably is more valuable than one that doesn't grow. So growth is a component of value. What I would distinguish from is momentum investing. And maybe that's been a big characteristic of the market in the last 10 years. The idea that because something is going up, it's likely to continue going up. So I'm buying it without regard to the underlying value of the business, but with an idea that somehow this pattern will continue.
So today we have the Magnificent Seven, so-called. Do you regard stock purchases of those stocks as value investing or momentum investing?
Well, a little bit like when FANG was popular, or BRICS, and people come up with an acronym. They think the Magnificent Seven. But each one of those businesses has totally different business models, different prospects. They just happen to all be in favor at the moment. And I think the way to think about it is that when you get the valuations getting higher and higher and higher, you think about what would have to happen for you to earn a
Hello and welcome. This is the Michelle Hussein Show. I'm
speaking after the meeting. Trump is closer than ever.
You certainly ask interesting questions.
News when you want it with Bloomberg News Now. I'm Valerie Teitel.
And I'm Stephen Carroll.
A Russia-Ukraine peace deal is closer than ever, according to the U.S. president. Donald Trump made the pronouncement after hosting his Ukrainian counterpart, Vladimir Zelensky, for talks in Florida. Speaking after the meeting, Trump offered an upbeat assessment of a possible peace deal, but said it may take a few weeks to finalize.
I really believe we're probably, Mr. President, by far closer than ever before with both parties. We had some times when he was close and President Putin wasn't. Then when President Putin was close and he wasn't. You saw that in the White House. But I think they both want to see it happen.
Zelensky said the peace framework is 90% agreed and that U.S.-Ukraine security guarantees are 100% agreed, but that key issues relating to territory remain unresolved. The U.S. president says he is now aiming to convene a meeting with Zelensky and European leaders in January.
Global stocks have risen to yet another record high as a much-expected year-end rally took hold. The MSCI All-Country World Index is slightly higher at the start of European trading after climbing by 1.4% last week as the tech sector led the gains. The moves in the stock market claim as silver gyrated after smashing through $80 an ounce for the first time, powered by speculative trades and a persistent mismatch between supply and demand. It's currently trading just above $76 an ounce. Meanwhile, copper has also surged towards a record $13,000 a tonne on the London Metal Exchange in a stunning end-of-year rally fuelled by concerns over tighter supply. Gains have topped 15% in December as investors bet that a rush to get the metal to the US ahead of possible import tariffs will force buyers elsewhere to pay more.
In the UK, opposition parties are calling for British Egyptian democracy activist Alaa Abdel Fattah to be deported after it emerged that he had posted a social media message over a decade ago calling for Zionists to be killed. Fattah returned to the UK on Friday after being detained for 6 years in Egypt on charges of spreading false news. He was pardoned after years of lobbying by Conservative and Labour governments. Tory leader Kemi Badenoch and Reform UK's Nigel Farage have called for the Home Secretary to look into whether the Egyptian dissident can be stripped of his UK citizenship and deported. In a statement, Fattah apologized for the post, some of which he said had been completely twisted out of their meaning.
The former EU digital chief, hit with the US visa ban, is calling on the bloc to fight back. Thierry Breton says the European Union should resist American attempts to influence its regulation of social media. Speaking to France's TF1 television, Breton said counteraction is needed.
They cannot force us to change laws that we voted for democratically just to please who? To please the US social media platforms? No. We must stand up. We must resist.
That was the former EU digital chief Thierry Breton there speaking on French television. He was one of several people hit with visa bans by the Trump administration, which described their attempts to fight online hate speech as censorship aimed at American tech companies. Breton went on to say that he's received widespread political backing following the announcement.
Bank of America's CEO expects the Trump administration to de-escalate trade tensions next year after tariff-related shocks in 2025. Speaking to CBS News, Brian Moynihan said he expects an average of 15% tariffs for the broad base of countries with higher rates for those that won't commit to lowering non-tariff barriers.
You're starting to see the resolution of the discussions into 15% here, 17, different numbers. When you put China's a different question because of national security interests, the rare earth minerals, the magnets, batteries, just the AI, all that stuff. It's a very different case.
Bank of America's Brian Moynihan speaking to CBS's Face the Nation. In April, Trump announced a baseline 10% tariff rate on all U.S. imports. Bloomberg Economics estimate that the average U.S. tariff rate rose to 14% from 2% after Trump returned to the White House.
China has begun military drills around Taiwan following a US deal to sell the island weapons worth up to $11 billion. The operation underscores how sensitive the Taiwan question is to Beijing. According to a statement from the Chinese military, the exercises will include live fire drills and involve all major branches of the military. The manoeuvres follow the decision on Friday to unveil largely symbolic sanctions against 20 US defence companies and 10 executives.
That's news when you want it with Bloomberg News Now. I'm Valerie Teitel.
I'm Stephen Carroll, and this is Bloomberg.
Time highs as escalating geopolitical tensions boost the historic rally. Bloomberg's Tatiana Daria joins us now. Tatiana, let's end with the question we heard from Cameron Dawson earlier this week. I think the question is, how much can it continue? Can this rally continue?
Well, we have to ask ourselves if the macro conditions and sort of the catalysts that are playing into this rally will continue, and consensus think that they will. For example, the structural bid from central banks, that is expected to persist for years to come as they want to diversify away from dollar assets into gold. And if you look at geopolitical fractions, we keep seeing more of that, right? You have Venezuela, you keep an eye on that one because you cannot rule the risk of boots on the ground there. You see more militancy escalating now in Nigeria. So geopolitics is reviving that premium yet again. But beyond that, you also have concern about Fed independence going into next year. Let's not forget about the Supreme Court tariff decision, which could really upend bonds and rekindle that risk premium if fiscal concerns return, if the administration is forced to issue refunds. So a lot of the catalysts are in place. And if you look at the white metals, they've just recently been added to the critical minerals list, which opens the threat of tariffs going into next year. So these are sort of the big tailwinds that the market has. But of course, we cannot discount the risk of reacceleration in the economy with the Trump administration pushing that tax bill and those provisions kicking in into the next year.
And a reacceleration in the economy would be good news for the industrial metals like platinum, like silver, like copper as well. How are you thinking about the demand that's coming in from ETFs? Because that was a big driver, at least for gold.
Yeah, exactly. For gold, and now they've actually spiked for the rest. So what is being less appreciated or less talked about is that the ETF crowd has also piled in on this trade. And in gold's specific case, ETFs have actually bought more than central banks by some estimates. I only say that because we don't have full visibility into the central bank action. But if you look at the data that we have available, those ETF buyers have bought more than central banks. And they've returned to this market for the first time in the last 5 5 years. So if you look at the history, that's poised to continue. That's poised to offer another tailwind. But it also leaves this market at risk of just severe crashes when it all reverses, right? ETF buyers and just retail traders can get easily scared by an unwind in this trade. So if you play that trade, you have to be aware that there could be some outsized move on the downside, as we've already seen on Wednesday. I mean, Palladium crashed more than 4 standard deviations. That will stress your risk management.
This AI Expo is a great venue for you to meet important partners. Macau is located in a hub of technology, so it's the perfect bridge for the Asia continent. Macau can gather lots of talented people from in the Great Bay Area. Macau is investing in tech companies, and the regulation is very open. I'm very optimistic about the future of Macau in pushing forward of AI.
This is Balance of Power, live from Washington, D.C.
The president prepares for 2 special guests at Mar-a-Lago. Welcome to the Friday edition as Volodymyr Zelensky and Benjamin Netanyahu both make tracks to the Winter White House to talk plans for the new year. We're going to get the latest in just a moment from Bloomberg's Eric Martin. And we'll be joined by former Congresswoman Jane Harman as well, as the administration strikes targets in Nigeria on Christmas. We're just learning more about them. We'll be tracking a massive storm heading for New York that could play with your holiday travel plans. And we'll look ahead to the congressional agenda in the new year when we spend some time with Bloomberg's Mike Dorning. We start, though, with a quick look at the markets, which have given up most of their early gains today. We saw a nice pop at the open, but the S&P 500 is now down 5 points. The NASDAQ is down about 10 points. The Dow Industrial Average losing 90 points. Fractional losses for all 3 indexes, of course, after we saw record high levels going into Christmas. So not a big shock to see a little bit of a pullback here, despite the seasonality and the talk of a melt up here in the Santa Claus rally. Nice gains for NVIDIA, though, coming back to life a little bit today, up over 1%, more than $2 on news of the Grok licensing deal. And we're kind of mixed up in the retail space as we pick through receipts from holiday shopping. Target is actually moving higher, something we don't see a lot, up $2 right now. Walmart is up just a fraction. TJX is down a fraction. It's going to be a day like that with holiday light trading, but we do have a full session plan with the bell set for 4 p.m. Our top story today: they're coming to Mar-a-Lago. Volodymyr Zelensky and Benjamin Netanyahu, both planning meetings with Donald Trump Sunday and Monday, respectively. And that's where we start our coverage with Bloomberg's Eric Martin, who joins us now with his view on diplomacy, covering the State Department for us here in Washington, D.C. Eric, it's great to see you. We'll start with President Zelensky coming to Washington, noting that it would require, at least what we had heard until now, real progress to be made for him to get on an airplane to come to the United States, for President Trump to sit down with him. Has there been a breakthrough when it comes to peace in Ukraine?
Sorry, Jill, I was having some trouble hearing you there. Yes,
sweat.
We're expecting Zelensky to be coming to Mar-a-Lago, and this to be coming to the U.S. to meet with President Trump. And everyone is looking for the potential for some kind of a breakthrough here. We've seen now for a month. I realized it was a month ago that we saw Secretary Rubio and others go to Geneva to meet with Zelensky and meet with Ukrainian as well as European officials, and the meeting with Zelensky in Berlin for Steve Witkoff, the envoy, in recent weeks. And so everybody is still looking for whether we can get this elusive breakthrough and whether President Vladimir Putin, Russia, will accept. This has been the big skepticism, is that Russia, that Ukraine can ever agree to something that Putin would accept, and that whether Putin is truly interested in having an end to this war, or whether he wants things to continue and wants to continue this pursuit that we've seen throughout the last number of years of dominating Ukraine politically and increasing Russia's territorial control.
Zelensky's characterizing this 20-point peace plan as 90% ready. We know the Russians wanted to make changes. What's the remaining 10%?
Sure. Well, that's that's what everyone is trying to figure out in terms of certainly the issue of territory is something that people are expecting to remain for a potential leaders level meeting between President Zelensky, Trump, and Putin, or certainly seeing President Trump personally re-engaged in a personal and presential sense of meeting with his counterparts. So this certainly is a big step to be seeing him having a leaders level meeting with President Zelensky, and then of course the next thing to look for is whether there's similar interaction with Russia.
Enter Benjamin Netanyahu, set to be on his way as well to sit down with President Trump on Monday. Eric, this brings us to phase 2. What will we learn next week?
Well, Joe, what we saw last week in a press conference from Secretary Rubio was that really some of the things about the Board of Peace need to be worked out before we would see phase 2, which would include of course, the establishment of a permanent governance structure for Gaza, as well as disarmament of Hamas. And Secretary Rubio saying that we need to see this Board of Peace selected and that kind of agreed before we would see, for instance, the announcement of countries that would be participating in the International Stability Force and those that would be getting involved here to help to reach an agreement with Hamas about how they would disarm. We've always known this would be one of the hardest points of the overall 20-point plan of the Trump's peace plan for Gaza, and still waiting to see how the disarmament of Hamas is accomplished. Because, of course, now that the hostages are gone, Hamas sees their armament and their weapons as perhaps the last piece of leverage that they have. And so if the plan both calls for Hamas to not be involved in government and governance of Gaza going forward, and yet they're also giving up their weapons, that certainly is seen as as perhaps the ultimate maximum ask of Hamas in this process in terms of getting them to peaceably give up those weapons, rocket launchers, things they've used against Israel in the past.
Eric, thank you so much. Bloomberg's Eric Martin with the best backdrop on TV today. We appreciate it. I want to add the voice of Jane Harman, the former Democratic Congresswoman, who, of course, was ranking member on the Intelligence Committee. Jane, Merry Christmas. It's great to have you. Glad you could join us today. I want to just step back to this looming meeting with President Zelensky. Are we going to see a breakthrough this week, or is Lucy about to pull out the football again?
Put me down as a pessimist, Joe, and a super pessimist about the meetings with Israel. I'm a pessimist because I don't see that Putin will be satisfied with this deal. I give Zelensky enormous credit for working on it and for, it seems to me, so far as I can tell, ridding his top levels of government of corruption. I mean, that was a big blow to him. And I give the Ukrainian people even more credit for putting up with 4 years of war. They are Ukraine's strongest weapon, the Ukrainian heart. But what does Putin get out of this? Maybe, something like North Korea, South Korea with some kind of a policed border. He doesn't get much new territory. He certainly doesn't get an open door to take over Europe, which is something he might be after. And I don't see it. Mitch McConnell said that Putin has been playing Trump since January. I agree with Mitch McConnell. But the other point here is that Europe has now promised some additional aid. Imagine this, the defense bill that Congress passed, Congress did something, contains hundreds of millions of dollars of aid for Ukraine. So if Trump lets that go forward, please lets that go forward, and doesn't do any kind of stuff to our intelligence capacity that really helps Ukraine keep its, at least keep parity with Russia, this can go on longer, and maybe Russia will be worn down more. Let me talk about the Middle East for a minute, because I don't see anything going on there. Bibi Netanyahu just announced new Israeli housing in the West Bank. Now, that's not Gaza, but it is enormously provocative. He has said he will not recognize two states. And I thought a cornerstone of increased involvement or ongoing involvement by the Arab neighborhood was a path to two states. So even if there is some kind of a police force type thing, as your commentator pointed out, Hamas is not gone. Hamas won't want to be gone. And I just don't see how that gets anywhere. There, I'm a really super pessimist.
All right, so we've got two pessimistic cards here. You said that Putin's been playing President Trump since January. Is Netanyahu also playing President Trump?
I think so, yes. I think that Trump is tougher with him than former President Biden was ever able to be. And Trump has still kept his strong support from many in the pro-Israel community. But I think that Netanyahu is a hard-line conservative, would understate it, a hard-line, maybe reactionary Israeli, and hasn't budged here. He did get the good news is, and Trump helped with this enormously, got the prisoners back and got sadly the bodies of the deceased back. That's great. But I don't see Hamas willingly move out, and I don't see major efforts to improve the quality of the Palestinian leadership, such as it is. So I don't see how you put money into developing, I guess, what Trump's son-in-law wants to be some new beachfront property if there is no stability. I just don't see that moving. And one more thing, Joe. Let's remember that also in the Middle East is ISIS. We bombed ISIS, we the U.S., in Syria recently. Yeah. We're bombing ISIS now in Nigeria. But ISIS is not just a training group on the ground. ISIS is now all over the internet, radicalizing people like those in Australia and maybe some in the United States and Europe in the near future. So it seems to me, if I were President Trump, he hasn't called me lately, but if he did, I would say, please focus on this, Mr. President. It is the most imminent threat to U.S. security.
Well, you brought this up to us. Maybe it was 2 weeks ago, Jane Harman. And sure enough, the headlines on Christmas, U.S. forces striking ISIS targets in northwestern Nigeria. The president wrote on Truth Social, and he had a lot to say on Christmas on social media. Merry Christmas to all, including the dead terrorists, of which there will be many more if their slaughter of Christians continues. There have been a lot of questions about whether this slaughter of Christians is in fact taking place in countries like Nigeria or even South Africa, which the president had first brought forth in a meeting in the Oval Office with the Prime Minister, the president of South Africa. We've not received details on this. The military conducted multiple strikes, according to the president, but we haven't heard anything else, Jane. What are we getting into in Nigeria?
Well, I don't think we know. The government has pushed back and said there is no slaughter of Christians. I'm sure some Christians are being killed. Similarly, in South Africa, which is not to praise those governments, but it is to say that this seems to be another campaign pledge, some kind of pro-Christian white supremacy agenda, although that would be tricky in Africa. Why don't we have a strategy for our foreign policy? Why don't we focus on the real threats, the imminent threats to the United States? We've degraded a lot of our intelligence community assets in the United States, and that worries me enormously. And recent articles just talked about how Russia has been able to degrade and invade the cyber protections in Europe. So all of that leads me to believe that people are going to be radicalized on the web. ISIS has a very sophisticated use now of technology, and this is where we need to go, and this is what we need to beef up. And so these random actions around the globe, take Venezuela, if I could just rant on that for a second, nobody is defending Maduro. But nobody was defending the bad guy next door in Honduras either. He was convicted in U.S. courts, and he has now been pardoned. And the new person that Trump supported has just been elected in Honduras. Are we now doing regime change in South America? Why?
Well, let me ask you. I've only got 1 minute left, Jane, and I'm loath to cut you off. If we're striking targets on the ground in Nigeria, will Venezuela be next?
Who knows? I mean, I don't know. Trump has said he might. The sad part, let me just, in my 12 seconds, where is Congress? Where is Congress? Congress just last week defeated 2 resolutions to assert itself on party line votes. Go figure. Why did Congress come back from its long closed for business vacation? Or that's not fair, but closed for business action. Why did it come back?
Longest shutdown in history. Well, they've taken a couple swings at the ball with War Powers Acts, and they haven't gone anywhere yet, Jane. I'm delighted to talk to you. Happy New Year. Let's get back together in 2026 and see where we are. I'm Joe Matthew in Washington. This is Balance of Power, Boxing Day edition. Stay with us on Bloomberg TV and radio. It's Balance of Power on Bloomberg TV and radio, Boxing Day edition, as we dig through receipts from the shopping mall and the websites, of course. And it does seem like we are, in fact, spending even more time at the shopping mall or in the store. Bricks and mortar doing pretty well, according to some of the numbers that we saw from Visa and MasterCard coming into the holiday. Visa had total U.S. retail spending up 4.2%, beginning of November to Christmas period, a little bit below the forecasts, but found physical outlets remain dominant, accounting for more than 73% of transactions compared to 27% online. Maybe it's all the procrastinators like me who are out there on Christmas Eve running through aisles to see what was left on shelves. This, of course, all plays into politics, with the President of the United States preparing Americans to do with less in a period of time where prices remain stubbornly high. He said just recently in his speech on affordability that you may not need 37 pencils or 50-something dolls this Christmas. We may need to go with less, even as in some cases Democrats speak to the issue of abundance. How this all comes together politically for the White House is something that we talk about with Laura Davison, Bloomberg's Washington Deputy Bureau Chief, who's propping up the operation today. It's great to see you, of course, knowing that these were actually pretty decent numbers coming out of the holiday, knowing that we haven't seen an explosion in inflation based on the tariff regime, just kind of sticky prices. How do we think about the economy going into the new year and what the president predicts will be a boom?
Well, this is certainly what, Trump is out there talking about, saying, look, there was all this doom and gloom that inflation would be running wild because of the tariffs, and that hasn't, at least in the data yet, really come to pass. But what we're hearing from importers, what we're hearing from companies is, one, because of all the uncertainty with the tariffs. They were on, they were off, maybe they'll be off again. We'll hear what the Supreme Court says. In addition to just that these things take time to kind of work their way through the system, that retailers were really hesitant to raise prices. But after, we get some sort of clarity about whether these tariffs are here to stay, retailers are suddenly going to have to start incorporating that into their supply chain, into their pricing mechanisms. And that could mean these are hitting right as people are starting to vote in the primaries and the general election next year for the midterms. What
are we thinking about this? Early January, the Supreme Court? Do we know? I mean, I know you're talking to our legal team on a regular basis, and they could frankly pop up at any moment. But is that the best bet right now, that we're a couple of weeks out from maybe the most important decision of this second term?
Couple of weeks, if not, days. Stuff probably isn't going to come over this holiday week into New Year's next year, but really beyond that, it's anyone's guess. And this is, the administration is also watching closely, because they've said, look, if the Supreme Court does strike these down, we're going to pop back up with some other legal framework, legal mechanism for imposing these. But it's going to be really chaotic there for a couple weeks, if not months, as the administration works this out, and it becomes, again, sort of a legal whack-a-mole game.
Right, and then a question of refunds and all the rest that might follow. Laura, thank you so much, which sets us up perfectly for a conversation with the boss at Macy's. Tony Spring, the CEO, sat down with Romaine Bostick in advance of the holiday to talk about a lot of the trends, including store closures, the omni-channel shopping experience, and the company's own efforts to improve itself in a difficult environment. Let's listen.
It's not about improving the customer experience. So we've had record customer service scores. That's our net promoter score. Would people recommend Macy's to a friend? And we're seeing scores we've never thought possible at the brand. And that was a real focus of mine. We've improved the quality of the assortments. I thought there was way too much redundancy, way too many of the same things. And I thought the breadth of what we offer as a department store needed to improve. We need to go good, better, best, contemporary to classic, in a range of brands, things as we've talked about that are convenient, that you've heard of, that you count on, Staples, Levi's, Nike. And then at the same time, we've got to be there introducing new things that you haven't heard of, that are becoming more popular, because people are looking for that combination in a destination. We also wanted to make sure that our team was working together. So I'm a big believer that you need strategy, you need culture, you need leadership, and you need execution. We're now at the point where those four elements are coming together, and we're delivering a better experience for the consumer. But you can't kind of have one without the other. A great culture without a great business without a great culture. The combination of elements is what I sought out to do when I kind of came into the role. And I do think that, patience and determination go together. You have to have the patience to kind of lay out what you want to accomplish. You have to accept the fact that some things just don't happen because you snap your fingers. And then you have to have the determination, the ambition to kind of go after what you think is the right thing to do for the business.
A big part of your strategy, this bold new chapter, is also to shrink the footprint of Macy's. At its peak, you guys had, 700 to 800 stores. You're less than, 400 now, around 400
Around
or so
400
now.
today.
And the plan is to go down to roughly about 350. You've done a big remodel of some of the existing stores already, 125. How much further does that go in 2026?
We'll add more stores in 26, and we'll close some more stores in 26. And I think, as you described, it is working on both sides of the equation. Closing stores is not alone a strategy. Reimagining stores without dealing with stores that are past their prime is not complete enough of a strategy. So we want to make sure that we're doing both things. And of course, it's supported by a healthier digital business, one that is both a place of transaction and a place of discovery. We want to build relationships with the consumer. That means we have to be able to provide a better experience where they live. We think of the digital business as a channel at times. And I'm like, no, the digital business is actually a geography. The people who shop digitally in New York shop in their stores in New York, and they want to see a great experience, digitally, physically, and in between.
A little peek behind the retail curtain with Tony Spring, the CEO at Macy's, in conversation with Romaine Bostick. We've been watching Wall Street today. Retail stocks have been a bit mixed up here with not exactly a blow-the-doors-out holiday shopping season, and of course a market that was already near all-time highs as we walked into today's session. We check in on the Friday trade, the Boxing Day market, with Vonnie Quinn, Bloomberg Markets reporter, who's with us in New York. Vonnie, what are you looking at?
Well, Joe, as you can imagine, trading awfully muted today. I mean, it's surprising that we're even looking at 50% of the 30-day average for trading, but very quiet. And you could have very idiosyncratic moves tied to certain stocks if there is some news. But as you said, we're not seeing too much moves. If you look at the S&P 500, we're down about 0.1%. The Nasdaq 100 down about 0.1%. So fractional moves. That said, the S&P 500 up 18% this year, and the Nasdaq 100 is up more than 22%. Most of that, or at least a lot of that, can be attributed to the Mag 7. As a group, they're up 27% year to date. And there are a few more trading days left in the year. Let's take a look at yields, because yields-wise, the 10-year has been in a range between maybe 410 and 420 all month. We did have a strong auction Wednesday, which shows there is appetite out there for US Treasuries. But obviously, the biggest potential catalyst next week, probably the update on the ADP employment change, which comes on Tuesday. Also on Tuesday, though, we get the FOMC minutes, and while they may not be market moving, it will be interesting to see just what the dissent was like behind closed doors, because we have to wait until January 29th to get another Fed meeting. And we will have a fresh non-farm payrolls report before then. We'll get the December payrolls report January 9th. Let's take a look at metals, because they're just up and away. And you can blame everything and anything for this. Industrial uses for silver, platinum, palladium, stockpiling ahead of more tariffs potentially on aluminum. Gold could be a safe haven. But off the back of that, miners are doing pretty well. So Freeport-McMoran, one of the better performers today. And then currencies-wise, we're seeing some interesting movements too. The dollar is stronger today, up about 0.1%, weaker sterling and euro. But the real one to watch is the yen, because that is 0.5% stronger today. Those yen bears are really, really in the driving seat.
A market that's up about 18% this year, with the S&P 500 putting up a record close after record close, despite all the worries coming into 2025 about tariffs. And of course, I realize that could move a bit when we get into 2026. But this turned out to be a pretty decent year, AI trade aside.
Yeah, absolutely. Now, remember, those fragilities or those question marks are still hanging over the market. So Micron reported earlier this month and just put everybody back in a good mood about the AI trade. But if you remember, Oracle had reported a couple of weeks before that, and that was a big zigzag in terms of the trading. So it does feel like there are still big questions over whether valuations are very, very stretched here. We'll know coming into the new year just how much to expect more of that narrative. NVIDIA, though, higher today on a licensing deal with a chip startup, Grok, so the deals continue. And speaking of deals, ServiceNow up today as well. It made a big deal, a $12 billion deal, has investors excited about the amount of deals it's doing in terms of growth. And that Santa Claus rally has until January 5th, Joe, so we do have some time left.
I love it. Covering the waterfront with Vonnie Quinn. It's great to spend some time with you, Vonnie. Keep your shovel outside the back door. We've got winter storm warning. It looks like snow to begin around the New York area by 4 o'clock or so. We'll update the storm coming up next.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
It's Balance of Power on Bloomberg TV and radio. Thanks for joining us as we keep a live view on Capitol Hill now, an empty building for the most part. But there is a big to-do list there waiting for lawmakers when they return next month. Of course, having left the matter of Obamacare subsidies unresolved, not to mention funding the government at least beyond the end of January. This is something that we're watching closely. Two parallel items here: funding the government and also, by the way, dealing with the Epstein files, because the health care subsidies may not be solved as we work our way through the balance of the year. There will be a vote that was brought by a discharge petition, but outside of that, it's unclear that there will be a path forward. Something that we want to spend some time with Bloomberg's Mike Dorning talking about from our Capital Influence team. Mike, it's great to have you. I hope you had a great holiday. And as we get back to things in the new year, there are a lot of questions about whether we will be heading for another government shutdown. Before we get that far, though, we do have the matter of Obamacare subsidies to be addressed, as well as the Epstein files. Chuck Schumer is talking about putting up legislation here that would force the disclosure of more files here. And Tom Massey and Ro Khanna in the House want to hold the Attorney General in inherent contempt. Will either of these efforts go anywhere?
Well, I think it'll depend on what the talking about Obamacare, what the Trump administration does on the Epstein files. You'll hear this banging on the administration on the Epstein files, but they're still in the process of releasing them. Yes, they've missed the deadline. Yes, that does break the law. But if the files do come out, or enough of them come out to take some of the steam out of this, then there won't be enough Republicans that are willing to defy the president. But it's kind of a dynamic situation there. And the way to bleed some of the pressure out is just to release enough files to peel off, the rank and file Republicans from this movement. Yeah. On the health care, they forced the vote. That was going to be an important political vote in the House. And you will probably see the Obamacare subsidy extension pass the House as a way for some of the Republicans who are at risk of losing their elections to sort of say, we want these subsidies extended. But then that goes into the Senate, and the leadership of the Republican Party in both the House and the Senate don't want these subsidies extended. So they'll work against it unless President Trump weighs in. He could obviously tip the balance if they're feeling enough pressure to extend these subsidies.
How closely are we connecting Obamacare subsidies and a potential government shutdown, or should we not be thinking about it like that? Nobody wants to relive this whole experience after the longest shutdown in history. And Chuck Schumer has indicated that he's looking to work with John Thune. Mike, there is the risk of sleepwalking into a shutdown. How should we be thinking about this? You've
absolutely got it. The party leadership on the Democratic side does not want another shutdown, or if possible, if they have to have one as short as possible. They made their point in the last shutdown, which broke a record, and they weren't able to get the Republicans to cave on the Obamacare subsidies there. There is a dynamic within the Democratic Party, though, that there are a lot of Democrats on the younger side, on the more progressive side, that don't feel like the leadership has pressed this point hard enough and would like to see them pressing other points harder. So even though the leadership is trying to stay out of another shutdown, you're right. There is a risk that we could sleepwalk into it as the Republicans kind of refuse to go along with Obamacare subsidy extensions and things like that.
Well, this could be a fun year, I'll tell you.
Yeah, I mean,
you think about what could be produced as opposed to
high, but
yeah, okay, that's good to hear until it is, right? Well, you think about what could be produced as opposed to what could be avoided here. Mike, will we get new crypto market framework legislation? Is there anything new that lawmakers can craft in 2026?
The crypto market legislation is definitely something that's quite likely. You've got you've got Democrats and Republicans who are committee leadership that are joined on that. So you've got a fair number of Democrats that are interested in doing something on that in the Senate. You've got a lot of money in the crypto industry. They have, I think, over $250 million already in their campaign war chest to influence the upcoming congressional elections. So there's a lot of reasons to do this, and it's more likely than not that they will succeed in some way. That said, there is some opposition, both from the banking industry, they want concessions, and also from more progressive, sort of consumer-oriented Democrats that want more protections for consumers and investors.
Got it. Mike, thank you. It's great to have you with us. We're going to have a lot to chew on in the new year with Mike Dorning from our Capital Influence team here in Washington. He's got his eyes on Capitol Hill for us every day. We've got our eyes on the weather as well right now, not here in D.C. We're actually going to dodge the bullet. But if you're in New York, New Jersey, or Connecticut, it's coming. A couple hours from now, as a matter of fact, with a winter storm warning in effect and snow that's supposed to begin right around 4 p.m. Eastern. It looks so calm right now on Bloomberg TV as we check out the Manhattan skyline. Josh Saul has this covered for us from the weather department here at Bloomberg and is with us now. Josh, it's good to see you. What kind of travel interruption should we be ready for? I'm seeing reports of 8 inches coming. Is that what you expect?
Could be up to 9 inches, which will be as much as we've seen in this area since 2022 when Central Park got 9 inches. When Central Park got about 7.5 inches. What makes it especially dangerous this year, obviously one of the busiest travel periods of the entire year. It's going to stay real cold overnight, which means that all that snow and ice is not going to melt. It's going to be there on the roads, making travel more difficult for drivers. And another issue that came up in our reporting is that flights have been so bad. A lot of people more people than before have chosen to drive this year for their holiday plans. AAA says about 110 Americans on the road around this period. So the roads are crowded, a lot of people driving instead of flying. So this intense amount of snow and ice potentially making post-Christmas travel really dangerous.
Man, yeah, 9 inches in New York. I mean, you're actually, that's a shovelable snow, as they say. Are the airports ready?
Yeah, get out the sleds if you have kids. The airports are ready, but already a lot of cancellations. We've got about 1,400 cancellations across the U.S. A good chunk of those are in New York City's big 3 airports, and we're seeing cancellations, of course, even before the bad weather starts. You have to think about travel and flights that are starting long ways away, 19 hours from Singapore. Those flights are canceled so that they're not landing or arriving in New York City in the middle of a snowstorm that would make navigation difficult.
Yeah, wow. Well, I guess we'll have the weekend to clean up, but a lot of folks, of course, with holiday travel are going to be dealing with some potential interruptions here. Josh, thank you. It's great to have you with us here on Balance of Power. Josh Saul at World Headquarters in New York. We'll try to get back to Josh in our second hour as we count down to the first flakes falling. It does remind us the season that we're in here and, of course, the importance of travel when it comes to the economy. We knew that there would be a lot of folks out and about this year, and with the benefit of lower oil and gas prices, potentially a bit of a stimulant for the economy. And it's where we turn with our political panel. Joining us right now, Bloomberg Politics contributor Rick Davis, fresh off the holiday, Republican strategist and partner at Stone Court Capital. Doug Farrar is with us as well, former director, the Office of Public Affairs Democratic strategist with us here, having come from the FTC. It's great to see you both. Rick, the economy is hard to ignore coming off a holiday like we're just seeing now. I'm picking through some of the numbers. It looks like retail sales were up anywhere from high 3% to low 4%. And prices were pretty, while stubborn, consistent through the holiday shopping season. What kind of a look is this going to be as we enter the new year and the administration predicting a boom in the economy in 2026?
Yeah, some of the data is really head snapping. I mean, when you look at consumer sentiment, even this month, you haven't seen much worse consumer sentiment in a decade. It's sometimes all-time lows in the last couple of months and consistently borne in. But then you see the record stock market, the red-hot GDP numbers, decent sales figures for the holiday, and I think it's going to be a roller coaster. Even the Fed seems somewhat, head scratching when it comes to how do you balance the sort of persistent inflation with a worsening job market. So I think this is going to be a very challenging year. I hope we set records on the economy. Nothing's better for the federal deficit than a big growth rate. I'm all for it, but let's not put the goose before the gander.
Well, fair enough, Rick. And, I guess we do have some reasons to be optimistic here, Doug. We didn't see the doom and gloom scenarios that so many economists predicted. And we've got a market here. I realize we're down a little bit today, but basically at an all-time high to end 2026. How do you rationalize those two?
Well, I think it's mostly being driven by circular AI investment. And when I think about what the president promised, he said he wanted to lower costs. He wanted to increase manufacturing jobs. We're down 49,000 jobs. Tariffs are really having a huge impact on consumers, especially those outside of, the top 5 or 1% of Americans. And really what's holding up the economy is this sort of unbridled AI investment that the president is stoking through his own policies. And obviously AI is great and an incredibly innovative tool, but one wonders how much that's hiding some softness in the economy.
Yeah, well, I'll tell you, circular investing, you're going to get some attention when you use that phrase here on Bloomberg. Doug, is this AI spend looking like something less than Wall Street is hoping it is to you? What does that mean for next year?
Well, I mean, I think these companies are sort of sending money back and forth and describing, future growth and revenues that is unclear where they're going to materialize from. I also think you've seen AI start to become more unpopular with voters, and not just with voters who might be driving trucks or doing jobs that are immediately threatened, but also white collar workers who are looking up and thinking my job may be threatened by artificial intelligence. At the same time, you've seen adoption of AI programs by businesses be pretty ineffective. According to a study that was issued by MIT, some 95% haven't increased productivity all that much. So I think we're making a huge bet, both the markets and the government, frankly, on the success of AI. And, the government's already taking steps to make sure that bet won't fail, or if it does, that there'll be a bailout. Given all the money that they're throwing at it and the regulatory support. So it's a little concerning that we're so overcommitted, or maybe not overcommitted, but so committed to this particular sector.
Rick, I've just got 30 seconds in this block. Will the Supreme Court ruling on tariffs be the most important thing for the markets next year?
I think it'll be really influential because obviously what happens if they rule against the president's use of executive powers to implement these tariffs, and then how do they back that out? There are hundreds of billions of dollars at stake of government spending that has to go back to consumers. So I do think that's one of the critical aspects of this. But as we've seen, the Supreme Court.
Rick and Doug will stay with us. We'll have a lot more of our panel straight ahead on Bloomberg.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
Watching Wall Street here on Balance of Power in what is the final trading session of the weekend. We've only got a handful more to get our way through the year here. We had a nice pop in the early going, but we've managed to give up most of our gains here with the broad market turning south. The S&P 500 and the NASDAQ down fractionally each, down about 7 points. Vonnie Quinn is watching the markets for us here from world headquarters in New York. Vonnie, I guess we shouldn't read too much into this on such a light volume trading day, knowing that the markets went into Christmas at all-time highs.
Literally 1 and 2 trades have disappeared, Joe. We're at about 50% of trading volume for the last 30 days. That's actually even more than you might have expected on a day like today, particularly with a holiday on a Thursday. That said, we're trading close to records, and nobody is that disappointed, I think, because there were so many question marks over whether there was a bubble in AI, whether the circular financing would pose a problem, whether these SPVs that some of these companies are using to hold debt off balance sheets, whether that would become a problem. All those worries have been set aside. So the S&P 500, it might be down 0.1% right now, but we are trading at close to records, and we're up 18% on the year on that index. As for the NASDAQ 100, we're up more than 22% on that index, even if today it is flat. Plenty happening under the surface as well. Let's look at yields, because those are potentially a mover next year as well. Right now, we're range bound between 410 and 420 on the 10-year. We are waiting on fresh non-farm payrolls data, though. That comes January 9th. That's going to be the next big catalyst, although we do get an ADP employment change report next Tuesday. And we also get the Fed minutes next Tuesday, which will be interesting just in terms of personality, consensus, how consensus can be drawn, how many dissents and how strong the dissents were. We'll get more details into all of that. And of course, early in the new year, we'll get a name for the new Fed chair nominee, and that may have an impact on this market as well. But let's take a look at metals, because that's a fascinating story. Here we have gold, silver and platinum all at records. I mean, they've just been going up all year long. Silver has been going up almost twice as much as gold. It's up 150% year to date. Gold, for its part, up 70%. Now, you could credit escalating geopolitical tensions, but we have oil lower today. Surprise, surprise, down 1.9% on the potential for perhaps some kind of Ukraine détente. So back to those metals, you can basically credit everything from central bank buying for gold to industrial uses and stockpiling ahead of tariffs for some of the other metals, and just general speculation as well, according to a lot of traders. And then if we take a look at the dollar, we have seen dollar weakness. Today we're slightly stronger. Some sterling weakness, giving up some of that strength we've seen over the last few days. Euro as well, but particularly the yen. It's another 0.5% weaker today. We've had 2 rounds of verbal intervention on the yen, don't forget. So the Bank of Japan is going to be watching that very, very closely. The Bank of Japan having turned hawkish and just really might be in trouble into the new year if bears continue to keep hold over the yen.
Pretty amazing. You talk about the metals here, to see the gold and Bitcoin charts put over each other here. You've got gold up another 1.5% today. We're above $4,500 an ounce. And when you think what we saw with Bitcoin going into the president arriving at the White House, it's down about 530 right now, trading just above $87,000 for a token. It's just role reversal with these two, isn't it?
Exactly. And in fact, Bitcoin down on the year unusually, although we are at higher levels than we were before, as you say, the president went into office. I think for Bitcoin, some of the catalysts might come next year with maybe, more legislation around the Genius Act. Will stable coins get more regulated and so on. But also the fact that Bitcoin had been trading as a risk asset, but now it's sort of dropped off as a risk asset, whereas gold had always been trading as a safe haven. It is really quite amazing how the two have diverged, having really moved together for so long, as you say.
Isn't that the truth, Vonnie? Thank you so much. We'll get back with Vonnie Quinn a little bit later on here on Balance of Power as we watch Wall Street on a quiet day here, the day after Christmas, and only a few sessions left next week. So the numbers that Vonnie was talking about are going to likely be pretty close to where we end the year, with a NASDAQ up about 22% and S&P 500 up about 18%. Little movement today as we watch here. We want to bring the panel back in following a pretty wild 24-hour period for Donald Trump on social media. He was very busy there at Mar-a-Lago with a number of posts. In fact, too many that I could even count. I mean, it was dozens. Rick Davis and Doug Fair are back with us. Doug, I don't know if you managed to read some of these, but they included several Christmas messages. And coming from Donald Trump, I guess they might not be that much of a surprise, but just sometimes you need to just kind of reset your clock here and remind yourself that this is the President of the United States. In this case, Merry Christmas to all, including the many sleazebags who loved Jeffrey Epstein. This is a long post. Gave him bundles of money, went to his island, attended his parties, and thought he was the greatest guy on earth, only to drop him like a dog when things got too hot, falsely claiming they had nothing to do with him, didn't know him, said he was a disgusting person, and then blame, of course, President Donald J. Trump, who actually was the only one who did drop Epstein. Doug, I read all the way to the bottom here, and it says, enjoy what may be your last Merry Christmas, President Donald J. Trump. What does that mean? Granted, the spirit of this message is sarcastic, but to predict your last Merry Christmas is pretty heavy coming from the commander-in-chief, isn't it? Is he talking to Democrats?
You know, I hesitate to want to get in the head of the president. I did, unfortunately, read a lot of his Truth Social posts over this Christmas period. You know, I thought we were saying Merry Christmas again. That was sort of one of his campaign promises. Now it's our last Merry Christmas. I don't know who he's threatening with those messages. But what I will say, zooming out, is, you know, every accusation is a confession. And across the millions of documents that are going to be released by the Department of Justice and already have been, clearly the president had a very, very close personal relationship with Jeffrey Epstein that included sort of friendly poems that they traded back and forth and other sort of inside jokes. And so I'll be interested to see what we find out from these document releases. But certainly the president may be trying to soften the ground for some bad news that may come out of that demonstrates his relationship with Jeffrey Epstein in ways that are both politically kind of questionable and also morally ambiguous. So I'll be watching to see.
There's another Christmas message. This one came earlier in the day. Merry Christmas to all, including the radical left scum that is doing everything possible to destroy our country, but are failing badly. He says we no longer have open borders, men and women's sports, transgender for everyone, or weak law enforcement. What we do have is a record stock market and 401ks. Rick Davis is back with us. Rick, is this president moving the line, actually changing what's considered acceptable decorum for the commander-in-chief, or does all of this belong to Donald J. Trump and will eventually go away with Donald J. Trump?
Well, I don't think you can look at it in a vacuum. There's no question that his first term entered in a new era of dialogue for an American president. Kind of took the wheels off, and we saw some of that reoccur during the Biden administration, not to the extent or the degree of which it did. But, you know, I think he's really accelerated it the second term. And I think a lot of these things we are seeing, especially during this holiday period, is a real shot to his base. You know, there's no question that he had a bad last quarter of 2025, and especially as it relates to Republicans who are peeling off of him because of his stewardship of the economy or entanglement into these foreign military adventures. And so my guess is everyone got together at Mar-a-Lago. You know, they brought in the Christmas cheer and reminded him that without his base, you know, he can't get anything done in Washington, and that he better get on it. So I see this nothing more than a sort of, you know, crass political effort to try and, you know, solidify his base. And hopefully that's all it is, because we'd hate to see this kind of conduct or rhetoric continue on, you know, year after year.
Yeah, pretty amazing. It was more than 100 posts on Truth Social, Doug, in the early hours of Christmas, targeting former presidents Joe Biden and Barack Obama, Marjorie Taylor Greene, Ilhan Omar, Senator Mark Kelly, Somalis in Minnesota, Michigan's Secretary of State, Democrats in California, and rhinos by name Tom Massey. We've only got a minute left. Doug, we talk about what might come after Donald Trump, and in fact, it seems to be J.D. Vance based on some of the endorsements that we've heard about recently. Does MAGA continue with this kind of language in another politician, or does this belong to Donald Trump?
You know, what President Trump's always been effective at doing is rhetorically keeping MAGA on sides. And you can see that excellent point that Rick made, that they are really leaning into throwing red meat to the base. But it's sort of like that.
This in just a moment from Bloomberg's Laura Davison with insights from former ambassador to Ukraine, John Herbst. We'll check the markets a little bit later on with Vonnie Quinn as things turn south on us today. We'll have analysis from our political panel, Rick Davis and Doug Farrer. are with us for the hour. As far as the markets go, we have given up an early lead. No major losses, but the S&P 500 is down about 5 points in the remaining hours of trading, tipping slightly lower. The NASDAQ is down 2, and the Dow Industrial Average is off about 92 points. Bitcoin slightly lower as well, down about $600, still above $87,000 a token, and gold is pushing ever higher, up $65 now. $45.45 an ounce, and a record-setting run for gold. We are seeing some bid under NVIDIA as well. It's up a little more than 1%, $2.50 on this new licensing deal with Grok, and we're mixed up in the retail space following news on holiday shopping. Visa says total U.S. retail sales up a little more than 4%. MasterCard in the high threes, 3.9%. And we'll have further details on how holiday spending panned out in the days ahead, of course, that could help to fulfill a little bit more of a Santa Claus rally before this year is over. We'll find out together. As we keep the beat on geopolitics and some important developments over the Christmas holiday that you might just now be hearing about, including U.S. strikes against Nigeria, striking ISIS targets in Nigeria. And now, of course, this potential meeting that sounds like, well, I should say potential breakthrough. It sounds like a real meeting. President Zelensky will be at Mar-a-Lago on Sunday to meet with President Trump. And we cover all of this with Laura Davison, Bloomberg Washington Deputy Bureau Chief, who's with us now in our Washington Bureau. Laura, let's start with Nigeria and what was behind this. The president, the administration has been talking about attacks against Christians in Nigeria. Is there any evidence that this has been an issue, and who did we target?
So the targets were these Islamic State sites in Nigeria, in the northern part of the country. Trump, for several weeks and really months now, has been talking about persecution of Christians, attacks on Christians in the country, and that Islamic State is particularly targeting them. The Nigerian government has pushed back strongly on the notion that Christians in particular are being persecuted, saying this is, that yes, terrorism is a problem, but that both Muslims and Christians are being affected here. And the Nigerian government actually worked in concert with the U.S. government in these strikes and are working for more strikes to come, as we heard from the Defense Secretary Pete Hegseth. Okay, so ISIS then remains a problem for Nigeria, but the attacks on Christians is where they draw the line. Is that fair to say? Yes, yes. So they're united in sort of the actions, the military actions that are being taken, but the motivation behind them is where the U.S. and Nigerians are singing from different songbooks. Yeah, multiple strikes. The president said we don't have a readout on exactly what was targeted, how many aircraft were involved, et cetera, from the Pentagon? Correct. We have very few details on exactly what the sites are, that, who may have been killed, the number of sites, and, what weapons were used, et cetera. So that's all very cloudy. Really, all we have is essentially a tweet, a social media post from the president saying this happened. Really something. I don't know what we're going to hear about Ukraine this weekend, Laura, but it's pretty important. It looks like Volodymyr Zelensky will be in Florida to sit down with President Trump at Mar-a-Lago. Trump has said, unless there's an agreement at hand, unless there's a deal here, he has no reason to meet with Zelensky. Does that mean we're on the verge of a breakthrough? It would certainly suggest that there's some forward momentum. What we heard from even Zelensky, a couple days ago was that he was not optimistic for a deal. He said it didn't sound like the Russians wanted to negotiate, and that there had been all of these, these talks between U.S. officials and Ukrainian officials and U.S. officials and Russian officials, and just it seemed like we're at a stalemate. There was no progress being made. Something must have changed over the past couple days, and now Zelensky's headed to the U.S. So it's not clear from the Russian side that they are really, open to negotiating, open to this deal. They are still wanting some of these land territories that, that Ukraine still controls. Amazing stuff, Laura. Thank you very much. Laura Davison will likely be editing stories about that visit come the end of the weekend, so it's something that we'll keep a close eye on. And we want to add the voice of John Herbst, the former U.S. ambassador to Ukraine and Uzbekistan, is with us right now on Bloomberg TV and radio. Mr. Ambassador, it's great to see you. Will President Zelensky be walking into the Lion's Den here in Mar-a-Lago, or a room where he could, in fact, strike a peace deal?
Joe, thanks for having me on. It does seem that there has been substantial progress in negotiations between the United States and Ukraine, which is not surprising because Zelensky has said yes to 5 or 6 Trump proposals for ending the fighting, whereas Putin has rejected every single one of those. What's not clear is what the Russians are up to.
Well, that's been a big question all along. And as Mitch McConnell has said not that long ago, Putin's been playing President Trump since January. Do you see that being the case, or could he, in fact, be about to turn position on this as well?
We've seen Trump in the nearly 11 months, actually it is over 11 months now, since he's returned to the White House, take periods where he's been very tough on Zelensky, and then periods when he's been moderately tough, only moderately tough on Putin. And since he put the sanctions on Rosneft and Lukoil, which was sometime in middle of October, he began to put pressure on Zelensky, and that's continued. But Zelensky, while conceding some things, has also stood tough on others. And what seems to have happened in the last few days is Zelensky's agreement to perhaps hand over, not to the Russians, but to a demilitarized economic zone, areas in Western Donbass which are strategically valuable, which the Russian army has been unable to take. But he's insisted, and this is new, and the U.S. seems to have agreed, that Russia must pull back equally from areas that it controls in Donbass. And what Zelensky has insisted on, it seems that the U.S. has agreed, that there has to be serious military forces. So we're not talking about peacekeepers from the global south in that area to prevent future Russian aggression. And what Trump seems to have conceded on too, which Zelensky has long sought, are clear guarantees, security guarantees from the United States ratified by the Senate. And now, according to what's in the media, which we can't be certain is accurate, but if it is accurate, it's interesting, the U.S. side has seemed to agree. So we've seen some serious movement by both Ukraine and the United States in the past week or so. Again, what we have not seen is any indication of Moscow's willingness to compromise.
What you mentioned what could happen in the Donbass, and I realize that could take on a couple of different forms. Is a demilitarized zone off the table at this point?
Well, it seems that the demilitarized zone is very much on the table. But the Russians had insisted, and still have not changed its position. Ukraine gives to them territory the Russian army has been unable to take, and the Russians give nothing back in return in Donbass. What Zelensky has insisted, and apparently the United States has agreed, is if Ukrainian forces are moving back in Western Donbass, the Russian forces have to move back at least a comparable amount, and as to keep that as a demilitarized territory. So that's a serious concession. And again, if the U.S. has agreed there have to be troops, serious troops, in that area, in that demilitarized zone, international troops, to prevent further Russian aggression, that would seem to be another element of compromise from Team Trump.
All right. So you sit down at Mar-a-Lago and talk peace. Does that mean that Vladimir Putin also needs to sit down with President Trump? Will they get back to this idea of meeting in Hungary?
Well, I don't know where they'll meet, but I assume if Zelensky and Trump are satisfied after their meeting, then there'll be some form of reach out to the Kremlin. Now, according to the media, Kirill Dmitriev, who's the Putin envoy, was in Florida this past week, and so he apparently has reported back on roughly the terms that have been reached between the U.S. and Ukraine. And the Russian reaction has been interesting. They haven't rejected it. They've praised Trump's efforts to achieve peace. And they said they're willing to continue to negotiate. But things Putin said as recently as a week ago would not allow the sorts of ideas that Zelensky and Trump seem to be agreeing on to be accepted by the Kremlin. But again, we'll see. Putin has been meticulous about trying to avoid annoying Trump, albeit without conceding one little bit. At some point, he may not be able to do the two things together.
To what extent is President Zelensky trying to head off the constant communication between Steve Witkoff and Moscow, whether he's talking to Putin or his lieutenants? Is that why he needs to get to Florida right now?
Well, I think that the plan that was given to Zelensky by the Secretary of the Army Driscoll in the middle of November was far too favorable to the aggressive, to Putin, and reflecting, I think, Kremlin influence on parts of the Trump team. But that was corrected, within a few days when Rubio met with the Ukrainians in Geneva. Rubio and Witkoff met with the Ukrainians in Geneva. And since then, we've seen a back and forth of ideas. And we've seen Ukraine being willing to compromise, but not to make fatal mistakes, like simply giving Ukraine highly strategic land in Western Donbass without security guarantees, without any requirements from the Kremlin to actually make peace. And again, the deal that has been emerging, again, we only have some of the details, we don't have enough, suggests that the United States has taken account of this. And this reflects, again, Ukraine's ability, Zelensky's ability to advocate for their positions and Team Trump's willingness to listen to them. And that's a good thing.
Really fascinating. What does China make of all of this? What is President Xi watching in Ukraine?
Well, Xi is watching intently American policy in this war. He doesn't want Russia to lose. And by lose, I mean Russia not being able to take effective political control of Ukraine, which is why Xi has provided significant support to Putin, albeit trying to avoid American red lines, like by sending weapon systems to Russia. But he wants us, he wants to see America allow Putin to win in Ukraine, because that would be a sign of great weakness, which Xi would, you might say, interpret as meaning he has a free hand to go after Taiwan.
We are spending some time with former ambassador to Ukraine and Uzbekistan, John Herbst, ahead of this meeting at Mar-a-Lago on Sunday between President Zelensky and Donald Trump. You know, Trump said he would end this war on his first day, Ambassador. Is there a chance he ends it in his first year?
No. The only way this will end is if Putin understands the United States is determined, that Trump is determined to achieve his stated goal of a durable peace. Not a peace which enables Putin to come back for more of Ukraine in 6 months or 12 months or 36 months. But the only way to do that is to make it extremely painful for Putin to continue. Because for Putin to have effective political control of Ukraine, he has to take a great deal more of Ukrainian territory, including Kiev and Dnipro and Odessa, which means a lot more fighting. The only way that Putin understands he cannot achieve those objectives is if Trump puts serious pressure on him in three forms. One, greater sanctions, more of what Trump did in October, meaning the sanctions on Lukoil and Rosneft, two major Russian oil firms. Two, major weapons supplies to Ukraine. Under Trump's view, it doesn't have to be paid for by the American taxpayer, but the Ukrainians and the Europeans will pay for it. Three, the United States should work with our European allies at making sure the $300 billion, roughly, of frozen Russian state assets in the international financial system go to Ukraine. One of the bad proposals that was presented to Zelensky in the middle of November, reflecting undue Russian influence, was that Ukraine would get 100 billion of those assets, and the U.S. and Russia would get the majority of those assets. That was not a good look. That suggested to Putin that the Trump team was not going to be tough.
With the potential of much more fighting ahead, former Ambassador John Herbst, we thank you for the insights, and I hope you had a great holiday. Happy New Year. Thanks for joining us on Bloomberg. I'm Joe Matthew in Washington. We'll assemble our panel a bit later on this hour. Much more to follow on Bloomberg TV and radio.
AI is impacting every industry. Macau is providing this center point for this industry transformation. By hosting a conference like AIE, what they're doing is providing this foundation for everyone to align and get behind. If you've spent some time here, you'll suddenly realize how much energy is here, how much transformation, how much change. And being in a location that has those kind of dynamics is really powerful for any business.
Thanks for joining us on Balance of Power. I'm Joe Matthew in Washington. This day after Christmas on Bloomberg TV and radio, we're watching stocks lose a bit of ground, and bit being the key word there. The S&P 500, which finished Christmas Eve at an all-time closing high, is down just about 5 points right now. The NASDAQ is losing 3. We'll check in with Bloomberg's Vonnie Quinn for a bit more here on the Friday trade and holiday light volume as we consider the recent conversation that Bloomberg Wall Street Week David Weston had with the boss at Bank of America, CEO Brian Moynihan. Let's listen.
The AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at client spending, like us spending on AI, that's higher than it was last year. But frankly, overall spending levels are shifting towards that, not necessarily growing at a mid-single digit rate type of number. So I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus, up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
So much of the American economy is supported by the consumer. And you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
You have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year. And we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say it in a 4.5%, which is very consistent with a very solid growing economy. In the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4% more November this year versus November last year is a very solid backdrop. The credit quality of the American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So if we look at the bottom third, middle third, and top third of American income people in the Bank of America customer base, we do see differences, i.e. the higher income and middle income are growing faster. But even the lower income third is still growing, and that's all good. And that means, why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment, that is gotten worse, so to speak, than it was at the beginning of the year. But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, 40-year, it's 5 and 6%, as you go back through time. And so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017, 18, 19 era. Then you had the pandemic and it retightened. And so it's normalizing, but we feel good about all that. And the consumer's in pretty good shape, spending more money, employed and earning more money, but differences between different types of consumers, and then being wise in how they spend. If they trade down, and all the things you're hearing the retailers talk about are true, but the aggregate amount of moving in the economy is still growing.
So you mentioned flattening out in the employment growth. There are always risks to the upside and the downside in any of the numbers that we project. How concerned are you about the downside? Because certainly the Fed is very focused on a softening labor market and whether that may be a problem for us. So
if you look at the predictions for our team and the other economists for unemployment, we're kind of peaking out at this level now in the mid to 4.5, 4.6 range, and then it sort of flattens out. But the Fed has to be wary because they have a mandate to maintain full employment, and we're at full employment now. And they have a mandate to maintain price stability and inflation fighting. And those two mandates can work together sometimes and against each other sometimes. And right now we're in that unusual case where the labor market has softened, and yet the inflation, because the massive buildup inflation after COVID and stuff is now still working its way down. Our team predicts that the inflation rate will get to the Fed's target, through the end of 27, but it's continuing to work in the right direction, which gives the Fed, in our view, latitude to keep cutting rates next year, especially in the first half. That will then provide a stimulus in the second half of the year. Those rate cuts do benefit the consumer somewhat, but in fact benefit small businesses, because in mid-sized business, they borrow on lines of credit, which are floating rate indices, and as rates come down, they get instantaneous benefit. And if you hear our small and medium-sized businesses are pretty optimistic about next year, telling us they expect to grow, they expect to hire more people, and those small businesses are the backbone of the U.S. economy. We're the largest small business lender in the U.S. economy, so we see them being very active.
This year has been good for the markets. It's also been good for Bank of America. What do you need in 26 to continue the growth?
Look, we just need our team that's done a great job for us over the last several decades to keep doing it. And what they need to do is go out and get one more client and do one more thing with every client we have. And they know that across all of business, whether it's our markets teams, whether it's our global corporate investment bank teams, our consumer teams, our wealth management teams, all of them need to go out and just drive more business. And that organic growth engine, which we described in our Investor Day a while back, that is intact. It's been growing with the market. And now, because of some dynamics in the repricing of the balance sheet, we'll get more earnings lift out of it like we did in the third quarter. But that organic growth engine, more customers and more with each customer, has been driving at Bank of America, and our team just needs to do more of that, and they know that.
Bank of America CEO Brian Moynihan in conversation with Bloomberg's David Weston. Bank of America shares are slightly lower, along with most banks today, down about 20 cents right now, about 1/3%. But indeed, David's right, it has been a good year. B of A stock up about 26% so far in 2025. Most banks are lower. Citigroup, money centers are all down. Citigroup's down a little more than 1%. JP Morgan down about 0.6%. We're seeing BlackRock, Goldman Sachs trade lower as well, with a little bit of a give back today in the markets after closing at an all-time closing high on the S&P 500 on Christmas Eve. Bloomberg's Vonnie Quinn is watching Wall Street for us today in holiday light trading. In this Friday session is with us now for a bit of an update here. We did give up some...
Capital is taking a stake in Target, and we have to mention Warner Brothers Discovery, because if another story is going to bleed into next year, it is certainly this one. The battle between David Ellison and, of course, Netflix continues, and David Zaslav may even get more money for his shareholders on this one.
Wow, Bonnie, thank you so much. And a rare move higher for Target. Interesting, all in the wake of the Christmas shopping period. Vonnie Quinn, thank you so much. I'm Joe Matthew in Washington, where we're going to dodge the snowstorm, but that will not be the same for New York City, with snow set to begin falling just a couple of hours from now. We'll check the forecast coming up on what could be a dicey holiday travel weekend. All ahead on Bloomberg.
Our ultimate goal was to turn the fridge from a storage box to a smart kitchen manager that helps the users.
That comes down to finding the optimal location for our camera.
I am most proud of our image matching algorithm. The entire user experience has to be fast and seamless. When it worked like we expected, it was really a breakthrough.
It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington with our eyes on the tri-state region. Indeed, a winter storm warning in effect here for New York, New Jersey, and Connecticut, with a pretty real snowstorm on the way. Just about, 3 hours or so from now. There's a live view, if you're with us on Bloomberg TV, of the New York skyline. Snow should be falling by about 4 p.m. Eastern time, just in time for a very important travel weekend. And we're joined for more by Bloomberg's Josh Saul, who's tracking the storm for us here. Josh, there's really nothing more beautiful than a fluffy snowstorm in the city of New York. But if you're trying to get anywhere, this could be dicey.
That's right. Fun to watch from the fire, but not great to be out driving. It's an added danger is it's going to stay cold this weekend, which means the roads are going to stay icy and difficult and dangerous to drive on kind of right through the weekend.
Wow. The accumulations are pretty real. This is a storm warning, not a storm watch. You're looking at between 6 to 9. What's the city going to get? What's LaGuardia going to get?
Could be up to 9 inches in these areas. Yeah, it should be the most we had since 2022. And that means a lot of, you mentioned LaGuardia, it means a lot of flight cancellations. Flights starting all around the world that are supposed to get here right when the storm is kind of at its thickest. A lot of those flights are being canceled.
So if you're getting on a plane, hoping to see the ball drop in New York this week, are the airports taking precautions? What are we hearing from the local authorities?
If your flight's cleared to come in, then it should be just as safe as normal. But definitely a lot of flights canceled, a lot of flights delayed. And an interesting issue that came up in our reporting is that flights have been so bad this past year or so, a lot of people have opted to drive instead, which means that the roads are even more crowded and more people are depending on their cars to get around, which is dangerous given how rough the roads are right now.
Yeah, that's scary. Always feels a little weird when they pull the plane over to do the de-icing thing. I suspect we're going to see a lot of that this weekend with the temps that you mentioned. Josh, thank you. I don't know if you're spending the night inside world headquarters, but I wish you luck because that snow, as we mentioned, is set to begin just a couple of hours from now. As we look back on the year and look ahead to the new year, we wanted to spend some time with Eric Larson, Bloomberg's legal reporter, who we have spent so much time with talking about the Supreme Court over the past year. And we're still waiting for the big one, of course, the Supreme Court's ruling on President Trump's tariff regime. And Eric is with us now from world headquarters in New York. It's great to see you. Eric, we understand this could be days or weeks away, right? This is an imminent ruling.
Yeah, that's correct. I think some people were even expecting we might get it before, get the decision before the holidays. But no, we are expecting it in the next weeks, potentially very soon. No word on exactly when that will be, though, of course.
Yes. So obviously when it does, first of all, it'll be seismic in the political world, but also when it comes to markets, this could come down a couple of different ways, right, Eric? There are big questions about whether there will be refunds that are mandated as part of this ruling, whether a one-off or something that could take years to repay. How could this take shape?
Yeah, you're right. That's going to be the big question. If, in fact, the tariffs are ruled illegal, I think that all of these companies that have been paying these billions of dollars in tariffs so far are going to demand them back. Some of them have already gone to court to set the stage for that, should it happen. And folks who have been watching this closely will recall that when there were the oral arguments at the Supreme Court not so long ago, they signaled that this conservative-leaning court could be leaning toward overturning the tariffs. You know, of course, they didn't say outright what they were thinking, but this is just based on the questions from the judges. So I think people are preparing for that eventuality. Of course, President Trump has also signaled there are other options to try to get other types of tariffs in there through other legal maneuvers, which also could end up being challenged in court. But folks are definitely preparing for the eventuality that they are overturned and they'll demand this money back.
Well, I'm glad you mentioned that because the White House has made it clear that if the court strikes down the tariff regime on the IEEPA justification, that there will be another and maybe another after that. But that would be preceded by an investigation or review, right? So this could take months before they come back to the plate.
Exactly. These other ways to put tariffs in place involve, as you said, investigations. And some of them have limits to how long they can last and how high they can be. So that's it's not quite as easy as using IEEPA the way Trump has done. No president before him had used that law in that way. And the way that he did use it, as we know, allowed him to put whatever amount of tariffs he wants on any country he wants for as long as he wants. So that's the emergency power that these lawsuits are seeking to claw back, to say that that's not how the law was intended. All the other ways are just going to be more difficult for the president to put these tariffs back in place.
I'm sure there's nothing else on the docket that rises to this level, Eric, but correct me if I'm wrong. Is there anything else that we should be looking at in terms of the court's term next year? Yeah,
there are some big ones. We still have a decision on birthright citizenship that President Trump is trying to roll that back. Several courts ruled that effort, that executive order limiting birthright citizenship was illegal. We heard arguments at the Supreme Court already. It's another one where there were signals that they might overturn Trump's executive order, but we don't know for sure. That's a huge one. It involves citizenship for potentially thousands of people, babies. We also have some big decisions on state laws banning transgender athletes at schools, campaign finance, and also voting rights, and whether or not efforts to make minority districts, voting districts, are illegal. So there are some other big ones out there.
Yeah, it's going to be a huge year, with questions as well about the legality over the administration's approach to Venezuela. Eric, I don't want to conflate different beats here, because it does seem that if there will be any justification or challenge, this would be in Congress, not in the courts. Is that right?
That's my understanding. I certainly haven't heard of or seen any specific legal challenges around that yet, but it's also early days to see what happens there.
God knows. And Eric Larson has learned. You never know what you're going to be reporting the next day. It's great to see you, Eric. Happy New Year. Thank you for your great coverage in 2025, as always. I'm Joe Matthew in Washington, where we were graced by the Kennedy Center honors just a couple of nights ago. Did you see that? The 23rd, they played it back on CBS. First time ever Donald Trump was the host. They called it the Kennedy Center honors, not the Trump Kennedy Center honors, knowing that the name is being changed by the administration. Here in town for the awards, along with some testimony on Capitol Hill about royalties for musicians on the radio, KISS frontman Gene Simmons. We spent some time here in our studios at Bloomberg. Listen.
Nothing's changed. Okay. The artists are not getting paid. That, I mean, especially our children and our children's children are going to be the next generation superstars after they climb their way to the top and fight for it. What do they have forward to look? What do they have, looking forward? They're going to get 0 pennies when their songs are played on AM and FM radio, and that's insane.
Do you have the president's support on this? Did you talk to him about it?
I spent some time with the president alone in the Oval Office, and we talked about family. And I've known the president, proud to say, before he became a politician. But what else we talked about is a private issue.
Okay, so that wasn't about legislation, I guess.
I didn't say that, but you're leading the witness, Your Honor.
Oh, not to, but I wouldn't think that would be private.
Well, these are semantics, but I'm not anti-semantic.
I hope that you're not, because we wouldn't be able to do this right now.
There was a little clickbait there. What I talked, yes, I specifically said what I spoke with the president about is not for anybody else's consumption.
Okay.
Well, there is such a thing as privacy.
I completely understand. I only ask you because so many lawmakers come on the air and say, if we get a directive from the president, we can make this work. What did you hear in the committee from members? Did you get a sense that there are votes on this?
I've heard a lot of support. Yeah. I met privately with Senator Marsha Blackman and Mr. Schiff. Both sides of the aisle seem, let's just say, as soon as Congress gets their act together, the president will sign this. I am convinced of it, my personal opinion.
Well, our audience should know, and you're talking to the business community right now, that you are no stranger to big business and some pretty shrewd moves. It was a Bloomberg report when you sold your publishing rights last year. Pop House Entertainment, $300 million.
That's not entirely accurate, so just here to correct it for the record.
Please.
An entity called Pop House, a futuristic company out of Sweden, came and bought KISS, the underlying rights, the makeup, logos, as well as the writing publishing, for a respectable sum, enough to buy Rhode Island. I give you a pregnant pause so that this sinks in. But the future looks even more gargantuan than the past. We are in the middle of the first motion picture to be directed by McGee. There's an awful lot of stuff that I can't talk about because nobody wants to find out where they're going to get for Christmas in July.
Fair enough.
There's an enormous commitment by Pop House in the future of KISS, and this is just the beginning. When you look at a caterpillar and you say, well, that's the end of its life, no. You're short-sighted. You don't understand that it's going into a cocoon, which is where we are now, and we're going to come out and defy gravity with beautiful wings and soar to the heavens.
Very poetic.
I am kind of a big deal.
I've heard that, and a poet.
I was a fan, actually, of Bloomberg when he was mayor. Met the gentleman, and he struck me as a powerful and attractive man.
Well, I can only agree with that.
And I loved his algorithm that made him rich and fit, but that's another story.
Well, I'll tell you what, we've got the terminal right here. I'm sure there's a disclaimer I'm supposed to read somewhere, but with everything you just described, you just outlined the
AI is a concern if left unregulated. Anything, beautiful horse that you just bring in, if it runs wild, you've got to have some parameters that we control instead of AI.
Gene Simmons with us here on Bloomberg, indeed, talking about the American Music Fairness Act, the AMFA. We'll see if it goes anywhere, and we'll let you know if it does. I'm Joe Matthew in Washington. Thanks for spending part of this day after Christmas, Boxing Day, here on Bloomberg with our eyes on the markets, giving up some early gains, at least in terms of the S&P 500, down 2 points now. The NASDAQ is green again, up 11. Dow Industrial Average down 82 points with a couple of hours left to trading for this week. Been pretty good for gold. Once again, up about 1% here, $45.28 an ounce, but Bitcoin tipping lower, down $653, just above $87,000 per coin. Stay with us. We'll assemble our political panel next, right here on Balance of Power on Bloomberg TV and radio. Thanks for being with us on Balance of Power here on Bloomberg TV and radio. I'm Joe Matthew in Washington, coming in for a landing here on Wall Street with about 2 hours, a little more than that, left to trading. In holiday light volume, the S&P 500 is down just about 5 points. When we come back to Washington in the new year, lawmakers come crawling back from the holidays in a bruising debate over health care premiums that ended this year on Capitol Hill. There are going to be big questions and some fast work required. If lawmakers are going to deal with the expiration of Obamacare subsidies, which, by the way, is just, 4 days off right now, we go over the cliff when we hit the new year. And then, of course, the matter of government funding. That'll be the end of January. If you've listened to this program, you know about this all the while. Two very important deadlines that really could help set the direction for the entire year in Washington when it comes to politics. Maybe not just Washington, maybe the country when it comes to the midterm election cycle. That's where we start our conversation with our political panel. Bloomberg Politics contributor, Republican strategist Rick Davis is with us, partner at Stone Court Capital, alongside Democratic strategist Doug Farrar, former director for the Office of Public Affairs, the FTC. Great to have both of you with us here. Rick, I don't know your thoughts on this as we look beyond January, but many have suggested that if there's no deal on health care reform, not only might the government close at the end of January, but that could, in fact, be the issue that tips a Republican majority into a Democratic one in the midterms. If politics is national, as you frequently say, will the midterms be decided next month?
I actually think the midterms were decided last month. I really think that the Republicans lost the initiative on health care. We had a chance to get ahead of it and take away an issue for the Democrats. And, you know, when you look at the stack of debt that we've laid on through the One Big Beautiful Bill, not a very popular bill to voters and not hardly sold by Republicans in the process, you know, we've laid ourselves bare. And so I think if the election were today, you know, you'd have a 40, 50 seat loss. So I think it can improve. But if the Republicans don't do something more aggressive on health care, it just gives Democrats way too big a handle to use to beat up, House members and win seats next cycle.
Yeah. Doug, do you agree? Were the midterms decided in December?
Well, I'd like to agree, but I'm always a little nervous about the fortunes of my party. What I will say, though, is that the wins are clearly favorable for Democrats. I mean, they found an issue they can really campaign on in affordability. Obviously, the president does him and his party no favors in the way that they handle a lot of the cost issues in the economy, including health care. But, you know, there's lots of twists and turns left to come. What I will say, though, is I think it's time for the Democrats now to buckle down and not just say, OK, we want to make things more affordable, but show how they plan to do it. And I'll be looking to see which candidates in which races are able to articulate a really compelling policy agenda as they hope to take over at least the House and hopefully the Senate.
Will you be watching New York Mayor Mamdani? He's going to be sworn in just about a week from now, Doug. Does he have the playbook?
Well, he's being incredibly well advised. He's got a great set of transition chairs, including Lena Khan, who's a real policy all-star. Obviously, people like Senator Warren and Senator Sanders and others have been close to the transition, as was reported by the Times today. And I think what they're trying to do is figure out how to deliver on his agenda. And there are a lot of policy options that are available to him that don't necessarily require Albany or the city council to get involved, because there's lots of really strong consumer protection and worker protection rules on the books that they can enforce and signal enforcement to businesses. So I think he's got a really good opportunity to hit the ground running.
I'm not sure how to think about Mayor Mamdani, Rick, after that meeting with Donald Trump. He was going to be the foil, right? This was going to be the enemy of all Republicans for the next political cycle. But now they're shaking hands, laughing together, talking about affordability as if they are partners. Does that change the political prospects for Mamdani in New York?
Well, it's certainly changed the political prospects for Stefanik in New York. I mean, basically that's true. Meeting knocked her out of the race. So he's already delivered a win for the governor at Stefanik's expense. Look, I think all this focus on him is relatively irrelevant. There's virtually nobody outside the boroughs of New York who cast their ballot based on what's happening inside the boroughs of New York. And so, yeah, it's going to be fun because a third of the entire media establishment resides in that jurisdiction. And so everybody's going to be watching what he does. But I know very few voters who are sitting there breathlessly holding their vote to see what he does and then make a decision. So, a lot of steam, but not a lot of fire.
Interesting. You know, Doug, following the elections, the big question was, does Mamdani have the playbook for Democrats, or is it, in fact, the two moderate governors in Mikey Sherrill and Abigail Spanberger? And a lot of folks said all of the above, that the Democratic Party, if is going to be successful in the midterm cycle and, in the next presidential election, it's going to have to keep growing the tent. Do you agree?
I do in some ways, and I don't in others. I mean, I think you see Sherrill and Spanberger adopt some pretty progressive economic concepts, from trying to freeze rates at the utilities in New Jersey under an emergency order to an effort to set up a public PBM, which is an entity that's a middleman in pharmaceutical products in Virginia under Spanberger. I think there definitely needs to be a big tent with respect to sort of cultural and social presentation in different districts. Obviously, what works in Brooklyn is not necessarily going to be what works in Nebraska. But interestingly, there's a candidate running in Nebraska with a very similar economic concept to Mayor Mamdani, who's getting a lot of attention and potentially going to threaten the incumbent. So I do think the Democrats have found an affordability message with an economic populism frame, and now they just need to deliver on it. And that's one thing where Mayor Mamdani will be very relevant, because he's set the bar very high, and I expect he'll deliver.
Rick, where's the money going? We're looking at some doozy Senate races, right? Whether it's North Carolina, whether it's Texas, the races in California. We could see some new records this cycle, no?
Yeah, I spent a little bit of time in Texas last week, and Republicans are really looking at what could be an incredibly confusing and also super expensive primary that then leads into an equally expensive general election. North Carolina, as you mentioned, historically a place where a lot of money's spent. No question it's going to be really important to Republicans there in order to sustain their majorities in the Senate. Anybody who thinks the Senate is an automatic Republican domination is wrong. They've got to think through what happens when the bottom falls out if Republican policies aren't widely accepted. And, you know, that's, I think, one of the missing elements. Democrats sort of, kicked off this idea of reassessing their party. They didn't want to make it public because I'm sure it would hurt. But the Republicans have to be equally concerned. Right now, we have some of the highest retirements in history going on in party in power. Why would anybody want to retire if you think you're going to win re-election? And so the reality is this could be a rocky one, but there's no question fundraising and spending records are going to be set in this cycle.
Are Democrats ready for it, Doug, in the financial department?
I'd like to think so. I mean, obviously, I was concerned to see the DNC not come out with their autopsy, and obviously there's still some ongoing infighting in the party. But at the end of the day, I think these folks want to beat Donald Trump, and while there may be some disagreements across issues like economics and other social and cultural issues, I think that the wins are favorable and that the donors will come off the sidelines. I also think you're going to see a lot of small dollar donation candidates do really well, because I think people are really unhappy with the way in which very large and wealthy oligarchs are working with this administration to drive up costs for people. I mean, people are very, very mad, and usually that generates a lot of attention and can generate a lot of small dollar donations supporting candidates who are more on the populist end of the party.
Really, really interesting conversation. Doug, thank you so much. Of course, Rick Davis, they'll be back with much more as we make our way into the new year, and I appreciate your insights, as always, our great panel. Rick Davis, partner at Stone Court Capital. Doug spent time at the FTC as director for the Office of Public Affairs, our Democratic strategist, and great to have you both with us on this day after Christmas. Watching Wall Street as we count down now with 2 hours to go. It doesn't look like we're going to have a big old Santa Claus rally to take home this weekend. In fact, the broad market turned lower a few hours ago. The S&P 500 down just 1 point. NASDAQ is hanging in, though. It's up 18 at the moment. The Dow Industrial Average down 72. We're looking at a VIX of just under 14 and the promise of more gains next week and holiday light volume. That's the seasonality behind all of this. And Vonnie Quinn will have more on the markets as we get into our next hour. Thanks for spending part of your Boxing Day with us. I'm Joe Matthew in Washington. We'll see you next year on Bloomberg TV and radio.
There will be a security agreement. It'll be a strong agreement. And the European nations are very much involved in that. They'll be very much involved in protection, etc. But the European nations have been really great. They're very much in line with this meeting and getting a deal done. They're terrific people.
AI is impacting every industry.
It is time now to look at media and specifically the Warner Brothers deal in the making. Shares of Warner Brothers down about 1.4% now, slipping after a report Paramount Skydance could walk away from its bid and instead litigate against the company's board. But is it really going to? Is David Ellison really going to give up like that? Bloomberg's Chris Palmieri joins us now. Chris, it seems unlikely that Ellison will go without some kind of a fight, or at least an answer, right?
For sure. Yeah. The idea of the litigation is something they've been hinting at for a while, even before this latest hostile offer. They had the law firm Quinn Emanuel, big litigators, sent a letter saying they're really unhappy with how this Warner Brothers sale process is conducted. But we're told that that's an arrow in the quiver, but nothing is happening imminently along the litigation front. In fact, if you look at what happened earlier this week when they made all those concessions to Warner Brothers and they had Larry Ellison backstop $40 billion, sort of built into that $40 billion is money that they could pay to Warner Brothers if they cancel the Netflix deal. There's a breakup fee that's sort of built into that backstop from Larry Ellison. So all indications are they're proceeding with this deal.
There has been a lot of ping pong back and forth when it comes to this deal. How would you rate it in comparison to other takeover bids? Is it more than usual? Is this a lot of surprises, more than what's typical?
I would say more than typical. It's got all the hallmarks of a classic takeover fight, and it's got all the Hollywood drama and aspect to it as well. So this is colorful personalities, colorful properties, and colorful bidding, I'd say.
So we knew that Zaslav wanted more money. We knew that was something from the very, very beginning, and John Malone, of course, too. We have Paramount $30 a share, Netflix $27.75, but all in, it's probably roughly about the same in terms of pricing. What will it go up to, do you think, Chris?
Well, it seems he's got Paramount has to add at least another dollar to their offer to cover that $2.8 billion breakup fee. Then they've got to offer something else to make it more attractive for Warner Brothers to break up and move with them. So, another dollar, too. So you're talking $32, $33 a share. That's sort of the direction.
Morning for the stories that matter with the context you need.
Find us on to a peace deal, but he acknowledges that
or anywhere you listen.
News when you want it with Bloomberg News Now. I'm John Tucker.
And I'm Karen Moscow.
And Karen, let's start with the latest developments to end the war in Ukraine. President Trump says Ukraine and Russia are, quote, closer than ever before to a peace deal, but he acknowledges that negotiations could still break down and leave the war dragging out for years. Trump spoke yesterday as he hosted Ukrainian President Volodymyr Zelensky at his Florida resort.
I really believe we're probably, Mr. President, by far closer than ever before with both parties. We had some times when he was close and President Putin wasn't. Then we'd have President Putin was close and he wasn't. You saw that in the White House. But I think they both want to see it happen.
Well, let's get more on the meeting from Bloomberg's Rosalind Matheson.
Zelensky and Trump had what seemed to be a pretty productive conversation from Donald Trump's point of view, at least warm words afterward. So progress on those areas, perhaps on the role and size of the Ukrainian military after a war, and some understandings around the Ukraine economy, including the trade arrangements with the US. But not a lot of progress on the really biggest issues, the stickiest ones, and there it seems still we're quite away from getting a full agreement, and one that certainly Ukraine and Russia would sign off on.
Bloomberg's Rosalind Matheson says Volodymyr Zelensky says he asked President Trump to consider the possibility of providing his country with security guarantees that would last 30 to 50 years.
Well, John, President Trump has another high-profile meeting on the docket at his Mar-a-Lago resort in Florida. He's scheduled to meet with Israeli Prime Minister Benjamin Netanyahu this afternoon. The two aim to boost a U.S.-brokered ceasefire in Gaza, which faces challenges as it looks to move into a more complicated second phase. That phase involves rebuilding Gaza under international supervision, creating an international security force, and normalizing relations between Israel and the Arab world.
And China kicked off military maneuvers around Taiwan that it said included live fire drills. This is a dramatic show of force after the U.S. announced one of its biggest arms packages ever for the self-run democracy. China has vowed to, quote, take effective and strong measures to safeguard national sovereignty. On Friday, it unveiled largely symbolic sanctions against 20 U.S. defense companies and 10 executives.
John, a powerful winter storm is sweeping east across the United States, bringing a dangerous mix of snow, ice, rain, and high winds. And we get more with Bloomberg meteorologist Craig Allen.
More than a dozen states with some kind of alert or warning for a winter storm that is near the Great Lakes and very powerful in moving towards the St. Lawrence River Valley. We have blizzards across the upper Midwest, very heavy snowfall in portions of the Great Lakes. There is snow falling around Chicago. Strong winds, damaging winds all the way down through the Central Plains and the Tennessee, Ohio valleys into southern sections of the U.S. And in the east, big lake effect snow just downwind of the lakes in New York State. There will be snow in portions of New England. In fact, ice storm warnings for some sections of New York, Vermont, as well as New Hampshire. From Boston on down to New York City and Philadelphia and Washington, there will be some heavy rain showers during the day today, and then followed by some very cold, gusty winds.
And that's Bloomberg meteorologist Craig Allen reporting. We will be checking in with Craig throughout the morning.
And Carol, let's turn to the markets, where futures right now, I call it mixed, as we begin the last trading week of 2025. Still, the stock average is hovering near all-time highs. And Robert Teeter is the chief investment strategist at Silvercrest Asset Management.
My base case for next year is that we do see very solid earnings growth, so kind of low teens earnings growth, maybe a little bit of multiple compression, though. And part of that's just going to be a factor of some of this rotation. Maybe you get a little bit of pressure release valve out of the mega caps that have been so strong, and I think strong for good reasons. But as you get some of that rotation, multiples might come down a little bit. So we're looking for high single-digit gains from equities next year, powered by double-digit earnings gains.
Silvercrest Asset Management's Robert Teeter. So far this year, the S&P 500 up almost 18%. The NASDAQ is up 22%.
John, it's a volatile session in the commodities market. Silver and gold are now lower after rising to records earlier. And we get more with Bloomberg Markets reporter Valerie Teitel.
Today, we're seeing some of the air come out of Friday's blistering rally. Silver was up 10% on Friday, the biggest one-day move since 2008. If you look about the month of December, it's had the biggest one-month change since 1979. I have to go all the way back to the inflation days of the 70s to see a similar rise in silver in 1 month's time, up near 40% just in this month. This morning was quite a pronounced volatile session. Essentially, silver moved 11% in an hour. It opened up higher, around 6%, breaking through $84 an ounce for the first time ever. We've now come off of that, trading around $76 an ounce.
And that's Bloomberg Markets reporter Valerie Teitel, who again says gold is lower this morning after earlier rising to a record. So is platinum. Time now for a Bloomberg Sports Update. Here's Dan Schwartzman.
Huge Week 17 in the NFL as the Patriots locked up their first AFC East Division title since 2019 with a dominating 42-10 win over the Jets, while the Bills fall at home to the Eagles 13-12. The Browns stunned the Steelers 13-6 to deny Pittsburgh winning the AFC North. In the battle of 11-win teams, the Niners getting past the Bears 42-38. The Giants destroyed the Raiders 34-10 to snap their 9-game losing streak, while the Seahawks improved to 13-3 with a 27-10 win over the Panthers. Elsewhere, the Jaguars beat the Colts 23-17. Dolphins outlast the Buccaneers 20-17, while the Saints get past the Titans 34-26. On Monday Night Football, the Rams will battle the Falcons in Atlanta. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm John Tucker, and this is Bloomberg.
This is Tom Keene inviting you to join.
ओके गाइस, ये नेचुरल गैस में फिर रिपीट कर दे रहा हूँ, अपना ऐसा थोड़ा स्ट्रिक्ट रखना, ठीक है? बिकॉज मल्टीपल टाइम टेस्ट हो चुका है लेवल ऐसे ऑलरेडी, मॉर्निंग पे मैंने बताया था। हुआ क्या है यहाँ पर, ये सपोर्ट तो मॉर्निंग पे था ही, बट यहाँ पर एक पॉइंट ऑफ इंटरेस्ट क्रिएट हो चुका है, उस वजह से प्राइस बार बार रुक रहा है। तो आप ये मान सकते हो कि यहाँ पर सेलर बैठे हुए हैं, दिस इज़ अ बायर जोन ऑब्वियसली। तो दोनों साइड तो जा नहीं सकता, एक ही साइड जाएगा ऑब्वियसली है, किसी ना किसी साइड के एसल हिट होने जरूरी है, या तो नीचे बायर निकल जाए या फिर ऊपर ये सेलर निकल जाए। जब तक ये भी नहीं निकलेंगे प्राइस ऊपर भी नहीं जा पा रहा है, देख पा रहे होगे नीचे बायर भी नहीं निकल रहे हैं बट ऊपर सेलर भी नहीं है, तो फाइट है। लेट्स होप किसी एक साइड पे प्राइस निकले तो मोमेंटम आए, अदरवाइज इसी रेंज के अंदर साइडवेज जाता रह जाएगा, इसलिए थोड़ा सा रिस्की। अदरवाइज तो नॉर्मली ट्रेड था मॉर्निंग पे यहाँ पर, बट ये यहाँ पर जो प्राइस एक्शन बिल्डअप हुआ है नॉट हेल्थी फॉर बायर्स। बाकी ऊपर जाएगा तो फिर डे हाई के अराउंड देखेंगे, वहाँ पर एक रेजिस्टेंस अगर क्रिएट होता है, अगर जाता है तो अभी भी ये आप कह सकते हो स्टिल पॉइंट ऑफ इंटरेस्ट यहाँ पर जो सेलर्स का बना हुआ है, दैट एक्ट लाइक अ रेजिस्टेंस। ब्रेकआउट हो जाए तो मज़ा आ जाएगा फिर, क्योंकि फिर ये डबल स्ट्रॉन्ग हो जाएगा सपोर्ट, क्योंकि सपोर्ट तो है ही, सेलर निकलेंगे तो एक स्क्वीज हो सकता है यहाँ पर। बाकी क्रूड ऑयल भी देखोगे मॉर्निंग पे साइडवेज ही था काफ़ी टाइम तक, लास्ट ट्रेडिंग सेशन की क्लोजिंग के बाद नीचे एक सपोर्ट, वहाँ से स्मॉल बाइंग। नाउ दैट लेवल इज आल्सो एक्ट लाइक अ पॉइंट ऑफ इंटरेस्ट फॉर बायर पर्पस, ये बायर की तरह काम कर सकता है यहाँ पर। ऊपर हमारे पास परसों वाला जो परसों का हाई था, यहाँ से सेलिंग आई थी, वो स्टिल अभी भी रेजिस्टेंस है, वो ब्रेक नहीं हुआ अभी भी, दैट एक्ट लाइक अ रेजिस्टेंस। बाकी आज दोनों ही इन्वेंट्री है, ध्यान रखना लास्ट वीक की इन्वेंट्री आई नहीं थी, क्रूड ऑयल एंड नेचुरल गैस इन्वेंट्री। दोनों इन्वेंट्री पॉसिबल है आज, पॉसिबल नहीं है, दोनों इन्वेंट्री आज ही है। क्रूड ऑयल इन्वेंट्री 9 बजे आएगी एंड देन नेचुरल गैस इन्वेंट्री 11:30 पर। अब सीधा 6:30 न्यूयॉर्क सेशन की ओपनिंग है एंड देन 8 PM यूएस मार्केट ओपन एंड 8:30 पेंडिंग होम सेल्स का एक डेटा भी है। सिल्वर गोल्ड गैप अप हुआ जरूर था सिल्वर फॉरेक्स में, देन वॉलेटिलिटी इज स्टिल देयर। चाइनीज मार्केट में देखोगे तो फ्राइडे के दिन, सैटरडे के दिन वहाँ चाइनीज जो फिजिकल मार्केट था गोल्ड का वो ओपन था, वहाँ ऑलरेडी 10% ऊपर चला गया था मार्केट, और उसके बाद फिर कल भी ऊपर ही था, उस वजह से हमारे वहाँ एक गैप अप देखने के लिए मिला था फॉरेक्स में, लगभग 3% का गैप अप एंड देन मार्केट गोज स्टिल 6%, देन वहाँ से कंटिन्यूसली प्रॉफिट बुकिंग में है आज सिल्वर फॉरेक्स में विथ गोल्ड में भी गैप अप स्मॉल, फिर प्रॉफिट बुकिंग इसमें भी कंटिन्यू। थोड़ा देखते हैं सिल्वर में क्या ये नीचे आता है, बिकॉज 4 आवर टाइम फ्रेम पे अगर सिल्वर फॉरेक्स को देखोगे तो देयर इज चांसेस कि नीचे थोड़ा सा आए, ऊपर कोई रेजिस्टेंस नहीं बन रहा है, प्राइस फॉल जरूर कर रहा है इवन 4 आवर टाइम फ्रेम पे सिल्वर फॉरेक्स में, बट कोई रेजिस्टेंस बनाते हुए नहीं गिर रहा है, तो चांसेस हैं अगर नीचे प्रॉफिट बुकिंग में और आता है तो $70 को एक बार वापस हिट करने जा सकता है। Which is a healthy correction, I think 15%, not a very high correction, especially जो रैली आई है recently। फोर आवर एंड उससे अबव किसी भी टाइम फ्रेम पे कोई मेजर रेजिस्टेंस क्रिएट होके नहीं गिर रहा है सिल्वर, ध्यान रखना। होता है कि रेजिस्टेंस क्रिएट होके गिरे हायर टाइम फ्रेम पे, तो फिर चांसेस है कि प्राइस नीचे से अगर वापस पुल बैक में आता भी है तो प्राइस स्ट्रॉन्ग रेजिस्टेंस क्रिएट करेगा। ऐसा दिख नहीं रहा है फिलहाल सिल्वर फॉरेक्स में 4 आवर एंड उससे अबव टाइम फ्रेम पे। 4 आवर से कम टाइम फ्रेम पे देखोगे तो वहाँ पर भी ऐसा कुछ नहीं, इंट्राडे में हो सकता है बट 4 आवर एंड उससे अबव नॉर्मली हम हायर टाइम फ्रेम कंसिडर करते हैं, तो वहाँ पर ऐसा कोई मेजर रेजिस्टेंस अभी तक नहीं हुआ है क्रिएट। फॉरेक्स सिल्वर हो के गिरे तो मेरे अकॉर्डिंग बेटर है, स्पेशली 4 आवर में मेजर रेजिस्टेंस बन जाते हैं बिकॉज नेचुरल गैस लेट्स सी ब्रेक करता है तो इस पॉइंट ऑफ इंटरेस्ट के एरिया को। निकल रहा है ऊपर नेचुरल गैस, फाइनल टारगेट यही है एक्सपेक्टेड डे हाई। वहाँ पर देखेंगे डे हाई पर एक अगर रेजिस्टेंस क्रिएट होता है तो वापस सेलिंग, क्योंकि ये परसों मतलब लास्ट ट्रेडिंग सेशन का ये सारे सपोर्ट जोन थे, सीधा गैप डाउन हुआ है तो दे कैन एक्ट लाइक एज रेजिस्टेंस, बट ऑब्वियसली डायरेक्टली सेल नहीं कर सकते। वहाँ पर प्राइस को एक बार रीटेस्ट करने का वापस मौका देना चाहिए, क्योंकि ऑलरेडी मॉर्निंग पे वहाँ से ऑलरेडी एक बार सेलिंग आ चुकी है। यहाँ पर गैप डाउन लेवल के नीचे हुआ था, फिर सीधा ही गिरता चला गया। रीटेस्ट करे, हो सकता है ना करे, नीड टू सी प्राइस पहुंचेगा लेवल पे फिर देखेंगे। था ब्रेकडाउन भी हुआ है मॉर्निंग पे सीधा गैप डाउन ओपनिंग के थ्रू। तो चाहो तो वैसे हाफ प्रॉफिट बुक भी कर सकते हैं नेचुरल गैस में। 12 पॉइंट का ना हाफ प्रॉफिट बुक करके ना ट्रेल कर लो, या फिर एसएल कॉस्ट पे रख सकते हो वापस अब की बार। 12 पॉइंट का टारगेट है, 3 पॉइंट का समथिंग अराउंड एसएल है, तो 6.1:2 तो बन गया है, 1:4 का पूरा टारगेट है वो। तो 6 पॉइंट अभी और है वैसे लेफ्ट, बट either trail the SL or book the half profit and trail the remaining quantity. Okay, in natural gas. बाकी फिर 5:30 अभी सॉरी 6:30 के बाद देखेंगे, थोड़ा मोमेंटम शायद 6:30 के बाद करना शुरू हो जाएगा।
Hello, welcome. My name is Clay Irwin. Thank you very much for choosing to share part of your day with us. Together, I'm joined by Grace Peters and Steve Parker, and together we represent the Global Investment Strategy team. And over the course of the next 30 minutes, we aim to share with you our outlook for 2026, promise and pressure. Here within this document, we share our expectation for capital market returns over the course of 2026, but we also examine the tension that exists between macro forces and capital market returns. Now, as we do this, it's important to consider the background in which we find ourselves today. Here we are in the twilight of 2025, finishing a year that we characterized as comfortably uncomfortable. And here we've experienced a year in which there were shifting geopolitical forces, but also equity markets which reached all-time highs, a declining dollar, and lower interest rates as well. And our expectation is for 2026 to be quite similar. In an environment of shifting macro forces, but still record equity levels, a stable dollar, lower interest rates, but persistent inflation. Now, with that as a backdrop, we need to consider how it is that we are going to get there. And within our outlook, we examine three primary forces or megatrends that we think will characterize much of 2026. Specifically, artificial intelligence, global fragmentation, and persistent inflation. So Steve, I'd like to bring you into the conversation. Steve Parker, our co-head of Global Investment Strategy. Artificial intelligence is part of all conversations. It feels almost ubiquitous. So as we think about artificial intelligence, both in 2025 and 2026, it has had a tangible and real impact on our daily lives. Would you help us understand the impact that it has had on the capital markets?
Yeah, Clay, it's hard to overstate what sort of impact that it has had. If you look back to the launch of ChatGPT in 2022, 75% of the gains, 80% of the earnings, and 90% of the capital spending growth of the S&P has been driven by AI-related companies. If you think about the capital spending and the impact on the economy, in the US in the first half of this year, AI-related spend contributed more to growth than the consumer. I'd argue you can't have a view on markets without having a view on AI.
All right, so before we talk more about AI itself, let's talk about some of those numbers. I was shocked the first time that you shared them with me. 80% of the profits, 90% of the spending. How concerned are you that there might be a bubble in this space? And I remind you, a bubble could come from a lot of things. It might be overspending, it could be over leverage, or perhaps just prices that are too high. Perhaps we start with the first one first.
You talked about AI being ubiquitous. I'd say the bubble concerns around AI are also rather ubiquitous. When we think about the path forward for new technology and transformative things like AI, I think it's important to have a framework and to ask ourselves those key questions. And also to look back on history at previous bubbles to help us understand what are the key things that we should be watching. The first one that you mentioned is overcapacity and the amount of spending. You see new headlines about data centers each and every day. And this is where I think looking back to the dot-com bubble is particularly informative. In the late 90s, there was nearly 40 million miles of fiber that was installed to support the internet. And by mid-2001, about 1% of that was actually being used. It was supply in search of demand. The AI story couldn't be more different. If you look at data center vacancy rates, it's at historic lows, 1.5%. And for all of the headlines about new construction, 3/4 of the capacity from that new construction is already pre-leased.
Well, that is materially different. In the year 2000, we did see a tremendous amount of overbuild in anticipation of demand. And we actually see now is the opposite, that we are building and still unable to meet what feels like an insatiable appetite for power, for processing. Let's talk a little bit about leverage then. What we've seen in recent years is the majority of spend within the artificial intelligence ecosystem has been
the exuberance that we saw in the late 90s. The other important dynamic that I think is really important is that while these companies have seen tremendous gains in their stock prices, multiples have actually come down in recent years. And that's because earnings growth has surpassed even that capital appreciation. We think that these multiples are justified as long as that growth trajectory can continue, and we're confident that that will be the case.
So we spent a lot of time talking about the capital markets. Let's talk a little bit about real life. Let's talk about Main Street. One of the other concerns, if you will, is the disruption to the labor force. I'm sure that there are many people on the call today that have kids that are either entering or about to enter the labor force, and there are these concerns about what is the job market going to look like tomorrow, and how different will it be from the previous decade?
Yeah, I think the job market is going to adapt, and the labor force of the future is going to look different from the labor force of today. We think this is likely to happen in two phases. Initially, with a lot of the focus on automation, greater productivity. Certainly there are going to be industries like customer support, like coding, that are likely to be under pressure. But at the same time, you have this critical infrastructure, whether it's related to power, cybersecurity, where new jobs are going to be created right away. Longer term, the next phase of this is about growth and imagining the unimaginable. When you think, we were talking earlier about the internet boom and the fact that when we were first looking at this bubble, nobody could have anticipated that today there would be 67 million content creators taking advantage of the internet. And that doesn't even include our own social influencer, financial influencer, Grace Peters over here.
Let's not bring Grace in quite yet. So in summary, you recognize that the trend that we've enjoyed for the last couple of years is likely going to continue. Now, ultimately, what that means in terms of capital market returns, what that means for the labor market is something that we're still going to have to wait and see how it plays out. Grace Peters, our co-head of Global Investment Strategy based in London. Thank you very much for joining us today. Thrilled to have you. You've spent a lot of time matching investment opportunities with this megatrend. So when you think about how to best capture or participate in some of this growth, where do you start the conversation?
Yes, I mean, we have to say that we're in a new phase of AI here. We're at the phase where adoption is ramping up. I think the technology is proven. And when that comes to the investment opportunities, we really like to invest across public and private markets. Public markets, because that's often where the strong balance sheets, the cash flows that you guys have referenced already exist. And private markets, because I think many of the AI opportunities, they aren't yet evident to us. They don't necessarily exist. So we tend to employ a sort of a four-point approach. The first still does start with the hyperscalers. So we're talking about the large cap tech players, the Amazon, Google, Meta and Microsoft of the world. And that's because the market has consistently underestimated the capex that these hyperscalers need to invest to meet demand. And by extension, the market has consistently underestimated the earnings growth. And we think that that earnings growth can continue at around a pace of about 20% per year over the next couple of years. So the short to medium term, I think, still favors these hyperscalers to capture the benefit of cloud and AI infrastructure as well.
If I could get you to spend a second longer on that earnings growth conversation, Steve was talking about how the equity markets are likely to continue to trade up over the course of the year and that he's not concerned about valuations. Is it because of this disproportionately high kind of rate of earnings growth?
For sure, this is a part of it. I mean, this collection of companies, the large cap technology names, have driven earnings so far, while the rest of the market has been more stagnant when it comes to year-over-year earnings growth. And whilst we do see a broadening theme in the year ahead, I think that the technology companies are still going to deliver that double-digit earnings growth that will power the market, power the US equity market. So an allocation to AI, I think, does start there, but it doesn't end there, because the next theme to us really is power. Because to power the data center build out and to power increasing GPT usage, if we think about the power of ChatGPT 5 versus version 3, you're already using a 2.5-fold increase in power. And this is really weighing on a system where power infrastructure is already old. And so power to us is the next leg of the theme. And what's really interesting when it comes to the positions that you take in the equity market in order to invest in the power value chain is that it's a very different exposure. You're then looking at utilities, which actually trade at around a 15% discount to the S&P, and therefore you're starting to get more attractive valuations. You'd look at industrials as well as part of that value chain. So then you're actually adding really nice complementary exposures that are still geared into AI and the development of AI, but in a more diversified way.
It's unique. I don't know, it feels almost ironic that one of the better ways of investing in this cutting-edge technology in the world of tomorrow is in something as basic as utilities.
For sure, but I think that's the appeal of the sector, really, that it's a sector that hasn't delivered much growth, but now I think is poised for a step change in top line and earnings growth, and with a valuation opportunity as well. So that would be my second way of investing. The third is then to go back to the opening words that I say that we're entering this new phase of AI where we're seeing increasing adoption. At least 10% of the US economy is using AI day to day to generate goods and services, and actually that number could be even higher. So now we're seeing AI propagate across all sectors, and within that there'll be companies that can deploy the technology not just for efficiency, but the really interesting thing will be to observe the companies that are using it to generate incremental revenues and to sustainably grow market share, whatever sector they sit in. So that would be my third bucket. And what tells me that this is not yet priced is the fact that there is still a really strong dialogue around corporate margins and a big fear that margins will pull back from what have been levels because they've been elevated. They've climbed. But I actually think that because of this adoption of AI, corporate margins could be more resilient across the board. But that healthy debate is part of what tells me that this third leg is not yet priced.
I've observed over the last several years that shareholders have been very tolerant of management companies deploying capital into artificial intelligence. Do you think that in 2026 we will see more shareholder demand for descriptions of what the return on those investments have been?
I think no doubt. I mean, look, the large cap technology companies, their business model is shifting. They're moving from capital light to capital intensive, and companies across the board, I think, are in this phase now where there is real FOMO, fear of missing out, because you don't want to be the number 2, number 3, number 4. You do want that first mover advantage. But I think coming with that, there obviously will be accountability for technology players, but players across the board, because otherwise that capital could have gone to share buybacks or dividend growth, i.e. shareholder returns. So, but for now, for this part of the J-curve, it makes sense to invest. And I think so that they would be the first 3 pillars. The fourth would be in private markets. Private markets, we know that companies are staying private for much longer, and that is particularly the case in the technology sector. So now you're seeing an average tech company would stay private for 14 years. That used to be 8 years. And when you look at the 10 largest players in private markets technology, they're worth $1.5 trillion. So there's a huge amount of opportunity there. There's also risk because there's a lot of, cash, dry powder flying around. So as always, in private markets, you do need to be selective. But I would definitely have an inclusion of privates when it comes to accessing AI.
So let's broaden the conversation out a little bit beyond just specific to artificial intelligence, but the impact that it might be having on equities around the world. So when you think about equity returns in 2026, we've already mentioned potential double-digit returns, the potential for double-digit earnings growth. How much of this is attributed to this megatrend of artificial intelligence?
A decent amount. I've mentioned 20% earnings growth, we think, out of the US large cap tech players for the year ahead. But, I think there is this broadening theme with some of these other sectors. I mean, there's 5 sectors of the S&P that we like. I've mentioned some of them in technology, utilities and industrials, but also financials and parts of the healthcare market. And so altogether, I think that you could be moving from a period driven primarily by tech where S&P earnings that historically have been around 7% per annum could be more like high single-digit to low double-digit returns, which would be, a new era of growth for the equity market, and most importantly, would compensate for some of the valuation. Said differently, you could still see equity market valuations fall and equities rise 7 to 10% per annum because of the underlying earnings dynamic. So our price target for the S&P specifically over the next 12 months is 7,300. That's just shy of a double-digit return, and it's a similar return around the world actually in the developed market. So yeah, positive.
It's important that we point out how unique that is. This would be the 4th year of double-digit growth for the equity markets, which is certainly something that we don't see very often. Now, if we are right in that expectation of continued economic activity, which is positive around trend growth, that we get positive equity market returns as well, Does that bode well for the credit markets?
It does. I mean, many of the dynamics are the same. And broadly, we are talking about large cap equities here because of the strong underlying balance sheet that they have. But I think all of this, whether it be in equity or credit markets, yep, we're constructive there. We think that the yields are attractive. But all of this is indicative of the fact that, I think you are seeing increasingly economic value flow to capital rather than labor, which is good ultimately for owners of risk assets.
Excellent. All right. So I sense your optimism for the capital markets as well as the economy. Our title of our outlook this year is Promise and Pressure. I suppose it is this optimism that is the promise component. Now let's spend a second on the pressure, namely the idea of global fragmentation. I'd be curious to hear, what is it that you mean when you talk about fragmentation? Is this just a continuation of some of the trends that we've seen in previous years, or is this something different altogether?
No, I think there's a real sense of change that's coming about at the moment with countries really looking inward. And this really means that they are prioritizing self-sufficiency, security, and there are many issues around national security that I think are in focus, from trade to immigration to energy security, supply chain, and critical components and minerals as well. And whilst there's certainly been catalysts that have played out through 2025, I don't think it is a brand new theme. I think actually you can go back to my previous comment about how increasingly you've seen economic benefit flow to labor, to capital rather than labor, which has caused some disenfranchisement amongst voting populations that we've seen play out over a number of years. Of course, the COVID pandemic caused supply chain vulnerabilities to come to the fore. So security overall is another huge theme for us, along with artificial intelligence. And it's not just, again, a US theme from 2025. This is undoubtedly global, because the theme of economic nationalism is also prompting a strong fiscal response. And so when you look to areas like Germany, very strong, government direction of capital with the infrastructure bill and defense spending. And this, I think, is going to see, as an example, German GDP be pretty close to US GDP by the time you get to 2027.
That is remarkable. And it does feel like it is permeating beyond just the national area, but also at the corporate level. JP Morgan, for example, has just launched our $1.5 trillion security and resiliency investment plan. And so you're seeing it take place in multiple levels. Now, what does that mean from an investment opportunity when you think about security and the investment in security around the world?
I think there's two things. The first thing is the spread of growth. So as governments are playing a firmer hand in the economy, and corporates can obviously sort of follow suit and potentially benefit from that, you're seeing growth being spread more evenly around the world. And the example I'd give was as an example, US and Germany. The second thing is, again, when you think about the investment opportunities, this speaks to industrials, infrastructure, and real assets. So again, you're seeking out from fragmentation opportunities, new opportunities of growth, where the economic value is going to accrue to the shareholder. So
now we've seen some of this fragmentation already play out. And when you think about the year that is ending now, this is a year characterized by the flight from the dollar. You've seen the dollar decline. There was concerns about treasuries. And so when you think about what is taking place today, is that a trend that you think will continue as well in terms of dollar decline?
Yes, I mean, the dollar really has been the vehicle through which the market has priced a lot of this fragmentation risk, and even deeper than that, concerns over deficits, over trust in the institution. And that obviously is what's led to what for many of our euro and sterling based investors has been quite a painful leg down in the dollar through the course of this year. Obviously, elements of that are going to continue. I think that the big overvaluation of the dollar has already played out. The worst is behind us. There could be, over the medium term, still a drip lower in the dollar, but I think if we look to just 2026 and the cyclical backdrop that we see, and you alluded to this, Clay, in your walk up to some extent, we've got growth that we think in the US is actually going to re-accelerate in the first half of the year. You've got inflation that could stay warm, and a Fed that, whilst it's cutting, may not cut quite as much as the market think, that would support interest rate differentials in the favor of the US. So our thought is more cyclically that the dollar is going to be in a period of consolidation now, but the longer term themes that we're talking about in this chapter of the outlook, I think still are in play, and still does very much prompt, say, a flight to gold, where I still think there's more upside, and indeed the diversification angle.
I want to hear more about gold, but let's wait for a moment. The last several years, as the world globalized and as the supply chains became more linear, you saw many market participants simply invested in the United States because you could benefit from growth taking place all around the world by investing in the United States. Do you think that next year we will have to be more diversified internationally because of some of this inward move that you've described? To participate in the growth in Germany, will you have to make investments locally, or do you think you could still do that via supranationals?
I think that the multinationals in each region, I think, are still a really sound place to go because typically they have the quality balance sheets that we want, we seek, and that we spoke about before. But I do think that it's going to be a really sound philosophy to be far more intentional about how you diversify. And a lot of this, again, speaks to clients that have got different funding needs, different currency needs, that I think that the geographic diversification piece is going to be even more important. And, we've mentioned Europe a few times, but there are equally very sound opportunities when we look to emerging markets that are emerging from a decade of underperformance. And even in areas like China, when we think about, how their economy is changing, China's going to see more revenues out of technology than it is out of property and construction combined. So some really quite fundamental changes that are arising from governments directing capital and economies responding.
Excellent. So this idea of fragmentation, should it continue, is likely something that will compel us to think differently about the way that we construct portfolios in 2026 and beyond. Let's talk a moment about inflation, the third of our megatrends. This is also something that might compel us to think differently about the way that we construct portfolios. Steve, it was only a couple of years ago that you couldn't find inflation anywhere throughout the developed world. Now, post-pandemic, that experience has been a little different. Talk to us about that evolution of inflation and why it is the concern that it represents in portfolios today.
Yeah, I think a lot of the trends that we've been talking about, whether it's increasing fragmentation, greater fiscal spending, some of these imbalances in markets, the reversal of the globalization trends that was all about efficiency, mean that we're probably in an environment where the floor on inflation is higher and the volatility of inflation is going to be greater. Now, that has a meaningful impact in the way that we think about portfolios, because traditionally in a world where inflation wasn't a concern, a traditional stock bond portfolio could do a lot of the heavy lifting. You could allocate to stocks for growth, you could allocate to bonds for income and diversification. But as we've seen over the last couple of years, in a world where inflation becomes a bigger risk, then perhaps bonds aren't going to be able to play that same role in diversifying your portfolio.
Now, talk to me about the level of inflation. So in this moment post-pandemic, it reached almost 8%. This was while a lot of market participants thought that inflation would only be transitory, and it has proven to be anything but. Right now, current level of inflation, and what is the expectation for 2026?
Yeah, we think inflation is going to move from, right now it's sort of in that 2.5% to 3% range. We think it gradually begins to come down. Our view for 2026 is 2.25% to 2.5% here in the U.S., probably a little bit higher in the front end of the year, a little bit lower in the back half of the year as some of the tariff impacts begin to wane. Now, one of the things to remember, we often think about inflation and we think about the risks associated with inflation. Inflation, if it's stable, if it's not too high, is actually a good thing. It contributes to pricing power, it contributes to nominal economic growth, and it contributes to earnings. And so when you think about that 2.25% to 2.5% range we're looking for next year, it's kind of a sweet spot because it supports that growth, but it also gives the Fed cover to continue easing, and we think we're going to see 2 more cuts in the next year.
So many have characterized inflation as the great confiscator of wealth. As you point out, that's not necessarily the case, but just the same, as you think about building portfolios in 2026, as you think about opportunities which might protect you from some of the impacts of rising prices, where do you begin the conversation?
Yeah, if inflation is the bigger concern, then we think you need to change the playbook a little bit in the way you think about diversifying your portfolio. Specifically, you want to look to things like real assets, gold, and infrastructure as potential ways to hedge against some of those inflation risks. And importantly, these conversations that we're having now are not just tactical views about the next 6 to 12 months, but rather more strategic conversations in a world where we think inflation will be structurally higher.
Grace would like to talk about other alternatives within the portfolio? You've spent a lot of time talking about gold. You've mentioned it a couple of times in this call as well. Do you think that that will continue to represent an important part of the portfolio?
I do, Clay. I mean, it's hard to believe, isn't it, after a 50% rally this year that followed already an up year in the prior year, we're looking for another 30% on gold, so that'll take us to around $5,200. And why is that? It's, feeding into a lot of the things that Steve said. What's missing from the portfolio if you just, have the stock bond starting point, which is a great starting point, but I think can be enhanced. We are looking to lean into uncorrelated returns, or at least less correlated returns, and hedges for many of the issues we've discussed, for elevated deficits, for mistrust in the institution, including the Federal Reserve. And I think gold really satisfies that request, not just for many of our clients, but actually for many of the central banks and significant institutional allocators of capital. So we've seen some of that play out already. That's obviously what's driven the gold price higher, and the supply of gold is so tight that small changes in demand can drive it quite meaningfully. But consider that when we look around all of the EM central banks, 16 of them still have below a 10% holding in gold. China's now up to 9%, and that compares and contrasts with a European central bank that would be at 15 to 20%. So whether it be central banks, institutions, or sort of private clients via an ETF, I think gold can still move considerably higher.
That's interesting because this is not out of concern that you're describing this rally. This feels almost more structural and independent of some of the market moves.
Yes, I think that's absolutely right, and it's a natural way to think. Whilst I like the US equity and economic story, if there's a lot of dollars already in a portfolio, what's a natural, thing to bring in to increase diversification? It's gold. But it doesn't stop there. I think there's other things we've mentioned, infrastructure as well, but I'd also consider hedge funds, and specifically macro and relative value hedge funds. And I think, again, this is a great sort of simple step to enhance the overall portfolio volatility and correlation benefits.
So whether you call them alternative investments, non-traditional investments, it feels like this is the area in which we're looking to expand the toolkit within a portfolio. Perhaps real assets, commodities, non-correlated hedge funds, infrastructure investments. It certainly is a bit of a change in the way that one would build a core and diversified portfolio. So with that, let's wrap. We expect a year of promise and pressure in 2026, one characterized by positive economic growth, higher equity markets, lower interest rates, and perhaps higher and volatile inflation.
Direction things would have to head.
News when you want it with Bloomberg News Now. I'm John Tucker.
And I'm Karen Moscow.
And Karen, let's start with the latest developments to end the war in Ukraine. President Trump says Ukraine and Russia are, quote, closer than ever before to a peace deal. But he also acknowledges that negotiations could still break down and leave the war dragging on for years. Trump spoke yesterday as he hosted the Ukrainian President Volodymyr Zelensky at his Florida resort.
I really believe we're probably, Mr. President, by far closer than ever before with both parties. We had some times when he was close and President Putin wasn't. Then we'd have President Putin was close and he wasn't. You saw that in the White House. But I think they both want to see it happen.
We get more on the meeting from Bloomberg's Rosalind Matheson.
Zelensky and Trump had what seemed to be a pretty productive conversation from Donald Trump's point of view, at least warm words afterward. So progress on those areas, perhaps on the role and size of the Ukrainian military after a war, and some understandings around the Ukraine economy, including the trade arrangements with the US. But not a lot of progress on the really biggest issues, the stickiest ones, and there it seems still we're quite away from getting a full agreement, and one that certainly Ukraine and Russia would sign off on.
Bloomberg's Rosalind Matheson says Volodymyr Zelensky says he asked President Trump to consider the possibility of providing his country with security guarantees that would last 30 to 50 years.
Well, John, President Trump has another high-profile meeting on the docket as Mar-a-Lago resort in Florida. He's scheduled to meet with Israeli Prime Minister Benjamin Netanyahu this afternoon. The two aim to boost a U.S.-brokered ceasefire in Gaza, which faces challenges as it looks to move into a more complicated second phase. That phase involves rebuilding Gaza under international supervision, creating an international security force, and normalizing relations between Israel and the Arab world.
China kicked off military maneuvers around Taiwan that it said included live-fire drills. It's a dramatic show of force after the U.S. announced one of its biggest arms packages ever for the self-run democracy. China has vowed to take effective and strong measures to safeguard national sovereignty, as they put it. On Friday, it unveiled largely symbolic sanctions against 20 U.S. defense companies and 10 executives.
John, a powerful winter storm is sweeping east across the U.S., bringing a dangerous mix of snow, ice, rain, and high winds. And we get more with Bloomberg meteorologist Craig Allen.
More than a dozen states with some kind of alert or warning for a winter storm that is near the Great Lakes and very powerful in moving towards the St. Lawrence River Valley. We have blizzards across the upper Midwest, very heavy snowfall in portions of the Great Lakes. There is snow falling around Chicago. Strong winds, damaging winds all the way down through the Central Plains and the Tennessee, Ohio valleys into southern sections of the U.S. And in the east, big lake effect snow just downwind of the lakes in New York State. There will be snow in portions of New England. In fact, ice storm warnings for some sections of New York, Vermont, as well as New Hampshire. From Boston on down to New York City and Philadelphia and Washington, there will be some heavy rain showers during the day today, and then followed by some very cold, gusty winds.
And that's Bloomberg meteorologist Craig Allen reporting. We'll be checking in with Craig throughout the morning.
And let's turn to the markets now, Karen, where futures, they are mixed right now, mixed a little change as we begin the last trading week of 2025. Still, stock averages hovering near all-time highs. Robert Teeter is the chief investment strategist at Silvercrest Asset Management.
My base case for next year is that we do see very solid earnings growth, so kind of low teens earnings growth, maybe a little bit of multiple compression, though. And part of that's just going to be a factor of some of this rotation. Maybe you get a little bit of pressure release valve out of the mega caps that have been so strong, and I think strong for good reasons. But as you get some of that rotation, multiples might come down a little bit. So we're looking for high single-digit gains from equities next year, powered by double-digit earnings gains.
Silvercrest Asset Management's Robert Teeter. So far this year, the S&P 500 up almost 18%. The NASDAQ is up 22%.
Well, John, we're also seeing a volatile session in the commodities markets this morning. Silver and gold now lower after rising to records earlier. We get more with Bloomberg Markets reporter Valerie Teitel.
Today, we're seeing some of the air come out of Friday's blistering rally. Silver was up 10% on Friday, the biggest one-day move since 2008. If you look about the month of December, it's had the biggest one-month change since 1979. I have to go all the way back to the inflation days of the 70s to see a similar rise in silver in 1 month's time, up near 40% just in this month. This morning was a quite a pronounced volatile session. Essentially, silver moved 11% in an hour. It opened.
And if so, how do you time this?
Yeah, it's like some of the key kind of indicators to watch out for is, will small businesses really start to pick up the hiring pace? Is that something that we can kind of keep a real-time assessment as we go through the course of the beginning of the year? We are concerned about a potential head fake. At the beginning of the year, probably we'll see benefits from the fiscal policy that was put in place with the big, beautiful bill. But then will that be sustainable into the second half of the year? That's really the big question.
Yeah, I've seen several notes, including yours, George, mentioning the World Cup as a catalyst for first half growth, GDP in particular. That would certainly help specific hosting cities, but how meaningful would that impact be in aggregate?
Look, it's hard to kind of quantify specifically, but look, next year you have the hallmarks of a potentially pretty exciting year. You have the World Cup, you have the U.S.'s 250th anniversary. I'm sure that between up until at least 4th of July, I think that it's going to be kind of a buoyant sort of spending pattern amongst U.S. consumers. The question is, is it concentrated? Will it kind of even out over the year? And I think those are the big questions to kind of think about.
You also have the midterm elections, and we know that midterm election years tend to be high growth years. As with everything else, investors do tend to price in the benefits before they actually filter through the economy. Where is this going to be most apparent? Is it going to be in equities, in treasuries, in the dollar, in commodities?
Yeah, look, this is interesting because a lot of these sort of views, I think, are largely priced in, to your point. The dollar was weak this year, but most of the weakness came at the beginning of the year, and we've been basically going sideways. The movement in precious metals has been off the charts. Stocks, continue to grind higher. Now, if a lot of that was capturing the news of both the Fed pivoting towards more easier policy, a lot of that's kind of baked in the cake. And so the question is, what's the follow through? I think that it's going to be hard to meet some of these expectations.
Last time you were on, it was in early November. You were on with John and Lisa, and you were talking about the market internally starting to look exhausted and ripe, at least for correction. But here we are, December 26th, and we had on Wednesday before Christmas a 39th record high when it comes to equities. Do you think we could see a meaningful recalibration in equities in 2026?
Look, in between, nothing's linear. We did have a minor correction or a minor pullback, I should say, in November before Thanksgiving. And then since then, it's been off to the races. Very typical of the end of the year type rally. Also very typical of a low vol environment. We have had, the VIX very low, rate volatility declining. All of this has kind of engendered further risk taking. We do think that, there's going to be a meaningful correction at some point over the course of 2026.
When it comes to how you're thinking about the Federal Reserve, you say a lot of this is baked in. When you say baked in, do you mean one more rate cut or two more rate cuts?
Look, so the market has about 1.5 to 2 cuts basically in the back of their mind, priced in into the forward curve. It's actually visible. We think it's all about the sequencing. It depends on what takes place, who's pulling the actual rate cuts forward. Is going to be under Chair Powell's kind of last few meetings. We think maybe one more cut under the current sort of Fed. And then in the future, we don't know. I know there's been a lot of questions about Fed independence and will the Fed cut for the right reasons or for other motives. Either way, we think that the Fed's going to probably cut further than what's priced into the market. But if they cut for more than 2 times, I think something has a change in the macro sense. So if the Fed's cutting more than twice next year, something's kind of weakened in the economy that justifies it.
Yeah, your view is that the Fed will cut rates 3 to 4 times in 2026. And of course, it is expectations of lower rates that's helping to support those commodity prices, gold and silver prices in particular. What is different, George, about gold's run this time versus, say, in October when it peaked at about 43.81? And a lot of people saw that run up as overheated.
Look, I think the whole year precious metal move is something that is very telling of there's a view around the commodity needs for sort of the new technology and the new economy that's evolving. But I think it's also a referendum on sort of Fed policy. The Fed did go from basically not wanting to cut, pivoting towards cutting, stopping QT, and then introducing a version of not QE but reserve management, which is going to add a lot of liquidity into the banking system. So I think the precious metals definitely picked up on that way earlier than other markets.
Yeah, you could also argue the precious metals are part of that debasement trade, too, where people are straying away from the dollar and treasuries and moving to precious metals and indeed Bitcoin as well, although we haven't seen crypto really participate in this leg of the rise in gold and silver. How do you fit Bitcoin and what's happening in that speculative part of the market into your overall thinking?
Look, so obviously, I look at crypto or these sort of alternative assets more from the lens of the macro, what it's telling us about liquidity more in general, and the preferences amongst liquidity. The fact that it's going into kind of harder, more of the older sort of precious metals versus the new age version of digital gold. I think it's telling you something, that there's a preference to more safety versus what is still unproven sort of technology of how long it's going to last and what's the true valuation of Bitcoin. It's not something that's in my wheelhouse, but in general, it's telling you from a macro sense that there's a preference for kind of the more traditional forms of alternative assets.
We've seen the entire commodity space, though, lift higher. Copper has been on an absolute tear as well. When it comes to the concerns in the commodity space, the physical commodities that are used across supply chains like silver and copper, there's some concern that potentially we'll get more tariffs in 2026. How are you thinking about trade policy, given there's some key dates coming up when it comes to this administration and some of the trade policies they've enacted in 2025?
Obviously we're still waiting on a number of sort of key information, but we do know that tariffs obviously are a key sort of platform agenda item that's not going to go away. So there's a baseline of expectations around tariffs, and then the question is, do we get more sectorial tariffs, as you're alluding to? We do think that this full impact of tariffs is not just an inflationary sort of phenomenon, and maybe it's run its course there. We don't know. But I think it's more about the sort of impacts and indecision that it does on planning, especially around the sort of input items like commodities. So I do think that trade policy will have an impact on that side of things as well.
Does it complicate potentially corporations and whether or not they are going to and when they may pass on more of these costs to consumers?
Well, look, I think that what we've noticed thus far is just a sort of hesitancy to kind of pass through fully the tariff effect, and profit margins have been kind of absorbing some of that. I think there will come a time, and I think we're getting close to that point, where companies will not be as generous in absorbing these sort of profit costs, and they're going to try to pass it on to the consumers. Now, if it's towards the industrial sort of mid-production, business to business sort of inputs that they're assessing and seeing if they can negotiate with their partners, maybe they can pass on some of it. But if it's to the U.S. consumer outright, I think that they're going to have a challenge to do so, and it's going to eventually have to hit their margins.
George, thanks so much for joining us this morning. Hope you had a lovely Christmas. George Goncalves of MUFG. So, since he mentioned World Cup, or you mentioned World Cup to him, I was totally distracted on StubHub and Ticketmaster because I've been tracking these tickets, and still, to see the final could cost you anywhere between $12,000 to $90,000.
Depending on who plays. Yeah.
A ticket. Who's buying these, please? So you got me a little depressed this morning because I thought maybe at some point I'd be able to go for the final match.
You have to have already, put a bid in for that at this point.
Yeah, definitely. All right, let's get you an update on stories we're watching elsewhere this morning. Here's your Bloomberg Brief with Yahira Anand. Hey, Yahira.
Hi, Anne-Marie. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Donald Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. Meanwhile, holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. Forecasters are expecting up to 8 inches of snow from Friday afternoon through Saturday, and New York City is issuing a travel advisory for the duration of the storm. And Tesla facing renewed scrutiny over its door handles. The National Highway Traffic Safety Administration said it's evaluating claims that the mechanical door release is, quote, hidden, unlabeled, and not intuitive to locate during an emergency. The move expanding the federal examination of Tesla's doors following an investigation by Bloomberg. That's your Bloomberg Brief, Anne-Marie.
My problem is sometimes I just can't find the door handles. All right, that's for another conversation. Up next, Ukrainian President Zelensky saying he will meet with President Trump soon as Kyiv and Washington look to align on a peace plan. Ed Mills of Raymond James joins us next for that conversation, a whole lot more. You're watching Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. It is the day after Christmas. Hope you had a lovely holiday, however you were celebrating, preparing from the tri-state area for potentially up to 8 inches of snow. Where we are trading this morning is obviously very thin volumes. We did have, though, another record high in the S&P 500 on Wednesday. In the shortened trading day, S&P 500 futures are unchanged this morning. 39th record high we had on Wednesday. 10-year yield up about 2 basis points, 4.14%. Silver, oil, gold, copper, the entire commodity complex has been moving higher. Silver, $74. At one point, it passed $75. Scarlett and I have been talking about this the entire week. There's geopolitics at play, there's central banks buying, and also there's just the fact that things like silver and copper are actually used in the physical world.
Yeah, absolutely. So there's a lot of demand. There's a question about supply, especially when it comes to copper with some outages across mines. But in addition, you've got the weak dollar. And so when you have a weak dollar, the knee-jerk reaction is higher commodity prices. And we've seen the U.S. dollar, at least as measured by the Bloomberg Dollar Index, down about 8% this year.
Yeah, absolutely. It's been on a downward trend and potentially going to go lower next year. Under surveillance this morning, Ukrainian President Volodymyr Zelensky saying he plans to meet with Trump in the coming days. Zelensky signaling a lot could be decided before the new year after a Christmas Day sit-down with U.S. envoys Steve Witkoff and Jared Kushner. Ed Mills of Raymond James joins us now. So, Ed, you do have Zelensky looking like he's going to be going over to Florida, Mar-a-Lago, where the president will be for the remainder of the Christmas, New Year holiday. Do you think potentially we could get a deal before 2026?
Anne-Marie, it's possible. I think that there is probably more to work out on the Russian side. I think Zelensky is trying to find what he can get with the American contingent here, because I think he wants to put pressure on Putin. Right now, the 20-point plan that Zelensky and the Americans have agreed to is probably unacceptable to Putin. This here is trying to reverse some of the pressure that has come onto him in the recent months, especially that kind of pre-Thanksgiving deadline that the Trump administration had put on him. So I'd say there's going to be progress, but I don't think people are really expecting that what Zelensky and Trump work out will be acceptable to Putin, at least in the near term. We probably need at least one more round of this before things get settled.
Well, as you were speaking, Dmitry Peskov is speaking right now, and he's saying Russia has analyzed the information on the peace plans, according to the TASS news agency. You have Yuri Ushakov. They're saying that contacted U.S. representatives. He's been one of the main negotiators, senior Russian diplomat at the table. And the Kremlin saying it has contacted the U.S. on Ukraine peace plan. Do you think Putin is just playing for time, or do you think they are serious about getting to an agreement?
I think that they are open to an agreement. I think that they are really going to be looking at these territorial concessions. And I think this is really what it comes down to, Anne-Marie, because what is the future of the Donbass region? How much does Ukraine have to fully kind of acknowledge that Russia has kind of certain parts of this territory? How much of it is a demilitarized zone? How much does Ukraine get to control this? How much does Russia get to control this? I think that's the critical issue. The second issue is, even if you kind of create a demilitarized zone, what are the security guarantees? I think that Zelensky and Ukraine are willing to give up more of that territory, at least as a demilitarized zone, if they get those kind of security guarantees. But if there's not the security guarantees, they're not willing to do that. And I do think that Putin is not going to be okay with the security guarantees that Zelensky wants, and are probably not going to be okay with the demilitarized zone. They want more territorial concessions, I think, than what the U.S. and Ukraine are willing to give at this point.
So these are all pretty familiar sticking points, things that have really locked both sides into their respective positions for months now. Ed, what about Europe? Anne-Marie was mentioning earlier, Europe is kind of missing in all of this. And if Zelensky goes to Mar-a-Lago on Sunday, does Europe play any role in this?
They could. I think what we've seen, Scarlett, is that Europe has played a bit of a backstop to these negotiations if they seem as if they are going too far towards Russia, if they are seen as going kind of too aggressive towards Ukraine. There are kind of key constituencies within Europe that step up. I do think what we're going to see, if we do have a demilitarized zone, how much do NATO or European forces, I would lean more towards European forces, so it's not seen as a specific NATO operation, could be part of that security guarantee in that area. But they just want to make sure that Ukraine is not on the wrong end of any of these negotiations. So they stay out for now, but if it goes in the wrong direction, they step up that diplomatic pressure on the U.S. envoy.
Okay, and of course, we are anticipating a visit between Zelensky and Trump in the coming days, according to Volodymyr Zelensky. I also want to get your take on what happened over the holiday, which is the U.S. launching Christmas Day military strikes in Nigeria against some ISIS targets. And of course, we had known that in November, the president threatened possible military action if the government did not halt the killing of Christians. Talk a little bit about why now and whether this is a one-time action or this is the start of something more sustained.
Yeah, so President Trump has said this is at the request of the government. He does view kind of the defeat of ISIS during his first term as his signature geopolitical kind of military achievement of that first term. To the extent that he is going to have requests and it is against ISIS, I don't think that there's anything that he would hold back trying to go after that group. So I do think at this point, I think you would consider this as contained. But if there are other needs, he's absolutely willing to do this. It is unusual to have strikes under the Trump administration. He so far has been fairly limited in how aggressive he wants to be with some of that proactive military use. So that was keep me more in that contained camp versus this is the start of something new.
Well, at the same time, Ed, he did promise on the campaign trail to not entangle the United States in any more foreign conflicts. Is this going to be a problem with his base when it comes to the midterm elections?
I think as long as it's specific, it's targeted. I think it is kind of couched in we cannot let ISIS kind of reconstitute or kind of get stronger in any sort of fashion, Anne-Marie. And also the fact that he would probably kind of couch this in the targeting of Christians, something that from a political perspective is in a pretty decent standing. That's why I did say that I think this is probably more contained than a start of something new. Something that he has done quite well with his base is trying to maintain that contained military conflict. And he has kind of ticked off more of the items that he has negotiated. Peace between kind of Israel and kind of the conflict in Gaza. Other kind of areas where he's working on with kind of Thailand, Cambodia. He has his whole list of things that he has stopped globally. So containment is the base case here, but he also always wants to project U.S. strength. And so he's not going to be shy if he's requested and it is needed.
What's going on with U.S. strength in Venezuela? It's been 6 days that the U.S. continuously is trying to pursue this sanctioned oil tanker that's linked to Venezuela. Do you see as the administration just trying to control the sanctioned oil, or do you think this is part of a bigger regime change?
Yeah, Emery, what I've told clients at Raymond James is this is part of a reestablishment by the Trump administration of the Monroe Doctrine. I do think that we are looking at kind of North and South America as America's sphere of influence. I also think this is a bit of a shot across the bow and a warning sign to Mexico. And to the extent that the drug cartels are the kind of underlying issue here, I think that this is a warning to Mexico, where he has already labeled the drug cartels in Mexico as terrorist organizations. If President Sheinbaum does not get that under control, he's willing to take additional action. I think the big debate that I've had with clients at Raymond James is that to the extent that we are reestablishing our sphere of influence, is that going to make it harder for us to push back as Putin wants that more territorial concern and what his former sphere of influence is? Is it going to be harder to push back against Xi if he gets more aggressive against Taiwan? So in near term, that's a projection of strength by this administration, but it could have significant unintended consequences on the geopolitical stage.
Ed, as we wrap up our conversation here, you talked about your clients and the debates that you're having with them. What is the single most important geopolitical meeting you see in 2026 for the president that he needs to resolve?
Oh, 100% it's going to be Trump and Xi. This is the number one and number two economy in the world. The surprise for me in 2025 was how good we are with the relationship with China. If that continues, that's a very bullish signal for the stock market in 2026. If there's volatility, if that falls apart, that's a big warning sign. So tracking China, tracking Trump and Xi, probably from a Raymond James perspective, is the most important thing for 2026.
Ed, thanks so much. We look forward to continuing the conversation next year. That was Ed Mills of Raymond James. Under surveillance coming up next, behind the scenes at Nike.
नेचुरल गैस में यहाँ पर पूरा प्रॉफिट बुक कर सकते हैं, ठीक है। बुक द फुल प्रॉफिट इन नेचुरल गैस, टारगेट इज डन। ये पॉइंट ऑफ इंटरेस्ट यहाँ से रिमूव हो चुका है। काफ़ी देर तक होल्ड करने की कोशिश जरूर करी सेलर्स ने, बट दे आर फेल्ड नाउ। सो ये रिस्की ट्रेड जो था फाइनली इसका हो गया टारगेट डन। नाउ लेट्स सी, इसमें यहाँ पर एक सेलिंग का प्लान होता है तो डायरेक्टली मत करना, ठीक है। सेल थोड़ा सा वेट करेंगे 1 मिनट। बायर एग्जिट कर सकते हैं 630 की कैंडल का ध्यान रखना थोड़ा सा। 630 कैंडल इंपॉर्टेंट है। बाकी क्रूड ऑयल भी साइडवेज ही चल रहा है फिलहाल। थोड़ा सा ये भी ऊपर आता है तो वापस इसमें भी एक सेलिंग का ही प्लान रहेगा। परसों का ही रेजिस्टेंस जोन है, दैट विल बी स्टिल अ रेजिस्टेंस एरिया।
Stock is up 1.7% in the pre-market, but it comes after a roughly 230% run this year, fueled by strong demand for its memory chips used in everything from computers to AI servers. And we end on Biohaven. This stock is absolutely plunging in the pre-market, down nearly 14% now after one of their experimental drugs to treat depression failed to meet its goals in a mid-stage study. Analysts are saying that it's disappointing, but not all that surprising given the complexity in these types of clinical trials for depression. Even so, amid thin trading, we are seeing that amplified move, as we can see. Anne-Marie?
Thanks so much, Yahira. On our radar this morning, Ukraine's President Volodymyr Zelensky saying he plans to meet President Trump in the coming days to iron out details over a potential peace deal. Reports from Ukraine saying Zelensky is expected to travel to meet Trump in Florida as soon as Sunday. At the same time, Scarlett, we are getting some information from Interfax via the Kremlin, and they say at the direction of President Putin, contact took place between representatives of Russian and U.S. administrations, but I don't see Russia moving just yet towards really coming to the table for a trilateral deal.
And I think this is something you touched on in our conversation with Ed Mills of Raymond James, that there doesn't appear to be much urgency on the part of Russia. They can afford to take their time and be patient and wait out the clock, run out the clock, and see what happens. Of course, from Ukraine's side, there's a lot of urgency to get moving, which is why we see Zelensky talking about meeting up with President Trump in the coming days. But Russia can kind of sit back and wait to see how it all plays out before responding one step at a time.
This is something we'll be watching over the weekend and potentially a big story next week as we head into New Year's Eve. Elsewhere, U.S. forces striking Islamic State targets in Nigeria in collaboration with the country's government. U.S. Africa Command saying the strikes came at the request of Nigerian authorities and killed multiple terrorists, with Defense Secretary Pete Hegseth saying there could be, quote, more to come. And precious metals, as Scarlett and I have been talking about all week, really, continuing their surge after notching new all-time highs. Gold, silver, and platinum all jumping to new records on the heels of central bank purchases, U.S. dollar weakness, and this morning, really, the geopolitical tensions we've been discussing.
And I'm not sure that there's anything that will change that in the near term. Certainly the next couple of days, this will continue to be the theme.
And when it comes to gold, it's been up 170% this year.
Yeah.
Silver, 150%, the best year since 1979. And when you look at gold, people are talking about 5,000 next year. We're already at 4,500. So you have to think potentially some people are going to have to look at year end 2026 and maybe actually increase that target.
There's going to be a lot of demand in the new year as well, because you have Lunar New Year, and that's when gold tends to outperform as well. And then the wedding season in India also places a lot of demand for physical gold.
Very good point. As we shed the year of the snake and we go into the year of the horse.
Ooh, you're on top of that.
I'm
nice.
looking forward to this in February. All right, turning to retail, shares of Nike are down more than 20% this year. CEO Elliott Hill has been facing an uphill battle trying to turn around the company he previously retired from in 2020. Bloomberg's Romaine Bostick takes us on a behind-the-scenes look at their turnaround plans.
In the heart of Western Oregon lies a 750,000 square foot plus complex. So secret, few are allowed past the lobby.
If you love sports and you love product, this is kind of Disneyland.
Hundreds of motion picture cameras surrounding an indoor soccer pitch. Speed sensors encircling an Olympic racetrack. Electronic pressure plates embedded in a basketball court. Biometric hookups to assess a runner's gait and posture. A hermetically sealed room that mimics the brutal heat and humidity of a Tokyo summer. All told, more than 800 pieces of testing equipment under the roof of the LeBron James Innovation Center, home to the Nike Sport Research Lab. An evolution from the company's experimental kitchen counter roots and a nod to its future of putting the athlete first.
This is our Nike Sports Research Lab in our Innovation Center, and this is the home to dreamers, creators, makers, engineers, some incredible teammates of ours who are all dreaming about serving elite athlete problems.
Yeah, what Nike as a brand is founded on, really at the core of our history and heritage, is listening to the voice of the athlete, right? Phil's point, we're in this amazing building where we have dreamers building the future and work with not only elite athletes, but the everyday athlete to take those insights and understanding and build not only for the elite, what you've seen being here today, but then are able to translate those innovations through every price point.
Amy Montaigne is the new president of the Nike brand. Phil McCartney is the new chief innovation, design, and product officer, overseeing ideas across the company's 3 units, Nike, Jordan, and Converse. They are 2 of the key players in CEO Elliott Hill's full court press to reinvigorate growth following former CEO John Donahoe's reign. Under Donahoe, it was a tenure that saw annual sales begin to drop in 2024 as demand waned for the brand's lifestyle sneakers like the Nike Dunks and as relationships with retail partners soured. Elliott Hill is now trying to plug the hole with a refocus on athletic performance.
We're going to obsess sports. I think that's been, since Elliott returned, that's been a key part of our charge as a leadership team. And we're already starting to see the fruits. You know, we spend a huge amount of time bringing athletes here. We text with Faith Kipyegon, Elliott Kipchoge, LeBron James. We bring them to our home and then we go to their homes. So the origination for ideas is always the athlete. That's at the core of everything we do. And then we start to think about how do we apply those insights broadly to the 8 billion people who we're trying to invite into sport every single day.
So when it does actually go to market, are you going to target it towards the athlete, or are you going to try to maybe just target it towards the casual wearer?
Everything that we do and the focus on performance is listening to the elite athlete and capturing that data and information to help lead this amazing innovation. So we will for sure be connecting this story exactly to our athletes, which or who helped give us those insights, who we tested with, and that will be how we determine how we tell that story going forward. So it's very much about the insights from the athletes, the data we captured, the innovation we're delivering, and helping communicate that to consumers all over the world.
The reason that we start with elite athletes is when we solve those discerning problems, those milliseconds, micro millimeters, we can create products that then translate down for athletes every day all over the world.
Speaking of the everyday athlete, I put on my running shoes and geared up for an afternoon under the microscope of some of Nike's best researchers for a head-to-toe consultation. I even got a glimpse into the retailer's future with Project Amplify, a footwear system with lightweight motors and rechargeable cuff batteries that aims to help you move faster with less effort. Nike's Chief Science Officer, Matt Nurse, providing some words of encouragement along the way.
So we have an expression, if you have a body, you're an athlete.
Yeah.
And a lot of what we learn from elite athletes does trickle down and help everybody, but a lot of what we learn from everyday athletes does trickle up. There's plenty of opportunities where technology, we have to sort of burn the candle from both ends and figure out where the best opportunity is.
The ethos of the company, and particularly since Elliott has taken over, is put more a focus back on the athlete. I mean, what's the difference now between what you're doing in this building and say what Bowerman was doing, decades ago and, whatever shack he was working out of?
Honestly, today it's just a more modern, sophisticated incarnation of what Bill Bowerman was doing in his lab. This notion of having an idea on how you might improve an athlete performance or protection, actually building it, Bill Bowerman pouring into a waffle iron, modifying a shoe. That's what this building is designed to do, but allow more sports, more athletes, full speed, full motion, but we're solving the same problems, doing the same thing.
A little different this time around. Mounting pressure in the running space, under threat by competitors like On and Hoka. Do you worry at all about some of the recent upstarts that have come into this space, particularly on the performance side, Hoka, On Running, Norda, etc.?
But we have three incredible brands here at the company. We have Converse, we have Jordan, and we have Nike. So I think a lot of the work that we're doing in this new multi-brand offense that we're in is making sure that we intentionally shape the three amazing brands that we have. That allows us to, at certain times, come together to go after an opportunity in the market, but also to be more specific about what each brand represents and the growth potential of each. I think when we think about that, I think it's true. It's fair to say that the distance between ourselves and our potential is a little bigger than the distance between ourselves and our competition.
And we look at innovation not just in product, like Phil's talked about, but how we tell our stories and how we deliver experiences in the marketplace for consumers. And when you think of some of maybe our latest, most innovative marketing concepts, I think back to the last Super Bowl, a male sport at a really important time around the world. And we told the story of So Win through our female athletes, right? We listened to their voice. We're deeply connected to where they were at that moment. And we're able to tell the story of the support of those athletes and what they are doing in the world of sport today. So I think that's one amazing example as we continue to innovate by listening to them where they are, where the world of sport is and sport culture, and then are able to deliver something like So Win.
Amy, I'll give you the last answer here, and this is really on what you want the Nike brand to be, beyond what it already is today.
What I believe and want for the Nike brand is for us to always remember our roots and to honor our founder, to really come in every single day obsessed with serving the athlete, listening to their needs, not only meeting their expectations, but taking theirs somewhere new. And when we do that, there is all the opportunity in the world for our future.
That was Romain Bostic taking us behind the scenes at Nike Sports Research Lab. Let's get you an update on stories elsewhere this morning. Yahira's back with your brief. Hey, Yahira.
Hi, Anne-Marie. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Donald Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. Meanwhile, coastal communities in Southern California are bracing for more rain and flash floods, with a state of emergency still in place for Los Angeles and neighboring counties. The historic storm pummeled the region over the holiday, leading to road closures, flooded freeways, as you can see, and evacuations. According to the Los Angeles Times, at least 3 people have now died as a result of the storm. And Google rolling out a new feature allowing users to replace their existing Gmail addresses with a new one while retaining all their data and services. The updated guidance on email address changes only appears on the Hindi version of Google for now, but it says it will gradually roll it out to other users, to all users. That's your Bloomberg Brief, Anne-Marie.
Yeah, Hira, there are 2 types of people in this world. The people who just let everything start building up in their Gmails. Right now, I'm looking at mine. I have 180,485 emails. What person are you, Scarlett?
I tend to have a lot. I won't say that they're like in the triple digits necessarily, but I have a lot.
Well, I just don't open them and then I just don't delete them. I just let it all build up. I'm not reading, obviously, all of these. All right, up next, a historic rally for commodities.
We see commodities as a way to have an inflation hedge within portfolios, and they work really well when they work well, and they don't work so well a good portion of the time. I think the question is, how much can it continue?
Nadia Martin-Wiggin of Svedlin Capital joins us next. You're watching Bloomberg Surveillance. Under surveillance this morning, a historic rally for commodities.
We see commodities as a way to have an inflation hedge within portfolios, and they work really well when they work well, and they don't work so well a good portion of the time. So certainly we've been in an environment where that has been a very powerful uptrend for a lot of these commodities. I think the question is, how much can it continue?
Here's the latest. Gold and silver jumping to all-time highs as escalating geopolitical tensions boost the historic rally. Bloomberg's Tatiana Daria joins us now. Tatiana, let's end with the question we heard from Cameron Dawson earlier this week. I think the question is, how much can it continue? Can this rally continue?
Well, we have to ask ourselves if the macro conditions and sort of the catalysts that are playing into this rally will continue, and consensus think that they will. For example, the structural bid from central banks, that is expected to persist for years to come as they want to diversify away from dollar assets into gold. And if you look at geopolitical fractions, we keep seeing more of that, right? You have Venezuela. You keep an eye on that one because you cannot rule the risk of boots on the ground there. You see more militancy escalating now in Nigeria. So geopolitics is reviving that premium yet again. But beyond that, you also have concern about Fed independence going into next year. Let's not forget about the Supreme Court tariff decision, which could really upend bonds and rekindle that risk premium if fiscal concerns return, if the administration is forced to issue refunds. So a lot of the catalysts are in place. And if you look at the white metals, they've just recently been added to the critical minerals list, which opens the threat of tariffs going into next year. So these are sort of the big tailwinds that the market has. But of course, we cannot discount the risk of reacceleration in the economy with the Trump administration pushing that tax bill and those provisions kicking in into the next year.
And a reacceleration in the economy would be good news for the industrial metals like platinum, like silver, like copper as well. How are you thinking about the demand that's coming in from ETFs? Because that was a big driver, at least for gold.
Yeah, exactly. For gold, and now they've actually spiked for the rest. So what is being less appreciated or less talked about is that the ETF crowd has also piled in on this trade. And in gold's specific case, ETFs have actually bought more than central banks by some estimates. I only say that because we don't have full visibility into the central bank action. But if you look at the data that we have available, those ETF buyers have bought more than central banks, and they've returned to this market for the first time in the last 5 years. So if you look at the history, that's poised to continue. That's poised to offer another tailwind. But it also leaves this market at risk of just severe crashes when it all reverses, right? ETF buyers and just retail traders can get easily scared by an unwind in this trade. So if you play that trade, you have to be aware that there could be some outsized move on the downside, as we've already seen on Wednesday. I mean, palladium crashed more than 4 standard deviations. That will stress your risk management.
Tatiana, you're going to be very busy, I imagine, heading into 2026. Thank you so much for joining us today. That was Bloomberg's Tatiana Daria. Turning now to crude, keeping it in the commodity space. Oil headed for its biggest weekly gain since October. Nadia Martin-Wiggin of Svenlin Capital writing, the market was increasingly preparing for prices in the 50s before these Russian sanctions and increased political risk in Venezuela short term, while the pain threshold for Trump is likely in the 70s. Nadia joins us now. Nadia, there's three big geopolitical stories with three big producers, Venezuela, Nigeria overnight, as well as Russia. How do you see this all seeping into the oil market?
Thank you. So number one is the concern on the shipping side, because the IEA, all the forecasters have been saying that we've been building supply versus demand into Q4. And even by Svenlin Capital's analysis, we expect those builds to be at around 1.2 million barrels per day, up to 1.5 million barrels per day in the first quarter, while we have extremely high levels of oil on the water. Why is that? Well, we're having a delivery problem. Number one, Russia is struggling to deliver oil into China. There have been sanctions put against individual ports by the U.S. that are being enforced in China. Then we have India again pulling away from buying this Russian crude. When initially we had the Rosneft sanctions and Lukoil sanctions announced, they pulled back, they bought a lot of crude oil, and then they actually reoffered it and started buying Russian oil again under the headline of other barrels. We now saw in the physical market in the last week that they are again buying up other producers' barrels because they're worried about the U.S. We then have the Venezuela side, and that blockade is meaning that Venezuela is unable to export their 1 million barrels per day of crude that they've been exporting. And they're also unable to import naphtha, which they import from Russia, for example, to make that Venezuelan crude liquid enough to load onto a tanker. So this military blockade that's the Trump administration is focusing on rather than strikes is affecting that physical market on the water coming out of Venezuela. Finally, on the Nigeria side, it just reminds the market that there are geopolitical tensions. Right now, there have been no reported outages in Nigerian production. Nigerian production is around 1.2 million barrels per day, but it raises the risks, of course.
Thank you for that, Nadia. So tell us a little bit about gold, because you have something in your note that really caught my attention. We're just talking with Tatiana, who's talking about central bank buying being a source of strength for demand for gold and also ETFs as well. But you talk about Tether and how there's a connection between Tether and the rallying gold.
Yes, so this is where when we think of that crypto world, it's not only looking at the dollar anymore. They're launching gold-backed coins. And this is where Tether, we know in the third quarter, bought around 35% more physical gold than we had the largest buyer, which was the Kazakhstani central bank. So this is when we start to look at that demand side. The new player in town is on the crypto side, and they have an understanding that it needs to be backed. And, we have U.S. treasuries, and then they're behaving like the Chinese central bank that is not only holding U.S. buying program that they can affect on that part. When it comes to the crypto side in Tether, we just think that they will continue buying because comparatively, they have a lot of bandwidth in terms of what they need to build up. When we think about central bank holdings and the Bank of England, they have 660 million tons of gold. The Kazakhstan central bank bought 16 tons, not million tons, 16 tons of gold in the last quarter.
Nadia, thanks so much for your time this morning. Nadia Martin-Wiggin of Svenlin Capital. And of course, earlier joining us, Tatiana, to discuss her outlook on what's going on in terms of the metals. We have another hour prepared for you. Coming up on the program, we're going to be hearing part of our conversation Ed Ludlow had with Jensen Huang, Sarah Kunst of Clio Capital, Eric Kane of Bloomberg Intelligence, plus Aaron McLaughlin of the Conference Board. You're watching Bloomberg Surveillance.
The crowding into those mega cap names has led to crowding out of many other high-quality blue-chip names.
Balanced portfolios make a lot of sense heading into 2026.
It could be in an environment where we're still able to carve out new highs.
Earnings are going to be what drives stock prices.
We want to make sure we're managing risk well
next year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, 7 o'clock in New York. Welcome to Bloomberg Surveillance. I'm Anna-Marie Hordern alongside Scarlett Fu this morning. Jonathan still on paternity leave. Lisa is off. We are having a quiet morning on Wall Street, at least that is. It is not so quiet in the world of geopolitics. Last night, the United States launched a military strike in Nigeria against ISIS targets. The administration is also still in pursuit of a Venezuelan-linked oil tanker. They've been in pursuit of that tanker since Sunday. And Ukrainian President Volodymyr Zelensky says he plans to meet Trump in the coming days. Scarlett, this meeting could be as soon as Sunday.
As soon as Sunday, and of course, Ukraine has more incentive to get this done quickly, whereas Russia can afford to sit back on its heels and wait it out. And indeed, that's kind of been what's been happening for the last couple of weeks and months. You mentioned the strike that the U.S. did on Nigeria, northwestern Nigeria. And of course, this is the latest U.S. military campaign against a non-state adversary because last week, as you know, the U.S. launched a large-scale airstrike on more than 70 targets across Syria in response to deadly attacks on U.S. forces.
And all of this at the same time as they are still in pursuit of Venezuelan-linked sanctioned oil tankers. I believe this one was coming from Iran. They have not been able to get this tanker just yet. They still are in pursuit of it. They've been in pursuit since Sunday. And what's interesting is all these stories are moving one part of the market, and that's in the commodity space. Potentially, individuals are going to places to hide, like precious metals, like gold, which we've seen be on an absolute tear this year, but also oil. But what's so interesting about oil is when you think of Nigeria or Venezuela, potentially that would mean the price should strike higher. More pressure. But if President Trump and Volodymyr Zelensky are really on the cusp of a peace deal, and Russia potentially would come along, and you make a great point. At this moment, it doesn't look like Russia right now is going to come along with this peace plan, but actually that would mean direction of travel lower for the oil market.
Right. So the geopolitical tensions are basically keeping oil right where it is. And the backdrop to all of this, of course, is there's plenty of supply. There's no shortage of supply thanks to OPEC.
Yep. IEA was talking about coming into this year with an absolute glut of over 4 million barrels. All right, coming up, Sarah Kunst of Clio Capital. Stocks trade near all-time highs. Bloomberg's Laura Davison as Ukraine and U.S. gear up for another round of peace talks. And Erin McLaughlin of the Conference Board as consumer confidence continues to fall. We begin this hour with stocks flat following the latest record close. Sarah Kunst of Clio Capital issuing some cautions for the year ahead, writing, "I'm not super bullish on assets you can't see. It's been a year to cap off a few years of total AI dominance. Will it continue? It doesn't look that way." Sarah joins us now. Sarah, thank you so much, and I loved your note. So tell me about you're not super bullish on assets you can't see. So what are you bullish on? Is it all just, gold and silver?
I mean, I certainly think when you look at the way that we've seen that appreciation across, platinum, gold, silver, those are huge gains. The problem with those kinds of assets, of course, is that they don't produce anything. They don't grow in intrinsic value. If you had an ounce of gold 10 years ago, you still only have an ounce of gold. It's just worth a lot more on paper at a melt price. And so, I think right now we're just seeing a bit of a struggle to figure out where to focus that feels like there's going to be some real solid fundamentals and price appreciation. And that is a very hard needle to thread.
Why is it so hard to figure out where to focus? Is it just because of this holiday period or because the data has been mixed when you look into 2026?
I think the data has been mixed for a while. We all obviously, when we look at our little accounts, we see a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for. Some of them I'm much more bullish on than others. And so I think that's part of it. And then there's also a question about sort of where's the consumer at? How good is the data right now that we're getting, particularly from the federal government? And so there's a lot of uncertainty. But at the same time, people have been making a lot of money over the last few years and they need to put it somewhere.
They've been making a lot of money, especially off the AI trade. But as you point out, there's a lot more skepticism. There's a lot more discerning between the winners and maybe the also-rans. And we're seeing that play out in Oracle. The bonds have not been doing as well. The credit default swaps on Oracle have certainly spiked as well. How are you thinking through the potential, not losers, but the also-rans here of the AI narrative? Oracle seems to be one that investors are fixated on, but how else can you start to come up with a list of companies that, may be getting overextended because of their link to AI?
Yeah, I mean, certainly anytime we hear the word credit default swap, we all get our little nom flashbacks to 2008. The reality is, I think that companies like SoftBank are doing some things that feel a little risky. You have SoftBank who's sort of selling they have this huge commitment to invest in OpenAI, but to get that money to invest, they have to go sell all of their NVIDIA shares. They have to figure out, where to get the cash from internally by selling off public equities that are doing decently well to put more money into OpenAI, which is a company that, at current rates barely has enough runway to get through 26. And so that's a little concerning. In general, Sam's able to go figure out how to raise money, but I don't know how many times that trick is going to work in the future, because we know that the subscription revenue isn't really there. They're spending a tremendous amount of money. A 15-second video on Sora can cost them $5 to make. That's a lot. And so, there is concern, I think, that some of these other companies that aren't sort of foundational are maybe just playing a little bit too close.
Yeah, and when you look at the potential winners here, obviously NVIDIA, because of its role in the supply chain, is paramount. But you've also picked out another winner that so far investors agree with, because you look at the best performing stocks in the Mag 7, Alphabet is up 66%. NVIDIA is the second best performer, up 40%. Why do you see Alphabet as a clear winner here?
I have been a big fan of Alphabet in the AI space since at least 2023. I've been talking about this while everybody around me was saying that Alphabet's missing the moment. And I said, no, they created the moment, right? You go back to that 2017 academic paper, Attention is All You Need, which is sort of the Satoshi white paper of AI. And all of those founders, they were onto something, and they've gone on to create absolutely massive companies. A lot of the early innovation at OpenAI came out of Google alums. My company Grok, which just announced a big transaction with NVIDIA, they came out of Google. Google has had and continues to have some of the absolute smartest researchers in the world on AI, and they have the infrastructure to say, hey, we're going to bake Gemini into your search results, into your enterprise results, into your email, and you're going to pay us for it because we are an advertising company. And so they have such a huge advantage that it's been almost funny over the last few years to hear people think that they weren't playing the game, when in reality, they kind of are the board.
Sarah, does it concern you, though, that we have a circular economy of AI? These tech companies just keep financing themselves?
I think that that's certainly relevant. And I think that that's even more relevant when you look at some of the startups, kind of that everybody passes $100 around in a circle and calls it GDP is both a meme, but also a real cause, I think, for some concern. And so I think the question going into 26, you're going to see people get a lot savvier when they look at these companies to say, where is this money actually coming from? And is there an end consumer, an end enterprise who is actually paying for AI, who's paying for this utility, or is it just sort of everybody passing money to the service provider to their left?
What would it take for you to like Oracle once again?
Oracle historically has been a perfectly good company.
Okay, guys, natural gas को देखोगे resistance zone के around it, but don't sell directly. Okay, wait, directly sell मत कर देना natural gas को. वेट करेंगे, देखते हैं, अगर रिजेक्शन लेगा तभी सेल करना, अदरवाइज हो सकता है कंटिन्यूएशन में जाता रहे ऊपर तक. सो डोंट सेल डायरेक्टली इन नेचुरल गैस. एंड 8 PM का यूएस मार्केट का वेट भी करेंगे.
Obviously, their close relationship with Washington helps. But at the same time, I don't know if all of these things are going to work out the way they think they will. And this is just a tremendous amount of money that you're talking about. And so I would like Oracle to be boring again.
Larry Ellison seems to like it the way it is right now, Sarah. Whether it's Oracle, whether it's Alphabet, which is your pick, or whether it is NVIDIA, which remains kind of the market's pick, how are you thinking about the power needed to generate all the resources in order for these data centers to be up and running, not just at the start of this revolution, but to take us through the next couple of years? A lot of people are picking utilities and thinking about nuclear energy as the solution.
Yeah, I mean, this kind of reminds me back in the day, you'd see this a lot with Bitcoin. You all of a sudden have people getting really excited about things like dams in northern New York, or sort of where do you get this excess power from? I think that you will see kind of ironically a focus on renewables, a focus on clean energy because it's often cheaper. So where can you get wind? Where can you get solar? All of that. And I think that we're going to find out that a lot of these sort of data center deals that you're seeing across rural America and the world, they're going to run into a very real problem of places like Texas where the electricity can be insanely expensive because of the way that they regulate their utilities. It's going to be really, really tough to say, hey, we have a bunch of empty land. Of course, we're going to build a data center on it. And now everybody who lives in a 300-mile radius is going to pay more for electricity. I think you're going to see a real amount of pushback that will get political. And so I think that is going to be one of the bigger questions right now. I don't do much in utilities, but I do think that it might, in a very sort of funny backwards way, help usher in more of a green revolution.
Sarah, thanks so much for your time this morning. Hope you had a lovely holiday with you and your family. Sarah Kuntz of Clio Capital. We're going to be speaking more about what's going on with the AI data center build out. But to Sarah's point, it is a political issue. We've already seen that happen in the Virginia midterm elections, as well as in New Jersey. Prices for electricity, even though the president loves to talk about drill, baby, drill, and gasoline prices are down, but electricity prices are actually high.
Yeah, and that tilted those states towards candidates that were pushing affordability.
Yep. Anyone talks about affordability, that's your ticket to winning. All right, let's get you an update on stories elsewhere we're watching this morning. Yahira is back with your Bloomberg Brief. Hey, Yahira.
Hi, Anne-Marie. The U.S. launched a military airstrike against ISIS targets in Nigeria. President Donald Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. Meanwhile, holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. Forecasters are expecting up to 8 inches of snow from Friday afternoon through Saturday, and New York City is issuing a travel advisory for the duration of the storm. And Tesla is facing renewed scrutiny over its door handles. The National Highway Traffic Safety Administration said it's evaluating claims that the mechanical door release is, quote, hidden, unlabeled, and not intuitive to locate during an emergency. The move expanding the federal examination of Tesla's doors following a Bloomberg investigation. That's your Bloomberg Brief. Anne-Marie.
Thanks so much, Yahira. You know, Scarlett, what a waste of almost up to 8 inches of snow. If I was in school, I'd be very upset because you won't get a snow day. The kids are already off.
But, it's good overall that it's happening on a Friday night into Saturday because you don't have as many people commuting. Like, people can afford to stay off the roads.
True, but a lot of people are traveling. They're heading to the airports.
Yes,
JFK, LaGuardia, Newark.
Maybe by Sunday it'll be all sorted out.
Yeah, hopefully. All right, up next on the program, Ukrainian President Zelensky heading back to the U.S., optimistic peace talks, potentially. Speaking of Sunday, that's when reports are that he will be landing in Florida. Bloomberg's Laura Davison joins us next for more on that story. You're watching Bloomberg Surveillance. Good morning. Welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern. It is the day after Christmas. We are seeing very light volumes, thin trading today, but the markets are open, even though the president has made it a federal holiday. S&P 500 futures are unchanged. On Wednesday, we did notch a 39 record high of the year. So Santa Claus rally at this moment, somewhat in full swing. 10-year yield, 4.13%. All the action, once again, is in the commodity space. Gold up 0.7%, surpassing 4,500 once again. And silver at one point did pass $75. It's now just shy of that, but we are up 3.5%. Under surveillance this morning, Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in the coming days. Zelensky signaling a lot could be decided before the new year, after a Christmas Day sit-down with U.S. envoys Steve Witkoff and Jared Kushner. Bloomberg's Laura Davison joins us now. Laura, thank you so much for joining us. What can you tell us about this potential meeting between Trump and Zelensky?
Yeah, so this meeting is scheduled to happen as soon as Sunday, and this is really a marked shift from the tone Zelensky was taking just a few days ago, where he was a lot more pessimistic that he believed that the Ukrainians and Russians could agree to a peace deal. There's been weeks of sort of shuttle diplomacy with U.S. officials meeting with both Ukrainian and Russian officials separately, but never really making much of a breakthrough. The key sticking point in this 20-point peace plan that's been put together is whether it's territorial issues and whether Ukraine would be willing to give up some parts of their territory that they currently still control. That has been one key demand from the Russians. The Ukrainians have been quite sour on that idea. So Zelensky is going for this face-to-face meeting down in Mar-a-Lago with the president to hash out some of these final details, potentially to move forward with a peace plan.
And of course, we know that Ukraine has been deep in negotiations with Steve Witkoff and Jared Kushner on this proposed 20-point peace plan. Has Russia given any way at all on what it's looking for? Or it's kind of waiting until the last minute to weigh in?
They have been waiting to the last minute to weigh in. They have been very clear that, what they want are, kind of some of the contours, sort of the maximalist view of Russia getting all that it wants that they discussed back with Trump at this summit in Alaska over the summer. So this is, kind of the key sticking point and why we've heard a lot of pessimism during these talks, and that, Ukraine has been sort of doing some negotiating, but Russia has really stood firm. We'll see, whether this meeting with Trump and Zelensky is able to create any breakthroughs that the Russians might be able to agree to.
Anne-Marie and I were talking earlier about how there's definitely urgency on Zelensky's part, on Ukraine's part, and there doesn't appear to be much on Russia's part. In terms of the president and where he sees a timeline developing, I know that initially he had set this deadline of Thanksgiving for Ukraine to agree to a peace deal with Russia. Do we have any kind of targets in terms of timelines?
He has not set a specific new timeline here. Trump once and has repeatedly said he wants this done as soon as possible, though he's kind of suggested that, if talks are progressing, if he sees progress, he will let, things drag on a little bit forward to reach a deal. But Trump here, really his ultimate goal is to get a deal so he can herald peace. He is less concerned about the specifics, but of course, that is very of utmost importance to the Russians and the Ukrainians.
Yeah, Laura, I remember when the president would say that he would solve this crisis day one, at least when he's on the campaign trail. Now we're in the final week of 2025. At the same time, they are still going after a tanker in Venezuela, and there was strikes overnight on Nigeria. How is all this, you think, going to play with his MAGA base?
We've already started to see cracks here. Of course, Marjorie Taylor Greene, who is now effectively, totally divorced from the president, was the first to really criticize some of these, overseas conflicts that the president has been engaged in. But as time goes on, particularly if the White House needs to go to Congress for more money on that, this could be a huge rift going into the midterm elections.
Laura, thank you so much for joining us this morning. Bloomberg's Laura Davison there. Turning to the impact of artificial intelligence, water constraints in Texas threatening data center growth, calling attention to resource demands. Eric Kane of Bloomberg Intelligence joins us now for more. I've heard a lot of people throw cold water, excuse the pun, on potentially what could be some of the bottlenecks when it comes to AI. Tell us about what's going on with water specifically in Texas.
Absolutely. It's a good question. And one of the things, of course, that we're seeing is there's a lot of discussion about the energy demands associated with AI. I think the water demands are a little bit less well understood. So just to broaden the context a little bit, one thing that we see is predicted growth to about 1.1 to 1.7 trillion gallons of water used annually for data centers across the world, which is about 4 to 6 times the amount that the country of Denmark consumes. Within Texas has become one of the fastest growing, states for data centers after Virginia. And in Texas alone, what we're expected to see is growth of water use associated with AI of about 800% over the next several years.
Wow. So if there's this much demand for water, how do Texas regulators, Texas authorities start to meet that demand? What are some of the out-of-the-box ideas that they're entertaining?
Right. It's a good question. One of the things that we saw actually with this last election cycle was the passing of Proposition 4, which was actually a constitutional amendment that was, again, passed. And essentially what that amendment said is that Texas voters wanted to allocate $1 billion a year to address water scarcity, water infrastructure, and also flood control, basically over the next 20 years. So that will begin in 2027 and go out for 20 years. So in my mind, that starts to demonstrate that voters, regular people, are starting to recognize the concerns associated with water. And with respect to AI, what we're starting to see, of course, is some of the big operators, Meta, Microsoft, for example, are starting to rethink how they're ultimately using water and ultimately looking at closed-loop systems, which they claim will ultimately use far less municipal water.
Does that mean at the end of the day that there's a natural constraint on how many AI data centers can be built in Texas?
Assuming they kind of continue business as usual, where they're continuing to draw as much water as they do. And if you look at some of the estimates, it's around 500,000 gallons per day for kind of a medium-sized facility. So assuming they wanted to continue business as usual, then there would absolutely be kind of natural constraints. But again, what we're starting to see is some innovation, and the state at large is starting to take measure. They're looking into more desalination, treatment. On the oil and gas side, they're looking to actually filter the produced water, not only kind of take minerals out of that, but also treat it and potentially use that for other resources as well.
You mentioned what happened with Proposition 4 in Texas. Do you think we could see more federal spending go to Texas specifically because of these issues?
It's a good question, and one of the things that we've seen with the recent administration, with respect to kind of any funding related to environmental issues, impacts of climate, is basically that funding has been removed, right? So we're starting to see states having to essentially fend for themselves when it comes to issues like water or storm recovery. So I don't anticipate seeing a lot of that on the federal level. I think the one example where maybe you would see an exception to that rule is with respect to agriculture. Obviously, agriculture is a big driver of GDP in Texas, and we've seen many examples over the last year where things like the cotton crop have been extremely damaged by drought, and you do see subsidies coming in the case of agriculture.
Well, it's a huge political issue, and Scarlett and I have been talking about it all morning with electricity prices rising. Most people would say you need an all-of-energy approach, but this administration is also pausing wind projects. Right. Is that going to be a problem for them?
I think it is going to be a problem. I think ultimately what we're seeing, of course, is with the development.
Risks, the same stories we've heard about all year as we've witnessed this precious metal rally. Meanwhile, moving on to Micron, if we hold at these levels, Micron is set to open at a fresh all-time high. The stock is up 1.6% in the pre-market on no real catalyst on this quiet day of trading, but it is worth noting that this comes after a 230% run for this stock this year, fueled, of course, by strong demand for its memory chips used in everything from computers to AI servers. And remember, just earlier this month, they had an earnings report, and the CEO said that demand continues to outstrip supply, and they see no signs of that abating anytime soon. And we end on Biohaven stock. Those shares are plummeting, down nearly 15% now in the pre-market after one of their experimental drugs to treat depression failed to meet the goals in a mid-stage study. Analysts say that it's disappointing but not entirely surprising given the complexity of these clinical trials. Anne-Marie?
Yahira, thanks so much for that. On our radar this morning, the U.S. launching a military airstrike against ISIS targets in Nigeria. President Trump saying he ordered the precision hits at the request of the Nigerian government. Defense Secretary Pete Hegseth warning more strikes could be coming. Elsewhere, a sanctioned oil tanker being pursued by U.S. forces turned away from Venezuela and retreated out to the Atlantic Ocean. Sources telling us here at Bloomberg, the U.S. Coast Guard encountered the ship, Bella 1, and instructed it to move. Officials do not expect it to return. And holiday travel is hitting a major wall with a winter storm expected to descend on the tri-state area. Over 400 flights have already been canceled at JFK, LaGuardia, and Newark. Forecasters are expecting up to 8 inches of snow from Friday afternoon, that's today, around 4 p.m., through Saturday. Let's stick with that story. Heavy snow expected to begin in New York City area later today. The winter storm already canceling hundreds of flights in the middle of holiday travel. AccuWeather's Bill Waddell joins us now with the latest. Bill, what do we need to know?
Hey, good morning. Yeah, this is going to be a messy storm, a lot of impacts for holiday travelers. The good news is it's going to be a quick moving storm, and the timing. Hopefully a lot of people won't have to be traveling through the worst list. You can see on the map already, we've got the snow, wintry mix through Michigan, moving its way on east here. And when it comes to the snow impacts, New York City, AccuWeather is looking at 3 to 6 inches of snow for the city. Philadelphia, Boston, 1 to 3 inches of snow. But take a look at this dark blue zone here right north of New York City, Catskill Mountains. AccuWeather meteorologists say this is the zone where we could see 6 to 12 inches of snow. That's not the only problem with the storm. there's a really messy component here. Take a look at these dark pink areas, southern Michigan, including Lansing, as well as central and western Pennsylvania. This is where we could see those icy impacts, could be significant in those areas. So there could be a mix of sleet, ice pellets, freezing rain. The big concern here in these areas, if we start to see any ice accumulations on the power lines or tree branches being weighed down, that's where we could see some big problems with some power outages. So you could see this is a big, messy storm here. And when it comes to the travel forecast, this is mostly for the second half of the day into the night, but you could see major holiday travel weather impacts expected across the Great Lakes into the Northeast. Also, our friends on the West Coast as well, still dealing with a lot of rain, flooding issues, and mountain snow.
Absolutely. Boy, that paints the real picture of everything that travelers need to contend with. Bill, just very quickly to follow on what you said about what's happening on the West Coast, any relief on the way for Southern California?
There is some relief on the way. They've really been getting it the past few days here. But when we look at the map, today is supposed to be the last big day for the rain impacts before things really start to wind down here. But Los Angeles, more than 2 inches of rain in some spots. It's really those mountains and the burn scar areas. I was out there covering those big wildfires back in January. Of course, all of the soil left charred. So all of this rain running down the mountainsides, that's where the big concern is for those mudslides, debris flows. That's why so many people were asked to leave their homes voluntarily over Christmas.
Bill, thank you so much for this update. Bill Waddell of AccuWeather. Scarlett, that's pretty incredible. 5 to 9 inches of snow, which is what the National Weather Service is expecting. I think Bill said actually it could be as high as 12 inches of snow in the tri-state area.
Yeah, in certain pockets, and freezing rain just makes it even more complicated for anyone who does need to get out of their house after this quick-moving snowstorm. But that makes it not so quick in the end.
Yeah, everyone, please be safe out there. And also, if you're flying, check your flights. Turning back to stocks, NVIDIA shares are up nearly 40% this year, nearly doubling the performance that of the NASDAQ 100. The company's Blackwell chip becoming the engine of the AI industry this year. In an exclusive interview, the company's CEO, Jensen Huang, told Bloomberg's Ed Ludlow Blackwell says he sees no sign of slowing down.
Sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. NVIDIA GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin is going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is zero. All of our forecast guidance that we showed, zero. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is zero. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume zero.
Jensen, we can see where the hyperscalers are getting the money where they have the money to deploy and build. But you mentioned Anthropic. With Anthropic or indeed OpenAI, they have tens of billions of dollars of commitments around the world. Very simple. Like, how do you know that OpenAI is good for it, that it will be able to find the money?
Well, we're thoughtful, along with OpenAI, thoughtful in aligning on and taking into consideration visibility of demand and their financing capabilities. All of that has to be in accordance, has to be aligned, has to be coherent before we start to build out. And so I think the ambition's large, but the execution is disciplined. And that's really, really important to recognize. We're very disciplined with our investment. We're disciplined with our build out. These are very large scale investments. And so the two teams are quite disciplined, very disciplined in thinking through the investment levels. Now, it's also important to take a step back and realize that OpenAI, Anthropic, these are the fastest growing company in the history of humanity. Their offtake, their end market demand is absolutely real and absolutely incredible. And you could see that they're really struggling to keep up with the demand that they have. The engineering teams, we work incredibly hard to make sure that we bring them on more capacity, but also optimizing their stack so that the usage of whatever capacity is as efficient as possible. And meanwhile, there's so many new use cases that they want to put out into the world, and is currently limited by the capacity they have. And so this is a really important time. You're seeing an exponential growth in the amount of compute demand necessary for AI. You're seeing an exponential growth of adoption and use of AI, and the number of applications that are going to be using these AI is also growing. And so we've got to do our best to support the scaling out of two of the most consequential companies in history, and we're delighted to be partnered with them.
Jensen, investors have been worrying about depreciation. Software can actually extend life. Like, there are A100s out there in the real world still at full utilization. Are people underestimating how long your chips stay useful, or are they kind of misunderstanding in the context of depreciation how you're handling generation to generation updates of GPU?
NVIDIA is unlike any other accelerator. And the reason for that is because of CUDA's diversity of capability and versatility. Remember, I said two things earlier. I said the fact that NVIDIA participates and could accelerate every phase of AI, pre-training, post-training, and inference. We're the only architecture in the world that does that fantastically. The second thing we do is we run every single model. And so most agentic systems, most clouds are running so many different diverse type of models, language models, vision models, biological models, chemical models for all the different fields of science. NVIDIA could be used across the entire lifespan. Unlike us, most accelerators are kind of singular use because they don't have diversity, because they don't have versatility, because they're not great at every phase of AI. Once they're used for whatever they were designed to do, their value falls off a cliff. That is not true with NVIDIA.
NVIDIA CEO Jensen Huang, in one of his many conversations he had with Bloomberg's Ed Ludlow in 2025. Let's get you an update on stories elsewhere we're watching this morning. Here's your Bloomberg brief with Yahira. Hey, Yahira.
Hi, Anne-Marie. Former Malaysian Prime Minister Najib Razak has been found guilty of abuse of power and money laundering in connection to a multi-billion-dollar fraud case. Najib, already in jail due to other convictions, has denied any wrongdoing and can appeal or apply for a pardon. He's due for release in 2028. Meanwhile, oil prices are headed for their biggest weekly gain since late October. The spike comes amid the partial U.S. blockade of crude shipments from Venezuela and a military strike by Washington against a militant group in Nigeria. Sources telling us here at Bloomberg that the White House has ordered commanders to quarantine Venezuelan oil for the next 2 months, which could keep prices elevated. And Japan's inflation cooling more than expected in December, pushing the yen lower. Prices excluding fresh food rose 2.3% compared to last year. The data supporting the case for the Bank of Japan to take a cautious approach on further rate hikes. Economists expecting the bank to raise rates roughly every 6 months. That's your Bloomberg brief. Anne-Marie.
Yahira, thanks so much. Yahira will be back with us in about 30 minutes' time. Up next, consumer headwinds.
The consumer is facing significant headwinds as we wrap up the year. The consumer is not nearly as euphoric in this holiday season as they were in previous ones.
Aaron McLaughlin of the Conference Board will be joining us next. A conversation you don't want to miss. You're watching Bloomberg Surveillance.
AI is impacting every industry. Macau is providing this center point for this industry transformation. By hosting a conference like AIE, what they're doing is providing this foundation for everyone to align and get behind. If you've spent some time here, you'll suddenly realize how much energy is here, how much transformation, how much change. And being in a location that has those kind of dynamics is really powerful for any business.
Good morning, and under surveillance this morning, we're going to be looking at the consumer and the headwinds that lie ahead.
The consumer is facing significant headwinds as we wrap up the year. Labor growth is zero, wage growth is compressing significantly, inflation is up. That is not a good combination for spending, for household spending in the new year. The consumer is not nearly as euphoric in this holiday season as they were in previous ones.
Here's the latest. U.S. consumer confidence dropping for a fifth consecutive month in December, according to fresh data from the Conference Board. Aaron McLaughlin of the Conference Board writing, expect real GDP growth to weaken amid a fragile balance of resilient labor markets and softening consumer demand due to tariff-induced inflation. Aaron joins us now. Aaron, thank you so much for joining us, and hopefully you had a lovely holiday. When it comes to the consumer and the latest readout, I was struck by how more consumers are actually starting to be also worried about keeping their job.
Yes. So we find that consumers really tighten up when they don't have jobs. And so the concept of deteriorating business conditions, the weight of tariffs and inflation, all definitely influence consumer spending and consumer sentiment. But concepts around rising unemployment, we've seen it tick up now to 4.6. In the concepts, there are less jobs out there. Jobs are not as plentiful, will really weigh on the consumer in 2026.
We know the government shutdown did not help matters. It made people feel more nervous, and it certainly created a lot of uncertainty. And I know it's over, but I bring this up because we could face another government shutdown in January as well. So how do we fold in the government shutdown and what that does to consumer sentiment, even as it's become a more frequent occurrence?
Well, that was the longest shutdown we've had in modern history that we just had. It certainly impacted economists. It impacted consumers, especially this year. Consumers are just facing its sort of constant news about politics, geopolitics, tariffs, inflation, and that constant news impacts them. And so another government shutdown will certainly also impact them, even if they don't feel the immediate effects of a shutdown. And sort of the news today and the concept that there could be rising oil prices and oil and gasoline, excluding fuel oil for homes, has been pretty, low as far on the inflation spectrum. But even news like we're hearing today, if prices go up, how does that impact consumers?
The administration has been out there trying to paint a picture of a robust economy. Howard Lutnick, the Commerce Secretary, went on to talk about the third quarter GDP growing more than 4% and how that was a sign that things were better. He also mistakenly equated that with an increase in people's pay as well. How is that contradiction, that seeming contradiction of data that shows the economy is holding up well, balancing with this sense from consumers that things are not getting better necessarily, especially on the job front?
Well, consumers are not paying attention to GDP the way that we are, in the way that economists and business and financial markets are necessarily paying attention to these readings. What they really feel is the effects of prices for things that they buy every week, every day, every month. And so those things include coffee, which has gone up in price 20 to 40%. Beef and other proteins at the grocery store have gone up. And some big structural costs have really not come down. The cost of housing, and in particular insurance, and the price of a mortgage, while it has come down a little bit, is nowhere near as low as it was pre-pandemic. And so when you see some of these really big price structural changes happen, that also weighs on consumer sentiment.
What about when you look at trade-induced inflation? What are you looking at for next year, given the fact that this administration will be renegotiating USMCA?
Yes, we really think that federal policy, particularly around trade and tariffs, is going to have a huge impact on consumers next year. Our three largest trading partners are Mexico, followed by China, followed by Canada. Those three trading partners, our agreements with them are not settled. We sort of kicked the can down the road 12 months from China, from November of this past year to November of next year. And then the USMCA, which is essentially NAFTA version 2, will enter a version 3 phase as it can be renegotiated. And that deadline is in July. And there is so much that we just trade between our three largest trading partners that there is really the potential for a lot higher inflation and price pressures on consumers for some items that we get that, again, include non-discretionary as well as discretionary items like food.
Erin, thank you so much for joining us this morning. Really appreciate your insight. Erin McLaughlin of the Conference Board. Coming up the program, another hour with Scarlett and myself, Victoria Fernandez of Crossmark, and also a conversation with the Citi CEO, Jane Fraser, looking back at 2025 and what it's meant for banking. You're watching Bloomberg Surveillance. Good morning.
We've seen, and of course, we're still waiting to hear from Russia overall on any kind of response to this 20-point peace plan that the three sides have been negotiating.
What Russia has continuously been doing is try to draw out these talks. Mm-hmm. Ukraine says they've had no direct communication with Russia. Potentially, could this meeting on Sunday push them to having at minimum a trilateral agreement? Zelensky says sensitive issues such as Donbass, Zaporizhia, the nuclear power plant, will be discussed. That's Europe's biggest nuclear power plant. Both these countries want access to it. It's going to come down to these territorial negotiations.
Right. The sticking points have always been the sticking points, even if they seem to have made some progress on security guarantees.
Absolutely. Let's check in where markets are this morning. We are 90 minutes away from the open. We do have equities unchanged.
Surprise, surprise.
Surprise, surprise. As Scarlett and I have been saying, it's thin trading, it's the holiday, but we did have a Santa Claus rally. Going into literally Christmas when Santa Claus came, we had the S&P 500. You know, we have to say that we do have some children watching, like my nephews. We did have the Santa Claus rally, 39th record high of the year. And all the action has been in the commodity space, especially right now, given the geopolitical tension. Silver just shy of $75, up 3.5%. Gold, 4,500. People are looking at 5,000 for next year. It's been on a tear this year. Biggest rally we've seen since 1979. Gold has been up 50%.
And you're right to highlight gold and silver, but we should also throw in there platinum and copper as well, both at record highs. Platinum topping $2,400 an ounce. There's a lot of physical demand, fairly strong for the auto sector and for the jewelry sector, but there's also supply disruptions in South Africa. And that's kind of a similar theme in copper as well. Ongoing supply concerns, and you can add to that the possibility of tariffs as well.
Exactly. It's a perfect storm, really, for some of these commodities. Coming up in the program, Victoria Fernandez of Crossmark Global Investments with stocks trading near all-time highs. Louise Chen of Scotiabank Out Capital with an outlook on pharma stocks for 2026. And Deborah Weinswig of Coresight Research recapping the holiday shopping season. We begin this hour with stocks aiming to extend the year-end rally. Victoria Fernandez of Crossmark Global Investments writing, we begin the year with equity valuations at somewhat rich levels and lots of optimism already baked into those valuations, setting a high bar for positive surprises and paving the way for moderate returns. Victoria joins us now. Victoria, thank you so much for joining us. If the bar is so high for next year, do you think we are going to see some sort of correction in the markets?
I think we will, Anne-Marie, and it's typical that you'll see that in a midterm election anyway. So you add in the element of coming into the year at high valuations, and you're setting yourself up for that. I mean, you typically look at a midterm election year, and coming into that year, you've already priced in those pro-growth components, the optimism around things being positive after a new administration comes into term. And as those positive elements actually come to fruition in a midterm election year, you start to see some pullbacks, some intra-year corrections, sometimes up to as much as 15, 16, 17% you can see. So there's a lot of volatility. You usually get higher yields, so we wouldn't be surprised to see yields move a little bit higher as well. Setting this up for a year where you're going to see a lot of churning, but have moderate returns, not like we're going to, like we've seen the last couple of years with these huge returns.
So do you think we're going to see investors want to have more defensive trades? Could we see also rotation in the market?
Yeah, we're already seeing some of that rotation, not necessarily into staples per se, right? Staples are still struggling. So you're not getting that full-on defensive shift. But what you are seeing is people come out of some of those high flyers, those hyperscalers, the high leveraged tech, or not leveraged, but the high valuation tech names that are out there. You're seeing them trim those names back and going into some areas where you're starting to see uptrends in the sector. So whether it's healthcare, whether it's metals like you guys were talking about, we've seen it in financials, we're seeing it in industrials. There's opportunities there to go in. Staples are still dragging. So anticipation of that. So it could be less of a fact. It kind of goes to that point that we're saying where you come into the year with a lot of those growth elements already built in for your optimism for what you think is going to happen in the market. And when it comes to fruition, there's not much of an effect. That could be part of it. They could be spending that now. But it seems like lower income consumers really are holding on right now. You're not seeing savings rates go down tremendously, which is telling us that it's the high income consumer that's really spending. Low income consumers are not dipping in to those savings just yet. And year over year, holiday spending for that cohort is actually negative. So I think they're holding back a little bit, waiting to see what happens. And a little bit of extra cash coming in next quarter could be a benefit for them.
Well, high income consumers are spending in part because of the wealth effect. Anne-Marie has told us several times about how the S&P 500 closed at a record high for a 39th time on Wednesday. If there's a sudden market pullback, if we see those gains unravel, how quickly could we see the wealth effect work in reverse?
Yeah, I think that's actually, something we really need to watch, Scarlett. So you're right. Lower income consumers spend based on what they're making, right? What their salaries are and what the job market looks like. High income consumers do spend based on wealth effects. So as long as the market is doing well, they're going to spend. If we see that pullback, if we see the volatility that we think we'll see in 2026, you should see the high income consumer pull back a little bit. They won't stop spending completely because they still have the job component there. But as they see housing prices maybe start to come back a little bit, as they see the market pull back a little bit, their spending will start to shift slightly. I think that means you have to be a little bit more cautious on those more expensive retail companies that are out there. Those high income retail companies will probably suffer a little bit if that happens. So there'll be a much lower level of spending that will occur.
Victoria, let's just end on the big debate going into next year in financial markets in terms of the Fed's next move. What are you pricing in for 2026?
Yeah, we're really only pricing in one cut for 2026. We think they'll hold in January just because there's still a lot of unknowns going on. We did have a strong GDP number, but they do have a whole month of January to wait. They'll get more inflation numbers. They'll get more job numbers. We'll see what happens. But the debate here, I really think, is where is neutral and how accommodative are we right now? I think that's the underlying battle that's going on at the Fed, and how accommodative do they want to be in order to not stoke kind of the flames of inflation. That'll be the battle we continue to see. We think we're probably closer to neutral than what many people think, which means there'll be fewer rate cuts going forward.
Victoria, thank you so much for your time this morning. Hope you had a lovely Christmas with your family. Victoria Fernandez of Crossmark Global Investments. Let's get you an update on stories we're watching elsewhere this morning. Yahira is back with your Bloomberg Brief. Hey, Yahira.
Hi, Anne-Marie. Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in Florida on Sunday. Speaking to reporters, Zelensky going on to say that a framework for a deal between the U.S. and Ukraine is almost ready. The Kremlin, meanwhile, saying its representatives have contacted the U.S. at President Putin's direction and agreed to continue their dialogue. Meanwhile, the U.S. launched a military airstrike against ISIS targets in Nigeria. President Trump saying he ordered the precision hits at the request of the Nigerian government, which has been struggling to contain increasing levels of terrorist attacks in parts of the country. Defense Secretary Pete Hegseth warning more strikes are coming if the group continues to target innocent civilians. And copper prices are trading at record highs across global exchanges, adding to substantial gains made this year as investors bet on tighter global supplies in 2026. Metals overall have made big gains in December, with copper expected to be a major beneficiary of the world's energy transition, and prices received an additional lift from a slump in the U.S. dollar. That's your Bloomberg Brief. Anne-Marie.
Yahira, thanks so much. All right, coming up next on the program, Louise Chen will be joining us of Scotia Capital with a bullish outlook on pharma stocks for 2026. That's coming up next. You're watching Bloomberg Surveillance.
We see a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for. Some of them I'm much more bullish on than others. And so I think that's part of it. And then there's also a question about sort of where's the consumer at? How good is the data right now that we're getting, particularly from the federal government? And so there's a lot of uncertainty. But at the same time, people have been making a lot of money over the last few years and they need to put it somewhere.
That was Sarah Kunst of Clio Capital. Good morning and welcome to Bloomberg Surveillance. I'm Anne-Marie Hordern alongside Scarlett Fu today. We do have markets relatively unchanged going into the opening bell. It is a shortened holiday week with Christmas and next week as well with New Year's Eve. But you do see stocks continue to trade around that all-time record high. Turning now to pharma. Louise Chen of Scotia Capital, bullish on the sector entering the new year, writing, we believe large cap biopharma stocks multi-year underperformance relative to other sectors, and the major indices create a good entry point ahead of the next wave of innovation. Louise Chen joins us now. Louise, thank you so much for joining us. When you look at potentially this space in 2026, what exactly do you like?
Yeah, so when I look into 2026, We cover about 15 or so of these large cap pharma stocks. There's two stocks that I like. I like J&J because I think that the underlying performance is really strong, and that's going to become more evident as the company continues to execute. And then I also like some of these trough PE multiple kind of stocks. There's about three of them in our coverage universe. That would be Merck, Teva, and also Bristol Myers. And of those two, I like Merck and Pfizer the best of those companies. And the reason that I like them is because I feel that their pipelines are underappreciated. They've got a good plan, and I think they're going to beat expectations in 2026.
When you look at this space, though, two names you have not mentioned. One, Eli Lilly, and they are potentially going to be on the heels of what we just saw from Novo Nordisk with Wegovy and creating this injections for weight loss, diabetes to now be taken as a pill. Is that going to be really changing the landscape for next year?
Oh, I think it's going to really change the landscape. I do like Lilly. We have a sector outperform on Lilly, but I don't need to tell you what everybody already knows, that Lilly's a great stock and they're going to continue to outperform expectations. The oral pill is going to be huge. And the reason it's going to be huge is it's really going to increase in access and affordability for patients. Right now, the injectable is more expensive. It's harder to take. It's got a greater side effect profile. So people that are not looking to maximize their weight loss, and that's a large percentage of the population, this will be really big. There are about 1 billion people globally that are obese, overweight, and the penetration rate of these obesity drugs is in the single digits. So with the oral pill, I expect that to change into the double digits.
I know you said that you don't need to tell us about Eli Lilly, but people like proven winners, and Lilly has been a proven winner. It's up 41% so far this quarter, and pharmaceuticals as a group are the best performing group in the S&P 500 this quarter, up 18.5% compared with the S&P up 3.6%. Do you see all the good news already priced into Lilly? Like when it does get its actual pill form of its obesity drug approved and ready for sale, that we're not going to see much of a reaction at the end of the day?
Oh, I think you'll see a reaction. And the reason that you will is because the obesity market is so big. I think the end market projection has gone to about 100 billion to 200 billion. And a big unknown is what it will look like in the markets outside of the U.S. And so far, it looks like people are getting that pricing outside the U.S. and it's direct to consumer. It's not really reimbursed by a lot of the government agencies outside the U.S. So I think it's going to be really big. I think the numbers will continue to go higher for Lilly. And don't forget, Lilly has a whole pipeline behind their first two initial drugs to come to market. The oral should come to market early in or mid to 2026. And those will be even better drugs than what the first generation of drugs looks like. So I expect this to continue to run.
Of course, when we look at the sector as a whole, there are a lot of risks that are tied as well to policy. We know that the Obamacare premiums are high and they're going to stay high unless the Republican Party can come to some kind of health insurance solution, which increasingly looks more and more unlikely. How are you thinking through whether the political problems start to show up in investors' enthusiasm for this sector?
Yeah, I think that's already more than priced into these stocks, right? So when you saw that the Trump administration was coming in to the U.S. government, a lot of the pharmaceutical stocks in that whole sector already took a dive. And now you're seeing things being traded on fundamentals versus fear, and I expect that to continue. So with some of these MFN deals, with a CMS IRA and what have you, a lot of these drugs will be coming direct to consumer at a huge discount. So that's going to be one segment of the market that people haven't factored into yet. So net, I think things could be pretty equal for these large cap pharma companies.
Well, just 7 days ago, the president, though, announced, he says, largest developments to date in bringing the most favored nation pricing to American patients. When you look at some of these names that are tied to this, Bristol Myers, you have things like Merck, Novartis, Sanofi. What do you see the timeline for this to actually take place?
Yeah, so each individual timeline is going to be a little bit different, right? So you saw 14 of the 17 companies that the letter was sent to actually already come up with these MFN deals. I think and also the drugs are also individual as well. So I think you'll start to see an impact next year, and then that will roll through, and it is going to come through Medicare. It's not for all their broader markets. So the impact is actually limited to certain drugs in certain segments of the market.
Do you think companies are going to use the excuse or try to counter this, that now this means that?
Okay guys, ये थोड़ी देर पहले की एक न्यूज़ है। यूएस प्रेसिडेंट ने क्लेम किया है कि यूएस ने स्ट्राइक करी है वेनेजुएला के अंदर। आई डोंट नो, अभी देखना पड़ेगा डिटेल्स क्या है।
To build your website, logo, and marketing in minutes.
not months. No tech skills. No excuses. Just your idea made real. Get started at GoDaddy.com with GoDaddy Aero.
News when you want it with Bloomberg News Now. I'm Karen Moscow. Israeli Prime Minister Benjamin Netanyahu and U.S. President Donald Trump will meet today to discuss the ceasefire in Gaza. We get details with Bloomberg's Laura Davison.
There have been some sort of halting progress there. Both sides, Hamas and Israel, have blamed the other for violating the terms of this deal. And they're now at the point where they're trying to move into the second, very much more difficult phase of Gaza, where they rebuild Gaza, bring in an international security force, as well as appoint a board of peace, so-called board of peace, to run the Gaza Strip.
That's Bloomberg's Laura Davison, who says the two plan to meet around 1 p.m. Eastern time at Trump's Mar-a-Lago estate in Florida. Netanyahu's visit comes on the heels of another high-profile get-together for the president. Ukraine's Volodymyr Zelensky met with Trump at Mar-a-Lago yesterday. President Trump said a lot of progress was made toward ending the almost 4-year war with Russia, but both leaders acknowledged there are still key issues that remain unresolved. Begin more with Bloomberg's Greg Sullivan.
President Zelensky did say that there was 100% agreement on the issue of U.S.-Ukraine security guarantees, which was somewhat important given that this has been an important issue for Kyiv throughout the negotiating process, and they had a little difficulty bringing the U.S. on board. Of course, though he said they have 100% agreement, we don't have the actual agreement or know exactly the contours of those security agreements, and he also said that on the issue of Europe, Ukraine, and the U.S. security agreements, they were only at 90%. So it's an important issue. It's also hard to see what Ukraine and the U.S. can agree to that Russia would accept.
And that's Bloomberg's Greg Sullivan. Ukrainian President Volodymyr Zelensky did say that he asked President Trump for U.S. security guarantees lasting as long as half a century to help deter any future Russian invasion. Current proposals under discussion as part of a peace plan set out a 15-year term with the possibility for an extension. The Chinese military is saying it dispatched air, navy, and rocket troops to conduct joint military drills around Taiwan to warn against what it called separatist and external interference forces. Taiwan said it was placing its forces on alert and called the Beijing government, quote, the biggest destroyer of peace. Much of the country will be dealing with nasty weather today. We get more with Bloomberg meteorologist Craig Allen.
More than a dozen states with some kind of alert or warning for a winter storm that is near the Great Lakes and very powerful in moving towards the St. Lawrence River Valley. We have blizzards across the upper Midwest, very heavy snowfall in portions of the Great Lakes. There is snow falling around Chicago. Strong winds, damaging winds all the way down through the Central Plains and the Tennessee, Ohio valleys into southern sections of the U.S. And in the east, big lake effect snow just downwind of the lakes in New York State. There will be snow in portions of New England. In fact, ice storm warnings for some sections of New York, Vermont, as well as New Hampshire. From Boston on down to New York City and Philadelphia and Washington, there will be some heavy rain showers during the day today, and then followed by some very cold, gusty winds.
And that's Bloomberg meteorologist Craig Allen. Mexican President Claudia Sheinbaum says 13 people died, another 98 were injured when a train derailed on a rare line connecting the Pacific Ocean with the Gulf of Mexico. The interoceanic train went off the rails yesterday. SoftBank Group has agreed to acquire private equity firm Digital Bridge Group. It's a deal valuing the data center investor at $4 billion, including debt. Bank of America CEO Brian Moynihan is saying that maintaining the banking system's independence is important. And this comes as President Trump is searching for a new chair for the Federal Reserve. Here's Moynihan speaking on CBS's Face the Nation.
We're a country that's driven by the private sector, by what people do, and in the businesses and the companies, small companies and large companies, medium-sized companies and entrepreneurs and doctors and lawyers. All these people drive our economy. The idea that we are like hanging on the thread by the Fed moving rates 25 basis points, it seems to me we've gotten out of whack.
Bank of America CEO Brian Moynihan speaking on CBS's Face the Nation. You can catch the program Sunday afternoons on Bloomberg Radio. Moynihan also said he expects the Trump administration to de-escalate trade tensions in 2026 after tariffs sent shockwaves through the U.S. economy this year. At the big banks and the boutique investment shops, an optimistic consensus has taken hold. All 21 prognosticators surveyed by Bloomberg News predict the U.S. stock market will rally in 2026 for a fourth straight year. marking the longest winning streak in nearly 2 decades. Well, it's a volatile Monday on the commodities markets, especially when it comes to silver. The metal lower after smashing through $80 an ounce for the first time. This morning's historic surge is being powered by speculative trades and a persistent mismatch between supply and demand. Spot silver is at $73.26 an ounce right now. Gold also on the move. COMEX gold at $4,449 an ounce, down 2.3% this morning. And copper surged to a fresh record close to $13,000 a ton in volatile trading as the London Metal Exchange reopened after the Christmas holiday. S&P futures lower, down 0.3%. Dow futures down 0.1%. NASDAQ futures down 0.5%. 10-year Treasury yield 4.11%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Spoke exclusively with Bloomberg's Stephen Engel about the bank's growing exposure in China and Citi's U.S. outlook heading into next year.
The recent truce has brought some much needed and welcome stability here. I think we're in a position now for both sides that wanted to have a period now where we can move ahead and have a more stable relationship between both of them. It's transactional, but it's in both sides' interests. And we see our client base navigating this well.
Yeah. What's your vision for the China market as it folds into your overall restructuring plan as well? You're now chair and CEO. First time that those two roles have been joined in a couple of decades. Clear mandate to carry out your vision going forward. What does that look like when you did exit your consumer banking business here, like you did in many markets around the world? You also sold your retail wealth management portfolio to HSBC. You got out of an investment bank JV with Orient Securities, I believe, and you have an outstanding license application for your wholly owned JV in securities.
So Citi has been in China for 124 years. We have a landmark building here in Shanghai. And what we have done is focused our strategy and grown. We are following our international clients around the world. We're seeing them with renewed interest and focus in China, as we talked about. And then we're seeing the Chinese companies innovating at pace and also looking at expanding internationally. So we've been growing rapidly here with a more focused strategy.
This also very bullish on India. Magnificent opportunity there.
He's biased.
Might be a little bit biased, maybe. But again, what do you hope to get from those markets as it fits into your restructuring plan and the vision that you just talked about?
The growth plans that we have going forward, because we are on the front foot. I cannot stress that enough. You can see it in our results. So all of our businesses, we're taking share, we're growing very quickly, and our returns are improving. So as we're looking forward, it's growth. Let's take India. Citi is larger in India today. We are the largest foreign firm by revenues in India. When I look at Korea, where I was just at, that's another market where we were the first foreign bank to open the doors in Korea. And we have a very strong position there supporting multinationals and clients. So as I look around the world, it's becoming more focused on diversification. There is also a focus on reinvention. What we are doing is helping provide the strategic advice. We're helping provide the financing and structuring and arranging that. And we're also helping manage the supply chain reconfiguration. We're helping with the hedging in foreign exchange, interest rates, because volatility is a feature. It's not a bug of this system.
Through your restructuring, you had to get rid of the retail side. And are there other areas that you would like to divest? I know
you have the wrong story. Citi is about growing. We're very clear.
Front foot forward.
We are very clear on our strategy, and we're moving onwards.
I only asked because, again, the Russia situation is a little bit different, probably, than your overall strategy. We just got word that Vladimir Putin approved the sale to Renaissance Capital of your bank in Russia. Probably something that you've been wanting to do for a while, but it was held back.
We have been winding down, as many companies have been, the franchise in Russia. We were waiting for the final approval to be able to sell. We've got a couple more to go to Renaissance, but it's a tiny business. So it's in the grand scheme of where Citi is, where we're investing, and what we're doing. It would be good to get that done, but it's not critical to the firm's strategy going forward.
Let's talk about the outlook in the United States right now. As we head into 2026, we saw the market reaction overnight. Simply, we're seeing that the Fed's equation, the bets for possible easing coming up, and now 50-50 or is still below that because of the specter of inflation. What is your outlook for Fed action going into the new year and the specter of inflation rising?
Look, I don't think we're out of the woods yet, and there's a sense that there may be another shoe to drop. It could be in tariffs or in the labor market. It could be in the asset prices that are quite high in the States. But all of that said, we're quite optimistic about 26. The challenge for the Fed right now is with the government shutdown. We all have a dearth of up-to-date data, which we could do with. It's hard to make these calls of exactly what's going on whilst we're waiting for the information. But as we look further out into next year, I think the resiliency of the corporate balance sheets, the strength, companies leaning in to innovation, investing in AI, there is, I think the doomsdayers will be proven wrong.
We're a couple months out now from when we had concerns rise about, I think there was one of Tricolor, the subprime auto lender. There were failures. There was concerns about non-performing loans. What does your balance sheet look like as far as that, and where is your worries lie?
Our balance sheet is pristine, but I think part of that is because it's very heavily investment grade on the corporate side. We're over 80% investment grade globally, and when we look at the consumer side, it's about 86% prime. So we tend to see the most resilient, healthiest parts of the economy on the balance sheet. All of that said, we haven't seen a thing that is concerning us. The consumer in the States is being fiscally responsible. Companies have been building up some more cash, either for a rainy day if it proves necessary, but most of them for investment. And they're acting from a position of strength. We'll keep an eye on the labor market. We'll keep an eye on some of the areas of mid-tier players in private credit and the like. But as far as we're concerned, that second, third order effects, the bank's not seeing anything that we're worried about.
Are you concerned by what some say maybe bubble forming in AI? We talked about the advantages of AI, but how much of a bubble or overheating?
I'm not sure if we're just in with a lot of our tech clients on the West Coast. I don't think anyone was ready to say that it's a full-on AI bubble, but no one is saying that there aren't some real pockets of let's call it the British understatement, frothiness in the market. It's more around the edges. What I found interesting is we can see a lot of the demand for the infrastructure build that's going in AI and the energy for the next couple of years. Where you saw some opinions diverge was in the 3 to 5 year period, could we be in danger of overbuilding? But no one's feeling that for the big investments that are going on at the moment for the next couple of years. So I think on that one, certainly some pockets of frothiness there on the valuations, but the core infrastructure investments are important. And as we're seeing in our own bank, and I think many companies we'll start getting some of the productivity benefits coming through. But the scale and the pace of investment is unprecedented, that is for sure.
Great conversation with Stephen Engel and Citi CEO Jane Fraser. Let's get you an update on stories we're watching elsewhere this morning. Yahira with our Bloomberg Brief. Hey, Yahira.
Hi, Anne-Marie. Ukrainian President Volodymyr Zelensky saying he plans to meet with President Trump in Florida on Sunday. Speaking to reporters, Zelensky going on to say that a framework for a deal between the U.S. and Ukraine is almost ready. The Kremlin, meanwhile, saying its representatives have contacted the U.S. at President Putin's direction and agreed to continue their dialogue. Meanwhile, former Malaysian Prime Minister Najib Razak has been found guilty of abuse of power and money laundering in connection to a multi-billion-dollar fraud case. Najib, already in jail due to other convictions, now faces another 15 years in prison and a fine of over $2.8 billion. The ruling judge dismissed numerous aspects of Najib's defense and questioned his credibility. And coastal communities in Southern California are bracing for more rain and flash floods, with a state of emergency still in place for Los Angeles and neighboring counties. Meanwhile, here in New York City, heavy snow is on the way. The winter storm has already caused hundreds of flight cancellations in the midst of holiday travel. That's your Bloomberg Brief, Anne-Marie.
Thanks so much, Yahira. Up next, setting up for the day ahead, plus Deborah Weinswig of Coresight Research, recapping the holiday shopping season. And we'll get another check what Yahira was just talking about, the storms taking shape across the nation this holiday weekend from AccuWeather. That's coming up next. You're watching Bloomberg Surveillance. Good morning and welcome to Bloomberg Surveillance. I'm Anne-Marie Herder and alongside Scarlett Fu this morning. We're counting you down to the opening bell. Here's your trading diary for the week ahead. Zelensky is expected to meet with President Trump as soon as Sunday in Florida. Tuesday, we have ADP employment data plus FOMC meeting minutes. And the last day of 2025, we'll get jobless claims. Thursday, the markets will be closed for New Year's Day, and then it's off to the races for 2026. Turning to the consumer, Deborah Weinswig of Coresight Research saying, quote, holiday demand is holding up, but it's a value-first consumer. Deborah joins us now for more. Deborah, thank you so much for joining us. Hopefully this gives some insight into what the holiday shopping season looked like. When you say value first, what does that mean? Where are people going to shop?
That's a great question, and thank you for having me on. So we definitely saw continued strength in off-price. So that's TJ Maxx, Ross Stores, Burlington. We also started to see pockets of strength in the dollar stores, and Walmart, of course, continues to really hit on all cylinders and is continuing to take market share really across the board.
Deborah, Walmart, Amazon, and off-price retailers like the TJXs of the world are winning this holiday season because consumers are seeking value. So these retailers are getting the volume, but are they giving up any margin along the way?
That's a great question. What we're seeing is that the specialty retailers actually have done an amazing job of more dynamic pricing and utilizing a lot of AI to do a better job of matching price to consumers. So we think that in the specialty retailers, they're doing a great job on maintaining margin. When it comes to, let's say, some of the other pockets of retail, I think that's been a bit more challenging. And so a bit more of this kind of bifurcation where you've got kind of some of these stronger players, and I would say some of these weaker players where either they don't have the technology, they don't have the product, or they don't have the price set at the right level for the consumer.
So how does Target fit into that? Because it should be a retailer that benefits from consumers seeking value. Yet the company really is struggling. It has a new CEO, but it has a lot of familiar problems, falling same-store sales, reduced forecasts. What does it take for the company to work through its problems and be in a position to capitalize on this shift to value?
I mean, I think that's it's not even $1 million question. That's a $10 million question. You know, they have, first of all, you replaced the outgoing CEO, Brian Cornell, with someone internally. You didn't set up kind of a co-CEO kind of structure. So you don't have kind of like the old and the new. So I think there is nothing that's kind of like in place right now to help them with their ills. They've got issues with regards, I mean, inventory, and their out of stock levels are as high as they've ever been. Their ability to execute. I mean, there's just something on the execution level that's more fundamental. And I think supply chain, which they've supposedly been investing in for the last decade, but they're just not putting their money into the right place. You know, they've significantly slowed down new store growth. They were using their stores as warehouses. And I think they keep going back and forth between all of these strategies. Whereas you look at Walmart, right, they've stayed, and it's not that their execution has been perfect, but they've continued on one path. And I think that's what's gotten them to where they are today.
Deborah, how concerned have you seen consumers with tariffs coming out of the Trump administration?
So I think that's a really important point. So I think that what we saw is that holiday sales were pulled really early, right? Because the consumer was worried about higher prices. Then you had this, like, almost like everything just went quiet with a shutdown. And then we saw this huge burst at the end with things really strong. And, you know, we were mapping store traffic. I mean, we saw some of the highest traffic we've ever seen on record in specialty retail. You know, it was up about 6.2%, and we estimate sales in specialty up about 4.8. I mean, numbers we haven't seen in quite some time. So while it was definitely dynamic and probably stressful along the way, I think that the sales ended up much more positive than most people expected, even at the beginning of the season, certainly stronger than what we thought.
Well, what do you expect for 2026? Because there's a lot of tariff question marks hanging over the consumer and the market's head, whether or not the Supreme Court is going to strike down IEEPA, whether or not we might see more tariffs in certain places like copper, which might impact supply chains, or even the U.S. renegotiating USMCA from Trump's first term.
So it's a great question. And if you go back to what's driving a lot of apparel demand right now, it is actually GLP-1. So about 1 in 5 Americans have been on GLP-1. Of those, about 72% have changed the size or more. And of those 1 in 5, about 52%
Wait, hold on. Are you saying people are shopping more right now because so many people have lost weight because of Wegovy and Ozempic?
Yeah. So, and it's not just apparel, right? They're changing shoe size, they're changing jewelry size. So it's literally apparel, footwear, and accessories across the board is driving a significant amount of growth. And what we're seeing, right, you just saw this whole kind of DXL transaction, right? Because of the change in sizes, right, even those retailers who are winning is changing.
Interesting. That's okay. I love that. One thing we know from the holiday shopping season is that gift cards are a very popular gift. And I bring this up only because the revenue is often recognized or usually recognized when people actually redeem the gift cards. Have you seen more of a shift or less of a shift from physical gifts to gift cards when you have an environment where prices are elevated and consumers are frankly worried?
You know, the gift card question is an interesting one because what we're seeing is that more and more retailers are trying to create community.
Deborah, I'm so sorry. I believe we're losing you here now. Thank you so much for that insight in the holiday shopping season. Deborah Weinswing of Coresight Research. Scarlett, what struck me is that I didn't even think about that. More and more people are on these injections. Matt Miller on them. He told me about them. Maybe he's one of these people that are going out buying new clothes. And I wonder how much more that's going to be a story next year, given the fact that it's now going to come in pill
Absolutely,
form.
right, because it just broadens out the potential customer base for these treatments. Plus, once you buy a new size, you know, if you continue taking the drug, then you're going to need to get another size down the road, too. So this is kind of a recurring expense.
I've never heard of your shoe size changing, though, if you lose weight.
Well, when you have a kid, your shoe size often changes. My feet got bigger after I had my 2 kids.
All right. You learn something new every day. All right, turning to weather now. You want to listen to this if you're traveling today. Heavy snow expected to begin in the New York City area later today. The winter storm already canceling hundreds of flights in the middle of holiday travel. AccuWeather's Bill Waddell back with us now. Bill, what do we need to know? Whereas you said the last hour, are we still expecting maybe up to 12 inches of snow?
Yeah, that's right. In parts of the Northeast, that is possible. If you're trying to do any of that holiday shopping, use those gift cards, do the exchanges, or if you have flexible holiday travel, do it this morning or early this afternoon because those big impacts are going to be reaching the New York City area by about 4 or 5 o'clock this afternoon. This is the start of the winter storm. You could already see that we have some snow, wintry mix on the radar in part of the Great Lakes Northeast. Looking at the big picture, all of the ice is going to be in the wintry mix on the southern side of this storm, mostly snow on the northern side. Let's get right to New York City with the AccuWeather Wintercast. Our expert meteorologist predicting 3 to 6 inches of snow in New York City. But if that cold air hangs on, there is the potential we could see more than 6 inches of snow in parts of New York City. And it's not just the snow. There could be some other big problems with this storm. Check out the wintry mix, the ice component of this, where you see that dark pink on the map. Parts of Michigan, western and central Pennsylvania, even parts of Maryland and West Virginia. We could see sleet, freezing rain, ice pellets. The big concern here, especially where we see that darker pink, is potential ice accumulation on the tree limbs and the power lines. If those start to weigh down, we hear the tree branches snapping, that could lead to some power outages and some big problems. So looking at the big picture when it comes to holiday travel, this part for the eastern half of the country. That's mostly for the afternoon, evening hours, but you could see major holiday travel weather impacts expected from the Great Lakes to the Northeast, and still our friends on the West Coast dealing with all the impacts of the rain, flooding, and mountain snow as well today.
Bill, thank you so much for that update. Bill Weidel of AccuWeather. Everyone's really focused on this, of course, because it's the middle of holiday travel. Potentially you're going away for New Year's. And also, if it's 12 inches of snow in some places, it's going to be kind of hard to get around.
Absolutely. And I wonder as well, if temperatures stay really low after the snowstorm, that means that you've got a lot of ice on the ground. You've got a lot of difficulty with actually moving the stuff out. You know, everyone's got a shovel, but you can't do it if it's weighed down by ice and water.
And it's ice. Yeah, that's what worries me. It's icing. But you go ice skating. You play ice hockey, so maybe you can do a game outside.
You know, that takes a lot of work to clear the outdoor rinks.
That would be fun, though. All right, Scarlett, thank you so much for spending the week with me.
It's been a pleasure.
It's been a fun Christmas with you around the table. Coming up on Monday, Lisa will be back with you. Lori Calvasina of RBC will be joining her. Krishna Gua of Evercore ISI and Lisa Shallett of Morgan Stanley Wealth Management. This was my last show on surveillance, hopefully, for the year. I don't get pulled into something next week. John is still on paternity leave. Lisa will take you through next week, and then we'll all be back together for 2026. I hope you and your family have a very Merry Christmas and happy holiday season. This was Bloomberg Surveillance.
That's absolutely right. We have seen the central banks in Australia and New Zealand kind of turn very hawkish over the past couple of weeks, and that is because of two factors primarily. One is that growth has been pretty resilient. Consumer spending has been robust. The labor markets are pretty tight as well, it turns out, much tighter than central banks were expecting around even earlier this year. And there is also the inflation picture. The inflation picture is kind of sticky. Gone are the days when we seem to be comfortable talking about 2% inflation. Now we are talking about 2.5%, if not 3% inflation in many of the economies. And that's the reason why central banks are quickly pivoting away from dovishness into hawkishness.
Now, you and I both know no central banker likes to hit the reverse button and admit a policy error. Which major central bank then is most likely to surprise us in 2026 and why?
Well, I think that, that award has to probably go to the Bank of Japan because they are behind the curve. If you look at their own projections for inflation, they are forecasting inflation to come in at 1.8% for the next fiscal year. And that is, never mind that realized inflation is running at close to 3% in Japan. And they are also expecting growth to be above trend next year as well. So if you put all those together in the Taylor rule equation, what you get is a recommended rate of 1.5%. So that means that they've got 75 basis points of rate hikes that they need to put through. Whether they will put that through or not is the big question. But there is no question that they are behind the curve in kind of fighting the inflation. And there are also other central banks that are likely to turn more hawkish as well.
Well, let's talk about the Fed, because the expectation then is, of course, that they might get a dovish Fed chair next. Why might that chair struggle to get the FOMC on board for deep rate cuts?
Well, the point is, the Fed is at 350 to 375 now. And if you look at how sticky core inflation has been, and how resilient the U.S. economy has been. We got the print yesterday, 4.3%, blowing out all estimates. So that, and the Fed expects the U.S. economy to go 2.3% next year. That's fully 0.5 percentage point above what they were expecting in September. And 2.3%, even that is conservative. 2.3% would be well above trend. So you've got an economy growing well above trend. You've got core PCE that is hovering close to 3%. That means that there is just no wiggle room for the Fed to be cutting rates. And for the new incumbent, whoever they are required to be dovish by job description as we know. But the question is whether they will be able to drive that consensus, and not all on the Fed Policy Committee may agree to cutting rates endlessly because of the factors that I mentioned, of core PCE being sticky and resilient economic growth, which means that the Taylor rule rate is at 350.
Let's fire up 3 things you need to know today. The precious
highly provocative ideas about the investment landscape. I always come away from our conversations with a slightly new way of looking at the world, and I'm sure this conversation will be no different. Eric, welcome to Great Investors.
Thank you. That is very kind.
Let's go back to the beginning of your career. You got your start in the trading pits in Chicago. Are there some lessons that you still carry with you today from the days of Open Outcry?
Oh, many. They're almost entirely risk management. I started trading my own money. So I figured out my senior year in college that I wanted to trade.
Okay. What did you study?
Economics.
Yep.
Which wasn't really, honestly, it's not that relevant. But I actually met with all sorts of people who did different jobs, very successful people. And I stumbled across someone who became my mentor out in Chicago, who was a very successful trader. And I concluded, I'm never going to be bored doing this.
Yep.
So, and I've always wanted to do something on my own. So I didn't go to Wall Street, just there. I'd made some money. I had some businesses in college, so I made some money.
Okay.
Just packed it up, went out there. And yeah, when you're trading your own money and you're a young guy or an older guy, it's sobering.
And this was the corn pit?
Corn pit.
How'd you pick corn?
I was told that you lose less money in corn, and I didn't have much money to lose. So
Okay.
I figured, you know what, let's start there. Back in those days when you got a seat on an exchange, and it was a little exchange, we traded out lots. You'd go through this orientation class, and it was look left, look right, and not many people are going to make it. And it was all about survival. Because within 2 years, almost everyone from that first class of 30 was gone.
And how long did you do it?
I did it for 2 years.
Yeah. Okay.
Yeah.
And then quickly, the career path from there, what came in between Pitt and One River?
I lost that mentor tragically, and so I had a bit of a soul-searching period. I almost joined the military. I thought maybe finance isn't for me. I'd done well, and then I got through someone at Lehman Brothers, this very senior person there, talked to me and just said, you know what, I think you should come here. Not many people do what you've done. You should just give it a try. And I had told myself I was never going to Wall Street, so I was like, 2 years in, I'm going to go to Wall Street again.
Got it. Okay.
And after a year, I was convinced that I really didn't be on Wall Street. But my boss sent me to London, and he just said, listen, I know this is not your scene, so why don't you, and what I mean by that is I think I've always just been a pretty independent builder type person, and it was just bureaucracies are not really my thing. So he said, go out to London. It's very entrepreneurial out there. People are still smoking on the desk at the time. It was non-developed by US standards kind of business. And he just said, just figure out how to make money and I'll support you. And I got there at an amazing time, which was the ERM crisis. And so we figured out how to make a lot of money.
This is the early 90s?
Early 90s, yeah. I got there in 91. And then I ended up staying at Lehman for a bunch of years. I was a prop trader, Credit Suisse, took a year off, climbed mountains, which was another whole new form of risk management, and started a company during the dot-com period, a financial company, which was my first real operating experience of a significant company. Sold that in the 04 or something like that, and then went back into trading. First for myself, then a couple hedge funds as a macro PM, and then started One River in 2013.
Okay. In my mind, part of what you do is macro,
Mm-hmm.
with an emphasis on trend following,
Mhm.
and part is whatever we want to call it, digital, crypto. As we sit here today, how do those two worlds complement each other?
I'd say what we really do at One River is risk mitigation, and we're highly opportunistic. And so trend following is part of that, but long vol's a much bigger part of our business. Okay. And we kind of bring those two things together as risk mitigants for our clients. But we're always on the hunt for things. And just as a macro investor, you don't know anything too deeply, which is both a strength and a weakness. Right. But you can cover a lot of ground. And so we got into crypto in 2020. We'd done very well for our clients through the pandemic. And then the question was, okay, what next? And one of our biggest clients and I were both very interested in what crypto could represent in terms of an expression of monetary debasement theme. And so we made a very large investment in November 2020 that tripled over the next year. And we got out, by the way, and returned all that capital. Hopefully, the biggest redemption I'll ever have. But we built a business around that as well. And so I think I saw digital as being probably a 10-year theme, and I wanted to be part of it. And so we just built out a part of the business. So I think the biggest thing that we do for our clients is bring risk mitigation together with their existing portfolios to help them compound at a better rate than equities. But we're always on the hunt for what's next in terms of risk or opportunity.
Got it. You mentioned vol strategies, hedging strategies. It's a relevant thought these days, and people are worried about valuation and worried about concentration. Hedging, though, hedging's not easy. Going home long vol every day is an expensive proposition. And so how do you think about that?
I think probably because where I started my career, I'd rather go home long a bit of vol than short vol.
Okay.
And that's just part of who I am. And quite frankly, I've made a lot more money during really disruptive periods than not. But I think what most investors think when they think hedging is they think it is really hard, because it is, but they don't quite think about it in the right way.
Okay.
And let's talk about the really big investors. The really big investors go, look, I have so much money that how can I hedge it? It's just not possible. And actually, I have long duration money in a lot of cases. I'm pension plan, I'm an endowment.
Sure.
And so why don't I just ride out any downdraft? And so I think that they think about it a little bit the wrong way. The way I think about it is, if you have good hedges in place and you combine it with your portfolio so that you don't use some leverage, so you don't have to take risk off the table, then when something happens, you actually have your hedge, which produces a lot of cash, when mentally you're probably prone to make some pretty bad decisions.
Right.
You're like, I've got this big pile of cash here.
Right.
Maybe I can use it for some of my redemptions, or to pay the endowment's budget, or to buy some really cheap assets here. And I think that's really the right way. Like, holistically, that's the right way to think about hedging and what we do. And I think you really can compound better than just being long risk assets if you have that dynamic in your portfolio.
And as we sit here today, just given the setup, given vol surfaces, is there anything that looks particularly compelling to you?
Vol's pretty cheap right now, just as a general matter. But I think you have to be dynamic. Because I mean, one of the mistakes that I think a lot of investors make is they're looking at their portfolios right now. They're going, really high valuations. I don't know about next year. Who knows what's happening geopolitically? Vol's cheap. I'm going to put a big hedge on. And what most of them do is they lock in a strike price. And yeah, they got cheap vol, but they don't know when the crisis is going to happen. So what if the market rallies 10 or 15% and then falls 25? It's going to feel pretty awful on the way down, but you don't really have that much convexity. You don't have a great hedge in place.
Right.
So I think the key is being really, really dynamic, and people are worried about valuations right now, as you should be.
All right, I want to talk about trend following investing. It's a big part of your approach. What's the framework right now? How do you approach that business today?
So just stepping back on trend following. So I think all great investors are trend followers. They just are. Because what are you doing when you're trying to capitalize on a trend? You are foreseeing some dynamic that the market underappreciates today, and you believe will somehow get priced in over some period of time. And if you're an investor, it's not over a week, probably not over a month, probably over at least a few quarters, maybe a few years, maybe a decade. Like I was talking about crypto. I think crypto, I saw that as probably a 10-year trade. We're halfway through it.
And you're still of that view? It's about 10-year trade?
Yeah, I think that's about right. Like we were getting into Bitcoin at 15,000. It's 85, 90. It's got probably a long way to go, and we're halfway there. So, but anyway, trend following, I think as a great investor, all you're looking for are trends. And so the question is, how do you capitalize on those? And there are, at the highest level, there are two ways of doing it. One is systematic and one is discretionary. And I think the best performing investors through time will be the discretionary traders who are exceedingly good at identifying trends fairly early. They don't have to be day one, but in the first quarter of some type of new dynamic that's going to move something. And then they concentrate their investments in a fairly narrow space, could be a stock or a sector or a country or a commodity, and then eventually they get out. The other way to do it is systematically. And the advantage with doing it systematically is you take the emotion out of it. You spread your bets across, we'd probably trade 150 markets, let's say, a little bit more. Yeah. So you spread your bets across all these different markets, and you can essentially capitalize on trends that if you were trying to make discretionary decisions, inevitably you never make, or you might make some emotional mistakes somewhere along the way.
Right.
And so you're not going to make as much in that strategy as the best discretionary trend identifier, maybe someone like Soros, who is great at that, but you do very well. And the advantage of that as well is you can capitalize on periods that are pretty big dislocations, things that you didn't really see coming because just wasn't on your radar. It could have been like this gold move, or it could have been in 2022. By being in trend following, you capitalize on the down move in equities, but also the down move in bonds, which is a huge correlation breakdown. So as an investor, a typical investor, you had built your whole portfolio betting on that correlation remaining intact, and it went the other way. So trend had a terrific year that year at a time when most portfolios really didn't. When we combine long volatility and trend following and equities, when you combine them in a leveraged way, and if you look back starting at 2007, let's say the S&P's up 6 to 7x, combination of S&P and properly built hedges is up like 2x that. And S&P hedges and trend following is up like 40x. By the way, it's not intuitive. Like that's something that early in my career, I didn't really appreciate. Right. But now I do. And so the biggest investors in the US, that's the kind of thing that these guys are looking at.
Okay. And then how do you know, this is the hard question, but how do you know at the end when it's time to ask for the check? How do you know before the big reversal comes and the end of the move comes? Or you just say, you know what, I'm going to make as much money in the belly of that move as I can, and I'll probably get hurt at the end, but that's life.
In a discretionary, and I always think about discretionary because we think about how do you codify discretionary thought processes into our systematic strategies. But in a discretionary sense, I honestly do not think it's valuation. I think it's just being able to identify when people who have been betting against a trend are feeling maximum pain. And I think you can't teach that. Like, unfortunately, I wish I could have learned that in textbook. I've felt enough of those moves where where there are times where I feel a certain way and I know that's wrong. Like I know that I want to get out of something and I know, okay, I'm sure this is wrong. It just is. I've felt this before, but it also, if you feel something in yourself that other people, the market's filled with people like you. And that's what makes highs and lows on a systematic with a systematic strategy. It's a bit different. You need to have a set of rules. And I think what I just described it's not possible to codify, unfortunately. If we ever figured it out, we have the magic money machine. Right. But I think that there are all sorts of ways just in looking at momentum rollovers, but also we're doing all sorts of research on more fundamental factors that can anticipate changes in trends. We've got some great AI machine learning types of things. I'm sure everyone is working on those things because there's so much data in the world and there are interesting ways of thinking about it, manipulating it. I think what we bring to the market is just a very strong discretionary fundamental approach that we then work to try to codify. Okay. But I think, it's not easy is the answer, and you do the best you can. And you hope that by spreading your bets across 150 markets and running a pretty high vol, that over time you generate meaningful returns.
Sure. And is there anything today any trends you find particularly compelling, or any that you feel like are probably in their last innings?
If we talk about it at the highest level, I think the most important trend that is unfolding in the world from an economic perspective, let's set geopolitics aside, is this debt expansion. Just because this is probably not what you were looking for, but we can talk about specific markets, but I think that's the most important factor here is that there seems to be little to no spending restraint anywhere in the world. There's some places that are trying to do a little bit better job with it than others. The US certainly is not. And I think that if I reflect on my career, which started in '89, we've had these series of financial crises and policy responses. And the policy responses more or less have grown increasingly aggressive. And the government has taken on more of the private sector liabilities, expanded debt, and tried to create this ongoing prosperity with very little interruption. And so now you're at a point where I think the size of government debt, unless we have a real productivity boom, which by the way we might, but the size of that debt and the interest obligations are pushing the government to make all sorts of financial repression decisions and rate decisions. And it probably leads to a very large financial crisis here sometime over the next decade. I think that's the most important trend to pay attention to, because in a lot of ways, like most things feed off of that. I think what's happening in equities, what's happening in policy, what's happening in gold, what's happening in oil, like feed off of that dynamic.
And the path along the way is higher rates, steeper curves, more term premium, or not necessarily?
I think that what the government has already begun and is committed to is, and I think, by the way, it's sensible. So this might sound like a criticism. I think if you and I were running the government, we would do something, more or less in the same zip code. I think we're trying to figure out how do we run the economy as hot as possible, but with an emphasis on making sure that we clear as many roadblocks for AI development as possible, which is electricity and permitting and all these things. And then do everything possible to make energy as cheap as we can, which I think is a very deliberate strategy and probably part of what's happening in Venezuela, and to try to keep inflation down to the greatest degree possible. And then do everything possible to manage interest rates lower so that the actual interest burden is as low as it possibly is. And if you can make those things happen, I think you have a pretty good outcome. By the way, I think we still end up with a crisis down the road, because I don't think you're going to see the political establishment become more austere.
Right.
So I think what that does, that combination of policies, pushes that problem out 3 years, 5 years, maybe longer, probably not longer. And that'll feel really good, by the way. During that period of time, it'll feel great.
Yeah.
Okay. But I think you'll still see these spending dynamics, and you'll see whatever the crisis that comes in the backside of this AI boom is, and I think it will be significant, you'll see an overwhelming policy response. So I think you should see steep curves, and you probably do, but I think there's going to be a lot of policy action to bring those curves flatter as well.
Okay. Let's talk about crypto for a minute. Let's talk about Bitcoin. We're roughly 30% off the highs of October. What's been kind of going on the past couple of months?
God, the price action's been terrible.
Yeah.
Which goes back to, like, how do you know when trends are over? There was a lot of excitement at the highs. I think, number one, I'll say I don't know, but I think this is my framework for it. I think that you had a rush of essentially Wall Street guys that came in and just built out these digital treasury companies. And obviously, MicroStrategy was the pioneer in that space, but there have been so many others that have come after that. And I don't think they provide, massive value for the economy. And I think they front-loaded a lot of demand, and they created a hype cycle unto themselves, and they kind of raced forward and brought a lot of future Bitcoin demand forward. And then you just hit a point of saturation for the time being. And then, there's a lot of leverage in the system that was betting that was going to propel us to a higher level. It could have, but it didn't. You kind of ran short of buyers. And then the dynamic on a market like this is, once that happens, it starts going lower. And I think that's happened at a time when the AI theme has been so explosive, gold has been, and Bitcoin is very much a momentum trade if you look at over a few month period, even over a year period. So when a lot of the people who had been deploying capital there started losing money and looking at these other things that are making money, I think you started seeing rotation. And now I would say now where you are in the cycle is you see people actually getting really bearish on it. They're like, well, there are quantum computing risks to Bitcoin, and there are, which I don't think are going to manifest, by the way. But those are the things that I've seen through a few cycles now. You get toward the bottom, people start looking for reasons why it's going to a much lower price. And then some dynamic will shift. Maybe it's the silver to, people will say, the silver to Bitcoin ratio, which means nothing, but it's so wide, or it's the catch-up trade. It'll start moving, and those others will stall. And so I think we have significantly higher prices given policy activity. But I think that's what's been happening. And it's painful when it happens, and everyone's like, why is it happening?
And then big picture, do you have a fundamental framework for the asset class? So part of me thinks Bitcoin's a bit like gold in that it's whatever one wants it to be. There's no fair value, there's no yield, there's no intrinsic value. And so in the end, it's really subject to narrative and flow of funds. But am I missing something? Am I missing a fundamental anchor point in your view?
Bitcoin is so many things. We could spend a lot of time talking about Bitcoin, and we probably shouldn't. Yeah. There's plenty to read about it. But I think that one of the things that Bitcoin can become is it can become a blockchain or digitally native form of collateral that governments really can't interfere with. And gold is such a thing. Gold is worth a lot more. If Bitcoin were worth as much as gold, it'd be like 1.3 or $4 million a Bitcoin.
30 trillion assets.
And it's not, right? So gold can be used like that, right? We've gone through this period really throughout both of our careers where probably the greatest form of collateral has been US Treasury bills or bonds or dollars. And you could, they're fungible. You can post them as collateral and margin. But in a world that's fracturing, which I think we're probably creating a few spheres of influence around the world, and US is probably Western Hemisphere, and Europe and Russia have to figure it out, and China will have the East. And I think there's a growing interest by lots of governments in the world to not be on the dollar system if they can avoid it. I think Bitcoin serves as potentially a great form of collateral that can be moved instantly, effectively, at zero cost or at close to zero cost. And so I got excited about blockchain because I saw the promise of that type of world, not necessarily where Bitcoin is that source of collateral, but that technology. But Bitcoin could become that in this world. And so in a low trust world where you can't just trust that if you put your money into treasuries, you're going to get it back, which Russia just discovered. It can't put their money into European banks or US banks or anything because it can get confiscated. You could use gold, but you actually have to store gold somewhere. You have to dig it out of the ground, then you have to put it back in the ground, and then you have to associate it with a token, and then you have to secure it, and you have to make sure that no one's going to take possession of that wherever it is in the world. Whereas Bitcoin actually is the first big-scaled asset that could provide that source of collateral that no government in the world can touch. So I think if I were to look out over the next 15 years at what could be its biggest value, I think that could be its biggest value. Now, it's still too volatile, really, to fill that role at scale, but it's getting there. It has that chance. So if I were to think about what's the potential big win for Bitcoin, that's probably what it is over the next 15 years. Could become bigger and better things over a longer period of time, but that's kind of it. And in the meantime, it's still a highly speculative asset, and bigger players are getting involved, and some of the early players are getting out, moving on. And so it's interesting.
Yes, wildly.
Yeah.
One more formal question. You occupy a bunch of different places in the asset management business. You have the trend following piece, you have the digital piece, you have the volatility piece. If you were to hazard a guess what your business, or just kind of writ large, the asset management business looks like in 5 or 10 years, do you have a strong instinct?
Lots going to happen in that period of time. One of the big things, one of the big dynamics that we see happening, and I see from my seat at Coinbase, is this wealth transfer from baby boomers to younger people it's game on.
Yeah.
So the way that people invest in trade is going to shift from, certainly you're younger than I, but certainly from my generation older, to I think more of a speculative kind of investment mindset.
Yep.
I think a lot of what's happening in blockchain and DeFi actually over the next couple of years is going to find its way into traditional markets. There are going to be people posting all sorts of new collateral to get leverage to take other risks. And so I think we're going to end up in quite a speculative market, which means the highs will be higher, the lows will be lower. I do think over the next decade, we're going to have this debt sustainability crisis. It could be soon. So if the AI theme really craters, I think we see a huge recession in the US, and then we see massive stimulus, and you have debt sustainability concerns. And that's a crisis that starts looking a lot more like 08, but even bigger, because the government's not going to be able to bail out the market the way it has in the past, because it's the source of the problem in many respects. So I think that will change the nature of markets. So I think you're going to have younger, more speculative skewed markets. Young people have a lot of money to speculate with. I think you'll see a great move into robo-advisors. So a lot of young people, we're working on some of this stuff right now, are going to turn to AI to help them make investment decisions. I think that'll probably change the nature of some of these markets. And I think in the background, you're going to have this big debt issue, which ultimately leads to some kind of inflation. And I think that will change the nature of the asset management industry. I don't think that AI is going to make all investors obsolete. And at the end of the day, people with a lot of money, maybe someday they just give it to a machine. I don't think that's the case. I think firms like ours will, as long as we stay curious and nimble, I think we'll do really well, grow a lot.
Let's finish with the proverbial lightning round. What's your greatest strength as an investor?
I think I triangulate really well, which just means probably like you, I talk to a lot of people. I've cultivated a group of really smart and insightful investors and traders that I talk to, and I read a lot. Probably spend a third of my time reading, third of my time talking to people, third of my time internal, the firm or firms. And I think for me, I don't care if an idea was my idea or not. I really just want to figure out how to make money for our investors and build a great firm and supply great ideas and services. And so I just think if you have a great group of people that you've talked to over a long period of time, so you can kind of know when they get too bearish, you can sense it. When they get too bullish, you kind of know it and you can feel that in yourself, like we were talking about with market turns. So I think if you do that, if you invest a lot into that and then are a good listener, which I am, then you can triangulate information well. And I think my writing has helped me enormously. I'm sure it's helped you. When you put upon yourself the pressure to publish every week, it's a blessing and a curse. If you do that, it rewires your brain. It makes you have to organize your thoughts clearly and be able to articulate them. And that process within yourself, I think, it helps your life, your trading, your business, and investing.
What's the best piece of advice you've ever received?
This isn't a throwaway for my wife, but it is. I think I've always been a good team player, but for a lot of my life, I really kept to myself, and she pushed me to really be open. And my writing's a reflection of that. Now I have a big distribution. I talk about personal things and ideas and themes and things, but like opening yourself up to a lot of people has been incredibly gratifying personally. It's been very helpful professionally. But I think it's also, when you do that, you force yourself to be more introspective, and there's nothing more important, I think, in life, definitely investing, but even in life, there's nothing more important than being introspective, because otherwise you don't keep learning. And so that really came, like when I reflect back on my life, that came from that advice.
Okay. Which investor do you admire the most?
I don't want to offend anyone by not including him on the list, but if I look through my career arc, I learned about market reflexivity through Soros. So my early years in London, I was reading everything I get that he put together. And I think his framework for thinking about markets and trading and investing and cycles and booms and busts has always helped me. And I love the fact the guy started with nothing, and he had a big chip stack, and he has for so long just kept pushing it out there. I saw that early movie about Paul Jones in '87, and I've always loved that guy ever since. And I think what I admire most about him is his longevity, because I've seen a number of people who are close to me really suffered through this business mentally. And I think he's shown the path of, like, you can be a great trader and you can build out a team around you. And I think with that team, it's allowed him, I don't know if he would say this, but from my perspective, it's allowed him to sustain and be as outstanding as he has been for so long. And then I got to know Ray a bit later in my life through my writing.
Ray Dalio.
Yeah. I just admired his approach, which in some ways is kind of mine, which is probably why, in other words, he started his career through communication and trying to help big institutional clients. And I've really tried to do a lot of that myself. It's astounded me that no one's ever really tried to copy what Ray's done, because it's so successful. And so he's built an amazing business. I admire that. And I think he's obviously been a great investor. And I think he's always tried to help his clients. And I think he's trying to help younger people with advice and his wisdom. And so I admire all those things. But I don't think there could just be one investor. There are others as well. But those are some of the big names of people that I've really admired.
Okay. Last question. Where do you spend your time outside the office?
I told you it took a year in the mountains when I was about 30, and I monked out. I just climbed and skied and paraglided, read. And so I've always had this draw to the mountains. Jackson Hole is where our family spends a bunch of time now. And I love just being outdoors, altitude, nature, animals. Not really a tennis player, a golfer, or anything like that. No, there's nothing wrong with that. I hope at the end of the day, like I go down with a grizzly bear or a shark or something like that, as opposed to something really, really boring.
Yeah, makes for.
But we'll see.
Makes for a good tombstone.
We don't get to choose.
That's right. That's right. All right, Eric, that's the run of it. Thank you so much for doing this.
Great. Thank you. This is awesome.
Thank you all for listening to this episode of Goldman Sachs Exchanges Great Investors, which is recorded on December 17th, 2025. I am Tony Pescarolo.
The opinions and views expressed herein are as of the date of publication, subject to change without notice, and may not necessarily reflect the institutional views of Goldman Sachs or its affiliates. The material provided is intended for informational purposes only and does not constitute investment advice, a recommendation from any Goldman Sachs entity to take any particular action, or an offer or solicitation to purchase or sell any securities or financial products. This material may contain forward-looking statements. Past performance is not indicative of future results. Neither Goldman Sachs nor any of its affiliates make any representations or warranties, expressed or implied, as to the accuracy or completeness of the statements or information contained herein, and disclaim any liability whatsoever for reliance on such information for any purpose. Each name of a third-party organization mentioned is the property of the company to which it relates, is used here strictly for informational and identification purposes only, and is not used to imply any ownership or license rights between any such company and Goldman Sachs. A transcript is provided for convenience and may differ from the original video or audio content. Goldman Sachs is not responsible for any errors in the transcript. This material should not be copied, distributed, published, or reproduced in whole or in part, or disclosed by any recipient to any other person without the express written consent of Goldman Sachs. Disclosures applicable to research with respect to issuers, if any, mentioned herein are available through your Goldman Sachs representative or at www.gs.com/research/hedge.html. Goldman Sachs does not endorse any candidate or any political party. Copyright 2025 Goldman Sachs, all rights reserved.
Hi, I'm Kim Vanell in Whanganui, New Zealand. It's Monday, December 29th. Today, a Ukraine peace deal remains elusive after Trump and Zelensky meet. Israel's Prime Minister heads to Mar-a-Lago for talks on Gaza. The Hellcats seeking to flip the House for Democrats next year. And New York's warning labels on social media. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, 7 days a week.
And I do think we're getting a lot closer, maybe very close.
US President Donald Trump speaking after meeting with Ukraine's President Volodymyr Zelensky at Trump's Mar-a-Lago estate in Florida. Earlier, Trump spent hours on the phone with Russia's President Vladimir Putin. The talks are a sign efforts to end the war in Ukraine are ramping up again, although any deal is far from done. Zelensky referencing one of the thorniest remaining issues, that of land concessions, and says any changes to Ukraine's borders must be put to the people.
Of course, our society has to choose and has to vote, because it's their land, the land not of one person, it's the land of our nation.
The other big issue is who will guarantee Ukraine's security in the future. French President Emmanuel Macron says countries in the so-called Coalition of the Willing will meet in Paris in January to finalise their contributions. The next dignitary to visit Mar-a-Lago is Israeli Prime Minister Benjamin Netanyahu. He'll hold talks with Trump later today. They'll be discussing Iran and Lebanon, but the most important item on the agenda for both is what happens next in Gaza. Here's reporter Mayan Lubell in Jerusalem.
As far as we know, Trump is very keen to move on to the next phase of the ceasefire in Gaza. This is actually the phase that's the most difficult. There are many complications. This is the phase that includes Hamas disarming. It is supposed to include an international force keeping the peace, governing body to be set up, and Israel withdrawing from Gaza entirely. None of these details seem to be agreed or worked out yet. On top of all this, Hamas has yet to hand over the remains of the last Israeli hostage who's still in Gaza. So there's another complication there. Hamas has so far refused to lay down its weapons, and Israel said that if Hamas is not disarmed peacefully, then Israel might have to go back in and do it themselves.
One point of contention is which countries will be a part of the International Stabilization Force.
So Israel has rejected, for instance, Turkey being in it, and we know that Trump is in talks with Turkey about a bunch of other issues which are making Israel very, very uneasy. So how aligned are they is what we're going to know after this meeting. It's a test for Netanyahu, domestically speaking. It's a test for Netanyahu how much he'll be able to push Israel's interest in this meeting. They don't all align with what Trump wants. That's quite clear.
While Netanyahu looks to his domestic audience, President Trump will look to do the same as he enters his second year in power, facing waning voter support. Democrats are hoping that translates to a blue wave in the midterms. They need to flip just 3 seats in the House to win back the majority and halt Trump's legislative agenda. And part of their strategy involves a group of women called the Hellcats.
As someone who spent 16 years in the military as an active duty Army officer, serving in numerous combat zones, I've led men and women in the service of this country in defense of America and the Constitution.
That's Kate Conley, Army veteran and Democratic congressional candidate for New York's 17th District. She's one of the Hellcats, a name which pays homage to the first female Marines of World War I. Now it refers to the 4 Democrat women with military backgrounds running for office, who Dems are hoping will turn the tide in their favour. And as reporter Helen Coster explains, it's worked before.
In 2018, there were 5 female candidates with military and service experience who won in their respective races. They called themselves the Badass Caucus after they won. And then in November, Mikey, Cheryl, and Abigail Spanberger, two of the women from that group, ran for governor in New Jersey and Virginia and won. So there's evidence that this is a winning strategy, that this idea of the national security mom or the women who have this military background is a really desirable biography and background for candidates in the Democratic Party.
Helen says the women are positioning their skills as very translatable.
When they serve with people of all different backgrounds, all different political affiliations and perspectives. And in their mind, none of those things are important when you're on a mission. It's all about the person to your right and your left and working as a team. So they think that they can bring that ethos, that service mentality to political office and be effective lawmakers.
New York is mandating warning labels on social media platforms about the risk to young users' mental health. Governor Kathy Hochul says apps with infinite scrolling, autoplay, and algorithmic feeds must now carry the alerts, comparing them to warnings on tobacco. New York joins California and Minnesota with similar laws as concern grows over social media's impact on kids. Jasper Ward is covering the story out of Washington, D.C.
So the warning labels will appear for at least 10 seconds when a user logs on, and again for at least 30 seconds after 3 hours of social media use, and every hour thereafter. New York's Attorney General will have power to bring legal action and seek civil penalties of up to $5,000 per violation of this law. It will mostly affect social media platforms with infinite scrolling and autoplay, and these platforms would then be required to display the warning labels that are chosen by the New York State's Commissioner of Mental Health.
Jasper says the newly passed legislation won't go into effect for a year.
I've reached out to some of the social media companies, TikTok, Snap, Meta, and Alphabet, but I haven't actually heard back from them. The move is being welcomed by some groups like Common Sense Media, which has described it as an important progress toward protecting children. The previous U.S. Surgeon General issued an advisory on the safeguards of children and has previously called for social media warnings like the one we're now seeing in New York.
It's a volatile end of the year for precious metals, with silver easing off record highs. Anushka Sakui from our sister markets podcast Morning Bid is here to tell us what's going on with the white metal. Morning, Anusha.
Good morning, Kim. Yes, silver has been on a tear, reaching over $80 an ounce today, and gold as well, reaching new highs. Both have retreated a little, but driving that has been investors seeking safe havens, hedging against Fed rate cuts. There's also supply issues playing into that, and of course, a complex geopolitical backdrop where, we've seen some comments over the weekend about potentially getting closer to peace in Ukraine, and investors are taking a little bit of profit on that. But the rally is expected to continue into the new year.
Thanks, Anusha. You can listen to Morning Bid wherever you get your podcasts.
So I feel like we just brought more attention to our sport, and I don't see how it can be bad, how you can talk negative about this. I think
Aryna Sabalenka hitting back at criticism that her Battle of the Sexes match against Nick Kyrgios risked reducing women's tennis to a sideshow. Kyrgios beat Sabalenka 6-3, 6-3. in a game billed as a modern take on Billie Jean King's famous win over Bobby Riggs more than 50 years ago. Kyrgios also dismissed any negativity surrounding the event, praising Sabalenka's performance.
Andy Murray, Djokovic, Federer and Nadal have all lost to me. And she just proved that she can go out there and compete against someone that's beaten the greatest of all time.
Dubai's Coca-Cola Arena was sold out for the match, played on a slightly smaller court meant to equalise the sides, and under modified rules like one serve per point. French President Emmanuel Macron is paying tribute to Brigitte Bardot, calling her a legend of the century after her death at 91. Bardot shot to fame at 21 for her role in And God Created Woman, later becoming as well known for her passionate defense of animals, speaking here in 1968 against seal hunting in Canada.
À partir de ce moment-là que j'ai décidé de m'occuper de ça.
In later life, Bardot's incendiary right-wing remarks about immigration, among other things, saw her fined 6 times by the French courts. But her influence endured. Her fans gathered at her statue in Saint-Tropez, calling her an icon. And for today's recommended read, Kolkata's iconic trams face their final.
Across the credit spectrum today. Scott, great to have you here.
Thanks for having me, Mike. It's a real privilege.
So I want to start today talking about today's credit landscape. Right now, we're talking about spreads are at about 3%, the 90th percentile. The private credit markets are wide open. You might even say booming. And defaults overall seem like they're relatively in check despite a couple of high-profile defaults. So the high-level stats are looking pretty good. But there are a lot of signs of stress out there. So you guys are professional skeptics. You make your money by looking at the downside and forecasting the downside, and you've done so successfully for a long period of time. Where are you seeing, I don't know if it's a canary in the coal mine, but where are you seeing the signs of stress?
Sure. We've been spending a lot of time recently, and my partner, John Lewinson, who I founded the firm with, spends a little more time on this than I do. He's more on the research and macro background, but we've spent a lot of time on the consumer in the US. Everyone knows the low-end consumer has been doing poorly. That's been true. Everyone was starting to use ChatGPT, trying to figure out what the impact was going to be. A lot of people were buying NVIDIA stock. Our investors were not paying us to do that.
Right.
So we did not have that option. Yeah. There's plenty of ways they could get exposure to that.
It's pretty good in retrospect.
Should have bought it. But we were looking at, okay, who are the infrastructure players? Because there are a lot of, in the levered credit markets, there's a lot of telecom infrastructure. They're going to be big winners. And it was pretty clear to us when you looked at what was a huge CapEx cycle for training these AI models, when people actually started using the AI for inference, to use it in Goldman or Diameter, using it to model companies or to build a software agent, then it had to leave the data center. You weren't just throwing chips and information at it and power. It had to leave the data center. How would it leave? It would leave on the commercial fiber, the pipes. So there was a company, a mid-sized telecom company, sitting within a larger distressed telecom company. And we bought the unsecured debt there mid to late 2023 at 30 cents on the dollar. We thought we were buying debt that was 2 or 3 times covered. So we made it a large position. We ended up doing a transaction with the company to give them more capital. Fast forward to 2024, they signed up 10 plus billion of contracts to provide large hyperscalers with access to their commercial fiber, and the debt's now at par. We take that a step further. We look at, okay, who's the next winner? If commercial fiber is going to be a winner, Spectrum's probably going to be a winner too, because mobile data is going to have a huge increase when you go from IoT to robots to cars, cell phones, Starlink, whatever it is. So we made a big bet on a satellite company that was the largest owner of spectrum in the US outside of the big telecom providers. We then did another transaction with them, provide them more capital, secure assets against spectrum. Fast forward to this year, they've now sold spectrum to larger entities and the debt back to par. But if I think about software, what's so interesting about the training phase, it's a lot of CapEx. There's issuance right now in the investment grade market. We participated in a transaction where one of the hyperscalers, they guaranteed a debt deal off balance sheet, but back-to-back guaranteed at 150 basis point spread to the underlying debt. So 75 spread or 80 spread on the existing bonds, 225 on the new debt. Really interesting opportunity. But we have confidence in the cash flow of that company. We're also seeing a lot of opportunities in the chip finance space. Financing chips is something that we weren't really thinking about doing 2 or 3 years ago. That wasn't on the notepad. There have been some people who are at the forefront of that. We were not a leader there, who made a lot of money. And now that opportunity set has become more broad-based. And you ask where we're seeing strange risks being taken. We did a transaction with another partner recently where we were at the senior part of the chips, so it amortizes over 3 years, earn a double-digit yield. And then there's people taking the junior residual risk on these. And I just don't know. We call up really smart people in Silicon Valley. We call up really smart people at big tech companies and ask them what the residual value is on these chips 3, 4, 5, 6, 7 years forward. None of them have a clue. So I don't understand making a multi-billion-dollar bet on that. That seems crazy to me. So we tried to stay at the upper end of the capital structure on the data center and chip financings. And then when you think about a big tech change, in my career, when we've had huge technology changes, be they Amazon internet, it creates winners and losers. Fracking, winners and losers, right? And the fracking is an interesting analogy to now with, you mentioned software. So you had fracking come along, Shale boom starts right after the GFC. When I get to Anchorage, we're learning all of these new issues.
Yep.
New issues in the Bakken, in the Mississippi Lime, in the
Permian,
Permian, all these basins. So we learned all these basins. You look at hundreds of credits. This is the model. Know the names, learn the credits.
Yep.
So when something changes, you can differentiate and you can move quickly.
Yep.
2014 comes along, OPEC decides to go to war with the share players.
Yep.
Oil crashes. And when you have a sector that at the time was almost a third of the high yield market,
Yep.
and it starts to sell off, there's no differentiation. It is a high correlation sell-off. People just went out. And they can't sell the bad stuff
Yep.
at 50 cents. That doesn't get them out of that much of their exposure. So they're selling the Permian bonds at 75, 80 cents. Those
Yep.
went right back to par, as we all know. And the Mississippi Lime and some of the offshore stuff that was at 50 that we were looking at shorting went to zero. So there's real dispersion.
So ChatGPT going to war with the software
Well,
players?
So it's really interesting. You don't have an oil price going up and down like that.
Right.
So the cycle now will be a little bit of a slower bleed. But if you look at LevFin private credit, about 1/3 of that market is software SaaS LBOs.
Yep.
Between high teens percentage of the syndicated bank loan market, also SaaS.
Yep.
These have been great companies to lend to.
Yeah.
Recurring revenue, not a lot of cyclical exposure. If I look back at COVID, obviously the investment grade opportunity, buying bonds in Goldman Sachs and
Yep.
big companies at very wide spreads in March of 2020, that was the first thing we wanted to do. But that opportunity was gone in about a month.
Yeah.
And once that opportunity was
Yeah,
over.
by the way, I remember talking to the leader of one of the large tech buyout firms saying, these things, we levered them to 9 or 10 times. You've got 95% retention. Like these things cannot go into distress land. Well,
so
here we go.
We were buying tons of security-based software loans because the loan market, that levered loan market, people were selling, they were getting outflows. We said, we're sitting at home, we're not turning off our antivirus.
Yep.
This seems like a great buy. We bought those at 70 or 80 cents on the dollar. They went back to par. You fast forward 5 years from then, and the same security-based software companies we were buying and we exited at par are now, some of them are now distressed.
Yep.
Why? Not AI. Cloud providers went and took share from them because they were too levered and they couldn't move fast enough.
Yep.
Most of those LBOs are pre-GPT.
Yep.
We ask.
Just think about that for 1 second. ChatGPT was not even being discussed in the investment world, not even talking to the general public. In general, maybe it's in some of the venture capital firms.
Sure. The smartest venture capitalists will probably focus on it.
But in the buyout
5,
firms,
6, 7 years ago.
Exactly. The buyout firms in general were not even talking about it then. I think it's an interesting point.
No, and we've asked some of them, and they went from 0 time at the IC to a quarter or half.
Right.
But not just negative, but what are the positives? What are the negatives? It's a risk factor.
Yeah.
I want to understand how I can win or lose from it. So we focused on originating in our LevFin private credit business,
Yep.
more of the post-GPT
Yep.
SaaS deals. People are aware of the risk. They understand what the moat is. Maybe it's even a benefit. What concerns me is the vintage of deals, the vintage of LevFin private credit, where LevFin private credit was growing very fast in the late teens and early 20s. A lot of money flowed into the asset class. Many big public alts managers growing, issuing, doing every deal they could to raise the
Right.
next dollar because the fees are very high. You end up with 1/3 of your portfolio in one sector.
Yep.
In credit, that's horrendous portfolio construction.
Yep.
In equity, I get it. You have convex upside, you can make a money multiple, completely understand it. In either syndicated bank debt or LevFin private credit, where you're issuing the debt at 98 or 99 cents on the dollar, and it's callable then at par. So you
Yep.
can make 1 or 2 points of appreciation plus your coupon. I think it's almost criminal portfolio management or
Yep.
portfolio construction. You really need to think about what you're doing because defaults tend to cluster. Now,
Yep. It reminds me of you were mentioning in 13 and 14 was happening in the oil and gas sector. I think oil and gas got up to what, probably close to 20%.
Higher. Higher as a percentage of high yield.
Of the index. Now it's probably less than 10%. Great example.
Yeah. So I'm not saying all SaaS companies are bad. In fact, I think most SaaS companies will be fine.
Yep.
But the SaaS companies that got LBO'd pre-COVID, late 2010s and through COVID, weren't necessarily the S&P 500 largest SaaS companies in the world. They were, in many cases, 1 to 10 billion EV companies with they were slower growth, not good growth, but slower growth, and rip out some costs, change the go-to-market model, do some M&A, re-IPO, sell to another private equity guy. It's been a great repeatable strategy for many private equity firms. But the issue is, it's not when that starts to go bad in SaaS.
Yeah.
When you start to churn subscribers and your retention goes from 98 to 95 to 90, and we made a mistake in a SaaS investment, Diameter, in a software investment in 2018 when they started to lose subscribers. We doubled down on the distress. We learned our lesson. When these things start to go bad, it's not like you have oil in the ground. That cash flow scheme goes away. And the docs on a lot of these loans aren't such that you can take the asset for a very long time. They're weaker docs. So I would be concerned about what the eventual recoveries are going to be, even if the default rate isn't extreme. We do expect increasing defaults there, but also very low recoveries given default.
And so, Scott, are you in the mode of finding lots of active opportunities right now, or is this the diameter period of get to know everything and wait for the opportunity to come to you?
In the software space?
Yes.
In energy in 2014, we were shorting.
Right.
Because they were high yield bonds. So you could go and say, which are the companies that are the highest on the cost curve, had the worst economics, short those. Here, most of them are not in shortable asset classes, and they're with sponsors that we wouldn't want to short their credits anyways. So you're in syndicated bank debt and private credit. You can't short those asset classes. There's no borrow in them. So it's learning a lot of credits, knowing the names, which is our model, having that CLO business, the private credit business sitting next to each other, a lot of research cross-functional across the two, understanding as many credits as we can, so that if there is a time when the tide goes out on SaaS, we'll have an opportunity in our hedge fund, in our drawdown fund, in our CLOs, in our private credit business to buy the good businesses at the wrong price. Similar to what happened in energy.
I'd like to pivot again and talk a little bit about the origin story of Diameter. We go back together as firms, and I'm proud to say that we were at a minimum early in getting behind you and John. But tell us about the story. I think it's a good one.
Sure. So John and I, as we talked about earlier, met at Anchorage in 2010 when I joined from Citi. He had been there for a few years, and he had been named head of research. So he sat on top of the research. I sat on top of trading, and we both helped manage the portfolio along with the guys that founded that firm. We started as early as 2011 going to breakfast. We have sons that are the same age, and we both lived in Tribeca. Going to Bubby's, which is a famous restaurant in Tribeca, in pancake inflation like you've never seen.
People wait in line for an hour every weekend to have $35 pancakes.
Amazing.
You know, welcome to New York City.
And we would go and have breakfast with our sons and talk about credit. And John, at like one of these breakfasts, after about a year of being together at Anchorage, said to me, I think we should start a business together. And I said, well, that sounds great, but I don't know if I'm ready. I've been here a year. I need to learn more. But we kept talking about it. And we had a deck in 2012. And then in 2013, he had decided he wanted a different challenge. And he went to a firm that was a little more focused on distressed. Anchorage was very focused on underwriting the business side of the asset side of the balance sheet, the business. He went to a firm that was more focused on the liability side, learning kind of the dark arts of the docs, which was good for us now to have both. So he left, I stayed, I had more to learn there. But in 2016, when it came time for me to leave Anchorage, I reached out and I said, hey, we've been doing these breakfasts every weekend talking about this. Still, we were doing them after he left. They became even more important. And we got together and we said, okay, let's do it. So we started in early 2017, but Steve Bossi, who used to be in your group and has since retired and is on one of our boards now.
Amazing guy.
Reached out to me the day I left Anchorage. And I met with him and Kevin Kelly, who ran Prime Brokerage at the time for Goldman, and Jason Brouth, who ran credit, the next day. And they said, listen, we want to be involved with whatever you're going to do. And not everyone at Anchorage wanted them to be having that meeting. So I thanked them for having that meeting. And a big credit to David and John. Not only was GSAM a day one investor, but David was the first visitor at when we moved on our small office in Bryant Park. He was our first visitor from anywhere.
David Solomon, our CEO.
So he was the first visitor from anywhere. And John Waldron, who's the president of Goldman, has been an incredible advisor to us as we built our business. So we owe a lot to Goldman as a firm, as a true partnership. I say that in the most sincere sense of the word.
Well, we deeply value the relationship, and the way that you guys put this firm together reminds me a little bit of Led Zeppelin. You know, Jimmy Page and Robert Plant really had a vision of what they wanted to do, and they got it right on the first album. You guys are the same way.
Only as good as our last trade, though. We've got to keep going every day. I mean,
exactly right. I want to talk about sports for a minute. You're a sports nut. You've been into sports, but The Boss is Back. Is such a great story about how you got interested in investing. And, you were right there at the inception of fantasy sports.
Yes, sir.
Tell us about how that started.
So, huge Yankees fan growing up, Hitman, Don Mattingly. I would get USA Today Baseball Weekly every week. Go through the stats, learn about the teams. So the Yankees in the 80s were not very good. The Mets were the strong team in the New York area. And so all my friends were Mets fans. I was a Yankees fan.
For our younger listeners, the newspapers used to have all the stats in the back in the sports page.
That was where you would get it. And USA Today had this thing called Baseball Weekly. And I saw there was something called Bill James Fantasy Baseball. Anyone who's listening who's a Red Sox fan will know very well who Bill James is. Bill James was hired by Theo Epstein and that group to help bring sports data into the Red Sox.
Yep.
But before that, he was the godfather of rotisserie or fantasy baseball.
Mm-hmm.
He worked with a company called Stats Incorporated, which is now an LBO that we lend to, ironically, to build this fantasy baseball thing. I signed up. They sent me some spreadsheets, filled them out. Your draft picks, who do you want where? I sent them back. I get the week before the season starts. This is probably 1988, 1989. So I'm 8 or 9 years old. I get them back. Here's your team. Here's your players. And you're in the league with 15 other people around the country. Here are their emails. These were like AOLs and Yahoos and Hotmails. Right. And here's an MS-DOS prompt. You can go on and see the stats, but very clunky dial-up modem type stuff. I get my team and I start calling up trying to make trades. And then I realize all these guys have jobs.
Right.
You know, I'm bothering them with their job.
And you're how old?
I'm 9. You know, so
it's crazy.
And the boss's back was, you know, George Steinbrenner had come back. I thought the headline was funny. So that's why it was the name of the team. Not that I like George Steinbrenner, although he did do a good job in the 90s and early 2000s for the Yankees. I got to know a group of guys in the league in Boston because I was doing some trades with them. They all worked at Standish Aaron Wood, which is a mutual fund shop. And they invited me up. I won, I think, 2 of the first 3 years. So I think I want to say I'm 12 years old. They invite me to come up to a Red Sox Yankees game. And I said, can I bring my dad? And they're like, why would you want to bring your dad? Is he a Red Sox or Yankees fan? I said, no, he does his taxes at the baseball games. He doesn't like baseball. He's a banker. I'm 12. And they were like, whoa, we thought you were in college. We didn't think we thought you'd get out of class, you'd call us. They didn't realize I was that young. So we go up there, we take the train up there from Tri-State area. And these guys start talking to my dad. And they're saying to him, your son is really, he's researching these players and he's making these draft picks and he's beating us. You should be focused on finance.
Yep.
And so we're on the train back. And my dad says to me, and he says, I ride the train to New York with some finance people you could learn from. Tony James, who obviously then went on to run, who was at the time DLJ and then CS, then went on to run Blackstone. John McFarlane, who at the time was at Solomon, but went on to run Tudor for Paul Jones.
Yep.
And other people like that really could be helpful to a 12-year-old that was interested in finance. So I started meeting with those people, you know, not every month, but like a couple times a year to learn, and then worked as a runner on the floor of the stock exchange. When I was 15 years old, I took the train in and did that, learned about the equity business that way. In college, I had the privilege of working for Paul Jones, Tudor, and learned a lot from him about when to take losses, position sizing, which still some of those things I'm using in Diameter now in terms of risk management. And that's the story about getting into the sports stats and the sports data are what got me into
There's
it.
a lot of analogs. One final sports story, and then we're going to move to our lightning round. You're a sports fan in general. You're also a soccer or / football fan.
Yeah.
And you have a stake in the World Cup next year. So talk to us about how you're serving your country by helping out Team USA as we all start to get fired up about the World Cup next summer.
So I was actually born in France, and I lived in France for a number of years and then lived in Spain at one point. So I have that kind of got me interested in football and soccer. I played as a kid growing up in around New York. But the time I spent in Europe around the game got me interested and more passionate about it. And then having my kids play it, they're much better than I ever was.
Right.
And watching them play has gained me more interest. So there's a guy named Kyle Martino who I played against growing up. He was the best player in Connecticut. He was also then on UVA, then the national team.
Right.
Now he's a broadcaster. You'll see him on TNT doing the games for the US games. He has a close friend named Sean Feeney. Sean started at Goldman after college, was the captain of that UVA soccer team, and now is a very close friend of mine and worked for me in Anchorage. We have a text thread going back and forth talking about US soccer. And I was lamenting how bad they were in the summer of 2024. They lose in I think they lost to Panama. Terrible. So
shouldn't happen.
It shouldn't happen. Should not be happening. We got the World Cup in 2 years. This should not be happening, okay? And the women's team had gone through a bad patch and had just hired Emma Hayes, like globally elite coach. And had gone and won the Olympics. So I'm sitting here saying, wow, the women's team made a change, upgraded the coach, goes and wins right away. And they had a better tracker running than the men's team. But it says in the press that we're interviewing people like Jurgen Klopp, Mauricio Pochettino, globally elite top 10 coaches. So I said in this text thread, you know, let's get these guys. And they're like, there's some rules about how much we can pay the coaches, unclear that we can afford. So I said, I'll pay. I literally wrote, I'll pay. But the next week I'm meeting with the CEO of US Soccer, JT Batson, who's an incredible guy, former software executive, who's now taken his time and dedicated to building out soccer in the US. And JT says to me, are you real? Do you really want to engage in this? I said, listen, the World Cup's here in my lifetime, at least it was 1994. Now it's going to be here in 2026, every 30 odd years. I'm, because of my kids, because my love of sport, passionate about soccer, football, growing in this country and becoming a more high profile sport. And there's a problem with youth development here that needs to be fixed. But I think if we can have a better showing in this World Cup, we have better players, we have a deeper talent pool, we've just had the wrong mentality, that's going to be impactful in the country.
Yep.
And that's why I want to do this.
Yep.
So he says, okay, I'm doing the interview process.
Okay. What is your greatest strength as an investor?
I think it's breadth and the range, the ability to look at the credit market and say, there's an opportunity in investment grade today and distress tomorrow, and be able to go from investment grade to distress seamlessly and not have any friction in terms of thinking about what the relative opportunity set is. And that global permeation of relative value across all the different asset classes, for me, that maybe isn't my Diameter's greatest strength, or John would have different strengths, but that's my best strength.
That's your greatest strength.
And I'm a fast seller. Like when something's changing in a position, when it doesn't smell right in our liquid tradable products, we get out quickly.
You get out. Sounds like you've had a lot of great mentors over time. What's the best piece of advice you've ever gotten?
Dan Allen, when I was leaving Anchorage, and it wasn't necessarily my decision to leave, said to me, this is the best thing that's ever happened to you. And Dan was the president of the firm at the time. And he went out of his way to make sure, and as did Tony, who was the co-founder, went out of his way to make sure that we raised capital and we were successful and supported us. He said, this is the best thing that's ever happened to you. You're going to be better working for yourself, where you can really dictate and set a tempo. And if you want to be direct, you want transparency, you're not going to have any friction.
Yep.
And that was great advice from him.
Where do you spend your time outside the office?
At Kids Sports, we spend most of our time in Florida. That's where we're based. But Kids Sports, enjoying dinner with my wife, traveling with the family.
Nothing better than sharing a passion with your kids. Finally, what are you most excited about in the world right now?
I think the World Cup is something to be really excited about in the U.S. Everyone's talking about AI and tariffs, but in 2026, I think the two most interesting things in the U.S. are World Cup.
Yep.
And then we've been talking a lot about AI CapEx.
Yep.
How about AI adoption and winners and losers?
Mm-hmm.
So who are the companies, who are the entities that are going to adopt AI and take a step forward vis-a-vis their peers?
Yep.
And who are going to be the losers? That is actually a longer cycle than the CapEx cycle.
Yes.
So that's really interesting.
Yeah. It's a fascinating time to be living right now, to be investing. But I like your World Cup pitch. I think it's going to be I've been to a couple World Cups and it's a blast. So I think
it's going to be awesome.
It's going to be great. Scott, we really appreciate you being our partner, and thanks for joining us today.
Thanks for having me, Mike. It's a privilege.
Thank you all for listening to this episode of Goldman Sachs Exchanges, Great Investors, which was recorded on December 8th, 2025. I'm Michael Brandmeier. And if you enjoyed the show, we hope you'll follow us on Apple Podcasts, Spotify, or YouTube, or wherever you listen to your podcasts, and leave us a rating and a comment.
The opinions and views expressed herein are as of the date of publication, subject to change without notice, and may not necessarily reflect the institutional views of Goldman Sachs or its affiliates. The material provided is intended for informational purposes only and does not constitute investment advice, a recommendation from any Goldman Sachs entity to take any particular action, or an offer or solicitation to purchase or sell any securities or financial products. This material may contain forward-looking statements. Past performance is not indicative of future results. Neither Goldman Sachs nor any of its affiliates make any representations or warranties, expressed or implied, as to the accuracy or completeness of the statements or information contained herein, and disclaim any liability whatsoever for reliance on such information for any purpose. Each name of a third-party organization mentioned is the property of the company to which it relates, is used here strictly for informational and identification purposes only, and is not used to imply any ownership or license rights between any such company and Goldman Sachs. A transcript is provided for convenience and may differ from the original video or audio content. Goldman Sachs is not responsible for any errors in the transcript. This material should not be copied, distributed, published, or reproduced in whole or in part, or disclosed by any recipient to any other person without the express written consent of Goldman Sachs. Disclosures applicable to research with respect to issuers, if any, mentioned herein are available through your Goldman Sachs representative or at www.gs.com/research/hedge.html. Goldman Sachs does not endorse any candidate or any political party. Copyright 2025 Goldman Sachs. All rights reserved.
world's two largest economies are competing in a tech race that some have compared to the Cold War nuclear and space race between the US and the Soviet Union. So is the US or China currently ahead? And what will determine who ultimately takes the lead in this technological rivalry? I'm Allison Nathan, and this is Goldman Sachs Exchanges. Each month, I speak with investors, policymakers, and academics about the most pressing market-moving issues for our top-of-mind report from Goldman Sachs Research. I recently spoke with Mark Kennedy, founding director of the WABA Initiative for Strategic Competition at NYU's Development Research Institute, and with Paul Triolo, partner at DGA Albright Stonebridge Group. I started by asking Mark just how important a role tech plays in the U.S.-China strategic rivalry, and who's winning the tech race today.
Technology certainly seems to be at the center of the U.S.-China strategic rivalry. Is that an accurate characterization of the role of technology within this rivalry, or do you think that there's just too much emphasis on that role and that it's being overplayed?
I don't think it's being overplayed. Tech isn't just at the center, it's really the switchboard. Because whoever is going to route the data, the standards, the compute in the future is really going to impact every domain, from military might to economic influence to how you reach out with your message. And I think it's not overplayed, but I think what's underplayed is the geopolitical implications of that. When we think about the tech race, we need to understand that there's really four arenas in this tech race. Who leads in the technology? Who leads in applying that technology? Who leads in installing the digital plumbing that really underpins everything? And who leads in terms of self-sufficiency? On most of the leading technologies, US is winning. On semiconductors, on AI frameworks, on cloud infrastructure, on quantum computing, on global talent. But there's parts of the technology where China is winning. They're ahead on quantum communications, on hypersonics, on batteries. In terms of applications, China's really pressing hard and catching up in many areas and ahead in some. When you look at like robotics, one measure shows China using 12 times as many robotics in their manufacturing when you adjust for the income scale differences of employees. So they're leaning hard into trying to keep their manufacturing edge by staying ahead on the applying robotics. And in global installations outside of our closest allies, China's dominating. If you look at Huawei, they're as big as their next two largest competitors. They're dominant in the global south. And when it comes to independence, China is deliberately, through their dual circulation and other strategies, focusing on achieving independence. And you're seeing that with the recent edicts of the government not allowing some of their companies to buy Western chips. They're giving an energy discount if you're training your model without using Western chips. Just one of 1,000 different ways that they've been trying to gain independence and encouraging that. The U.S. will be dependent on China for some time to come. So I'd say America's largely ahead on the first aspect, but China is either catching up or ahead on the other aspects of this tech race.
So if we think about where each country has leverage and how it's exercising that leverage, how much have the export controls the U.S. has implemented impacted China's technological advancement?
Well, first of all, China was planning on not having to be dependent on American chips to begin with. The tech restrictions have accelerated their push in that direction. They're finding ways to be able to do with less advanced chips and do have access to U.S. chip technology at some level. So it's slowing them up, but this will not be the silver bullet that will keep the U.S. in the tech lead for an extended period of time.
And if we think about the leverage China has, and we've heard so much about rare earth minerals, will its grip on these rare earths impede the U.S.'s ability to maintain its leadership?
It's critical, and they've given us a 1 year, if it lasts that long, reprieve from the more restrictive controls on rare earths. The U.S. needs to take that seriously. But we've known about this for a while, and we've admired the problem as opposed to really taking deliberate steps. There have been some more recent steps of taking ownership interest in rare earths investing, but here we need our allies. So Australia, Canada, others are vital to those sources of supply. So I think we need to be even more deliberate than we are and take the risk of China's chokehold on this very seriously.
So what else does the U.S. have to do to win the tech race?
You need to have the best technology. We're either flat or reducing our funding for research to universities. We're making it harder for the world's best talent to come in. We need to have the scale to match the deliberate effort that China is putting in to own the wiring, own the rails, own the digital flows in the global south, or we're going to sacrifice them. Are we going to live up to the standards that'll make sure that the tech we advance is meeting the values and standards that we've always held? There's some question on the former, and there's an increasing question on reliability. Without having the same standards that many people are looking for, that's going to mitigate our trust. The other thing that's very much mitigating our trust is things like cutting off satellite access for Ukraine, even for a day, or the AI rule that says that we may decide not to sell to you. So with China, countries may not trust the installation once it comes in there, but China is selling we're a more reliable supplier to you than America. And energy is going to be very important. Can we scale up our energy at the level that we need to power the data set and growth that's going to be necessary to have the compute power to win at that level of the best technology? If you look at what China is doing in the renewable energies in terms of wind and solar and nuclear and others, they're leaning very heavily into that. America, as you know, is start, stop, go, pause, and we have a lot of natural energy from traditional sources, but China is working very hard to make sure they have the sources. We are leaning now more heavily into nuclear, and we need to, but it's going to take a while to achieve that.
The U.S. government does seem to be taking a more active role in important sectors to make progress towards these goals. We've seen, for example, reports that the government is funding or partnering with companies in the rare earth space. So will those kinds of policies move the needle at all?
Well, the access to the minerals that they will allow us will help. But it's something we are going to need to do because these are very volatile, cyclical commodity markets. And China, with their dominance, has the ability to basically bring the price down, squeeze out competitors. So it's unrealistic for us to have assured supplies of some of the most vital minerals if we're not willing to have some kind of an offtake agreement where we're guaranteeing a level of price that they can at least sustain their production. Those are going to be necessary to have the sources of supply at the mineral level that will allow us to do the magic at the digital level. But it's unclear how, for example, taking an ownership interest in Intel is going to be long-term beneficial, or could that be negative to the extent that either a real or perceived golden share prevents some of the tough actions for restructuring that are going to be necessary for Intel to become globally competitive again. There's absolutely no question that having our own foundry is vital. And right now, at scale, the only player we have is Intel. We have TSMC investing in us, but their primary interest is Taiwan and keeping that silicon shield. And what they're doing in America is a shadow of what they're continuing to do and building on in Taiwan. So the interest is there, but it's hard to point to examples of the U.S. investing in commercial enterprises, particularly mature commercial enterprises, that have had a long-term beneficial impact.
Let's flip back to China. We talked about the U.S. What further steps must China take to win the tech race?
First of all, they're doing a lot of things right. Most effective is that they are sustained, deliberate, stay on course, target their efforts. You know, when you look at the research that they're investing into these technologies and compare it to the US is still somewhat ahead on total research, but China is all directed at a few key technologies that they think are going to determine the future. And so I think having a sustained level of investment has been very helpful to them. They're also focused on sources and markets. They didn't just think about rare earths yesterday or last year or last decade. They've been thinking about it for a long time, but it's not just rare earths. If you look at ports, if you look at many other areas, they know what they need to have continuing to come into them. And they also know that they need to have markets. They're doing a much better job of establishing markets in the global south and other places, and they're willing to take sacrifices to achieve that. They need to make sure they have the global south locked up as a customer base because they see US and Europe and other Western allies moving away from them. But they also see that they need to very quickly develop their chip industry. So part of what you're seeing is them favoring the local chip manufacturing and industry so that commercial dollars are flowing their ways. It might still be Chinese commercial dollars, but to fund that development and to accelerate that development, and are willing to sacrifice some near-term performance in order to achieve that. The other thing they need to do is they need to be trusted because the Chinese model is control. And not only do they come in with control, it's not interoperable, it's not easily changeable, you're kind of locked in, but they also have the China cyber laws that would require any Chinese company to give the government any data that it asks for. So those types of things reduce trust. This is in many ways a battle for trust. America can win that battle if we focus on it. China's further behind in that, and that's an area where they need to make sure that people not only think their tech is cheap and reasonably good, but is trusted.
So who's going to win this tech race, the US or China?
I don't think we can say, but again, I talked about the four pieces of it. I can see a world where America wins the best technology, but China has the most installations. You know, when you look at the number of electronic engineering graduates and PhDs they graduate every year compared to us, they're dramatically more than us. And that quantity takes on a quality of its own. So I can see them winning that application track. I can see them winning the installation track, particularly outside America and its closest allies. And I can see them winning the we're independent of you, but you're still dependent on us race. So you could have a situation where we're owning the blueprints, but they're owning the buildings. We're in the lead in the code, but they're in the lead on the circuits. And that has huge geopolitical and economic consequences for America.
Paul Triolo, partner at GGA Albright Stonebridge Group, agrees that the jury is still out on whether the U.S. can maintain its tech lead, and specifically its lead in building the world's most powerful AI models. He says much will depend on whether China can overcome critical choke points in the semiconductor supply chain.
When we think about the global semiconductor supply chain, which really is at the heart of this AI technology, where are the choke points and who controls them?
Great question. So I think, first of all, there isn't one supply chain, right? There are multiple interlocking global supply chains, and products go back and forth across continents. There are maps that show the wafer starts here, it goes here, some value added here, it goes here, then it's finally packaged, then it goes into a product. So the word supply chain is not all that representative of what the reality of the industry is. It's the most complicated set of technologies that crisscross the globe to get put into a final product. There are these key technologies that are part of that. So the first one that is fairly commonly talked about is advanced lithography. This is the tool that eventually prints the picture of the semiconductor layout onto silicon wafer. And that's being done now at levels that's really hard for the human brain to comprehend, 2 nanometers, right? Which is way smaller than a single strand of hair. So the dimensions of these semiconductors, the dimensions which we're talking about for the features, these are the feature sizes, are really, really teeny and have been shrinking rapidly over the last 30 or 40 years. This is what's been driving Moore's law, the doubling of capacity and capability every 2 years. And so lithography has ended up being this key gating function, if you will, because ASML, this Dutch company, ended up developing the most advanced lithography, extreme ultraviolet lithography tools over the course of the last 20 years, moving through successive types of lithography tools. So right now, that's a big choke point because to get to the most advanced architectures and feature sizes for semiconductors, you need EUV. And the other 2 choke points, as you get smaller and smaller feature sizes, other parts of the tool making sector become important. So etch, this is the stage after the lithography, you etch away using various chemicals and advanced tools to expose the underlying circuit. And so as part of the lithography process, you're putting a mask down, and then the next step is etching. And in EUV lithography, you really need really good etching equipment to do this. And there are US tool makers like Lam and Applied Materials and TEL from Japan are also really important players there. And then finally, there's the other choke points in terms of the ability to put all these tools together and manufacture something at that advanced feature length. TSMC, Taiwan Semiconductor Manufacturing Corporation, it turned out that their business model became a choke point because their model was, we'll focus just on the manufacturing process and we won't compete with our clients. And so other foundries like Intel and Samsung are also making devices of their own. But TSMC became the trusted go-to player in part because they weren't competing with their clients, and in part because they're just really good at engineering, and they've developed trusted relationships with both the tool makers and their clients. And so they're able to uniquely push the manufacturing innovation to the needs of their customers. And so that model proved to be really amazing. So now they produce over 90% of the most advanced nodes.
So is it possible for any country to become self-sufficient in semiconductors?
If anybody can do this, it's probably China and Chinese companies because it's a big country. They have a lot of STEM education programs and they're cranking out a lot of engineers per year. They have the incentive now because of US export controls, and they've been largely cut off from access to EUV starting in around 2018. The US, working with allied partners, basically was able to prevent Chinese companies from purchasing EUV equipment. And so since then, the Chinese system has been trying to figure out how do we develop all these parallel technologies that you need to develop EUV. But what makes lithography so difficult is that it's really a systems integration problem. So you're integrating complex systems at scale, optics, the light source, lots of software, and lots of little pieces of the puzzle, and also materials like photoresists. So the lithography has to work with photoresists, and then it has to work with all these other tools that are part of the manufacturing process. And also, the really important and hard part is to service these pieces of equipment because they're very delicate. As one industry insider once told me, he said, it's easy to build a prototype, but it's really hard to service hundreds of these things at 24/7 operating in foundries to keep them up and running, because in addition to being complex machinery, they need spare parts, their software updates, and you need a really capable workforce to be able to support deployments of those complex tools for very demanding customers worldwide that are expecting maximum uptime and very few defects. And so that's part of the challenge, is you need a lot of very seasoned engineers to service that. And companies that are manufacturing millions of semiconductors at the cutting edge, they're going to be reluctant to risk an unproven technology.
You mentioned export restrictions to China. It would be useful to get your answer on how effective those policies have been in slowing China's progress towards its own self-sufficiency and everything it's trying to pursue in terms of AI.
Yeah, the US has prevented the sale of the most advanced GPUs to China. GPUs are the unit, if you will, of compute for developing advanced AI models. So the US policies have been effective in cutting off access, but it's a little more complicated than that, because the cutting off of access has forced the Chinese industry to get better. There has been a collateral effect both on the semiconductor manufacturing side and on the GPU design and development side of forcing Chinese companies to get better, to be able to develop alternative capabilities. And so we're in the middle of that process right now. In terms of the effectiveness, I guess the outcome remains to be seen. If China, for example, is capable of developing a pretty good alternative supply chain for manufacturing that allows it to manufacture GPUs that are maybe not as good as NVIDIA's, but are pretty good, and enable them to develop advanced AI models that are pretty good and competitive, then we'd have to reassess the effectiveness of them. So the effectiveness depends on what the goal is. And that really is the second part of your question, which is China's ability to develop advanced AI models. And there, all of the leading open source and open weight models are all Chinese. They're all from companies like Alibaba, Tencent, Baidu, Moonshot, Zhipu AI, and DeepSeek. And that's a really weird situation, right? So the US has controlled semiconductors to slow China's AI development, but Chinese companies have access to older NVIDIA chips and to new Huawei chips and GPUs, and also developing their own internal in-house chips, have been able to continue to design very capable AI models. And a year ago, this wasn't the case. A year ago, the leaderboards, for example, in the open source, open weight model arena were Meta and US companies and Mistral from France. But now they're all Chinese companies because the Chinese companies like DeepSeek decided to go the open source route, and that's allowed a lot of rapid innovation. So right now, the leading models are being developed in the US at OpenAI and Anthropic, which are both closed proprietary models. But in terms of uptake of models, because Chinese models are open source, open weight models and are cheaper to initially deploy, all those open source models are being more and more used by companies. So that's a really interesting trend. And so when you talk about slowing down China, the issue of diffusion of these models is not often discussed, but it's an important thing because the success of AI is based on the development of capabilities and models, and also who's using it. But really, almost more important right now is the deployment of these models in business. And the Chinese government has been pursuing policies to try to help companies like DeepSeek by building data centers all over China. So the Chinese government has tried to build out a supporting infrastructure nationally, both in terms of power and in terms of data centers, and make it a little bit easier for Chinese companies to gain access to compute. The bigger AI labs like Alibaba and Tencent and Baidu have their own cloud-based infrastructure. And so for them, they don't really need the state data centers to support them. But other smaller companies don't necessarily have the capability to have their own massive cluster of data centers to design their models. So for those companies, having access to compute will be important.
We've also heard the argument that China's dominance in rare earths and its abundant power supplies gives it significant advantages over the U.S. in the AI race. Is that true?
The rare earths issue is less salient, arguably, in terms of the AI data center build out. It's more important for industries right now, like the auto industry, even consumer electronics, and of course, defense and aerospace, where things like magnets come into play. Now, magnets are important also in the semiconductor industry, but really small numbers there, and the Chinese are issuing licenses for those. So rare earths are going to be a constant irritation, but they're not going to really affect, I think, the build out of large scale AI infrastructure. But energy is going to be this big gating function. Power is going to be, in the US, a huge constraint on the build out of these data centers because these data centers require a lot of power, constant, stable power. And if you look at all the alternatives in the US, for example, nuclear and natural gas, things like turbines and transformers, there's a huge supply chain problem in the US in terms of supplying sufficient quantities of hardware really to generate enough energy. And we don't have a unified grid either, which China also has, that makes it easier to move power from place to place. Because of that power issue that the US has, probably a lot of data centers will get built in the Middle East, and US companies will use those just because the Middle East has access to so much fairly cheap power.
So who will ultimately prevail in the AI race, the US or China?
First of all, the premise that the US will be able to stay ahead is premised on the idea of scaling and the idea that the more GPUs, the more compute you throw at these models, the better they will get. And the jury's still out on that. A lot of it depends, of course, on the ability of the Chinese semiconductor industry to overcome some of those hardware choke points that we mentioned earlier. China's big disadvantage, frankly, is they didn't pay attention to semiconductors in the 60s and much in the 70s. So they lost 2 decades or more of focus on an industry, while in the US, there was a lot of attention being paid to developing the semiconductor industry. And China has the disadvantage of underdeveloped capital markets. The US had the luxury of a lot of patient capital in helping to finance the development of our semiconductor industry, and China just doesn't have that. So the government has to play a bigger role. As I said, the only country in the world that could even conceive of trying to recreate large parts of the semiconductor supply chain is China, because they do have the numbers of engineers and they do have the government resource incentive now to do this. But we don't have any other example of this being done to compare to, right? So it's hard to assess how successful they will be.
There seems to be a perception from where I sit in the US that the US is leading the tech race, especially when it comes to AI. But perhaps the most striking takeaway I had from my conversations with Mark and Paul is that China has a lot of advantages over the US. And that could lead to China ultimately coming out ahead. That would be especially the case if China has more access to advanced US chips, and that's the direction US policymakers seem to be moving in, at least this week. Let's leave it there. My thanks to Mark Kennedy and Paul Triolo. And thank you for listening to this episode of Goldman Sachs Exchanges. I'm Allison Nathan.
The opinions and views expressed herein are as of the date of publication, subject to change without notice, and may not necessarily reflect the institutional views of Goldman Sachs or its affiliates. The material provided is intended for informational purposes only and does not constitute investment advice, a recommendation from any Goldman Sachs entity to take any particular action, or an offer or solicitation to purchase or sell any securities or financial products. This material may contain forward-looking statements. Past performance is not indicative of future results. Neither Goldman Sachs nor any of its affiliates make any representations or warranties, expressed or implied, as to the accuracy or completeness of the statements or information contained herein, and disclaim any liability whatsoever for reliance on such information for any purpose. Each name of a third-party organization mentioned is the property of the company to which it relates, is used here strictly for informational and identification purposes only, and is not used to imply any ownership or license rights between any such company and Goldman Sachs. A transcript is provided for convenience and may differ from the original video or audio content. Goldman Sachs is not responsible for any errors in the transcript. This material should not be copied, distributed, published, or reproduced in whole or in part, or disclosed by any recipient to any other person without the express written consent of Goldman Sachs. Disclosures applicable to research with respect to issuers, if any, mentioned herein are available through your Goldman Sachs representative or at www.gs.com/research/hedge.html. Goldman Sachs does not endorse any candidate or any political party. Copyright 2025 Goldman Sachs, all rights reserved.
Equity markets. And we'll also get the chance to hear some stories from his career, as well as his uniquely informed views on how capital markets have changed over the past few decades. David, welcome back to Goldman Sachs Exchanges.
Allison, it's great to be here.
Can I first just say that I am sad that this will be the last time I am interviewing you on Exchanges. For our listeners and viewers, David and I have worked together for nearly 30 years. You've been here for 31. I have been here for 28. For half of that time that I have been here, we have sat 20 feet away from each other. So I will really miss you dearly.
I am going to miss you along with many other colleagues here at the firm. But I'm going to be an advisory director in calendar year 2026. So I'll be interacting with some clients and other internal people. So we'll have an opportunity to see each other. But I've had a great experience for the last 3 decades.
I want to take the opportunity to reflect on your very long career. But before we get into those reflections, let me take the opportunity to ask you for the last time about the markets. U.S. equity markets have made new highs this year, but the markets have been pretty volatile over the past few weeks. So how would you characterize market sentiment right now?
Actually, at the start of the year, the sentiment was pretty optimistic. And then, of course, Liberation Day on the 2nd of April really created a lot of havoc and volatility increased dramatically. But that has receded in the last couple of months. And in fact, the market had a pretty monotonic increase, pretty steady increase from the low in April. And it was only recent when the government data stopped being released that we had a modest increase in volatility. But I think the story of calendar 2025 thus far has been actually volatility has been right in line with the last 5 years. The VIX measures around 19, and it's actually trading a little bit below that right now. And I think that bodes pretty well looking into calendar 2026 in terms of the setup for the market.
And so in these last client conversations that you're having, are investors nervous or they're just seeing momentum in the market and think it's expected to continue in 2026?
Nervousness comes from uncertainty, and uncertainty is a form of risk, and risk in the markets is measured by volatility, which is the VIX. And so the risk has been a lot of concerns on the part of investors, but I think that has been largely dissipated. We had a very strong third quarter earnings season, which I think was an important stabilizing factor in the market, in my opinion. We had pretty good results, not just from the Magnificent Seven, but really a broad array of companies in the market increasing earnings up almost 9% year over year. And I think that's a pretty important stabilizing factor in the market right now.
Right. There's obviously been a lot of focus on AI. We got some good earnings out of NVIDIA. The market still was volatile in the following days because there's still a lot of questions about whether we're in a speculative bubble. We've talked a lot about that on this podcast and within the research group, but you've been watching it very closely. So what are your thoughts?
Allison, the most frequently asked question from investors all over the world has been, are we in an AI bubble? And that is, I think, important to answer that in 2 ways. The first is it's not a single market. There's a market for price and there's a market for capital availability. Those are 2 markets. They exist both in the public and the private space. So if you take that analysis and think about it, it really has 2 implications. One, we are not in an AI bubble in the public markets. And I believe in the private markets, the availability of capital and the price is probably unsustainable, which one could take as a synonym for a bubble. And I think the way to think about it is as follows. In the public market, NVIDIA, which is the company that people most associate with AI, the share price has increased by 12-fold in the last 3 years, and earnings have increased by 12-fold as well. So pretty much the price and the earnings have matched each other. So that would be one example of where the price in the public markets, if you will, AI, is not a bubble. It's sort of matched the earnings growth and the price. And think about the valuation of the largest companies in the market, many of those associated, of course, with AI. They trade around 30 times earnings. Largest 10 companies in the market traded 40 times earnings in 2021, just after coming out of COVID. And in 1999, the 10 largest stocks traded at 50 times earnings. So 30, 40, and 50. So you would say that we're not necessarily in a price bubble, if you will, on absolute basis, still high relative to history, but not nearly what it has been at other periods of time. And you can think about the capital availability in the public markets. We've had about 55 IPOs in the United States this year, 55 deals greater than $25 million in capital raising. You had 280 deals or so in 2021. That was a very robust raising of capital in the IPO market. And you had nearly 400 deals in 1999. This is an example where there is capital availability in the public markets, but not necessarily buoyant. It's there, but not so dramatic. I think there's a much different story in the private market for AI. And I think that's important insight that really came from George Soros and his book, The Alchemy of Finance. The Alchemy of Finance was published in 1987, and George Soros laid out his theory of reflexivity, which was linked to an important insight into how the capital markets trade. He had chapter 1 on reflexivity in the equity market, chapter 2, reflexivity in the currency market, chapter 3, reflexivity in the bond market. Now, what is that reflexivity about? Most people think the valuation of an asset is the discounted future value of the cash flows. George Soros argued in the Alchemy of Finance that is not the right way to think about it, that actually the valuation of the shares today, the price change is an integral part of the valuation of the shares. That is a differentiated view. It's thinking about momentum. The relevance for private market for AI is that as these firms are raising capital, the growth rate increases. As the growth rate increases, the valuation of the enterprise increases, and that is a recursive process. Reflexivity is what George Soros called it. And that continues as long as there is new capital that can be brought into the market. But the experience in 1999 was that at a point in time when the growth cannot be sustained or may not be sustained, you have a recursive or reflexivity coming lower. The so-called circular financing. I think there are two different issues. One is the nature of reflexivity, and the second is the idea of capital being funded through vendor financing. At some point, the vendor doesn't necessarily have the same growth to be able to fund that growth. And that's a critical distinction between the public markets and the private markets in AI. And it is the number one question that we are getting asked by investors really for the last 6 to 8 months, and a concern about it. And I think it's important to break it into the two pieces, price and capital availability in the public and the private markets.
And as you said, so there is some areas of concern, but you talk to these investors all the time. And people think, oh, the market's been at an all-time high. We've just talked about volatility picked up, but in general, it's not been a particularly volatile market this year, but it's been a difficult market for a lot of investors. Why is that, and what are they most struggling with?
I think you can think about it in terms of the performance. First of all, if you look at the mutual funds, around 29% of the mutual funds are beating their style benchmarks. That would be the relative performance of core managers versus the S&P 500 index, growth managers versus the Russell 1000 Growth Index, and value managers versus the Russell 1000 Value Index. So those are the sort of measures that you think about. And that's typically around 37%. A greater percentage of mutual funds typically outperform than is the current situation here. And if you think about hedge funds are up around 12% year to date, and that's compared with the S&P 500 increase of around 17%. The market itself has done pretty well. The hedge funds and mutual funds have struggled on a relative basis in this environment, which has been so driven by the AI trade. I think the uncertainty and the volatility that occurred around the Liberation Day in April put a lot of investors in a challenging position as the market sold off a lot. A lot of funds did not increase their position, their gross exposure, as the market was rallying pretty dramatically in terms of the rebound from the lows this year. I think that's been the challenging story for a lot of fund managers.
So we talk about the smart investors, the smart money. What is the smart money doing now? What opportunities do they see?
It's difficult not to own some of the biggest stocks in the market, and that is the performance that has been the story for this year. I think the opportunities that people are looking for, fund managers, healthcare, statistically cheapest in 30 years on a relative basis, and the idea relative to the rest of the market, relative PE multiple. And as the uncertainty around some of the healthcare policy perhaps recedes, there is a opportunity from a value perspective in some of that defensive sectors, and healthcare would be an example. Second area to focus on, or that clients are looking around right now, is on the consumer retail. A lot of concern about the state of the consumer, both an income perspective and from employment and unemployment. But the Goldman Sachs economics team is looking at the sort of middle income component of the economy, that there is actually some stability and some growth. There'll be benefits next year from the tax reform that will kick in. And so a lot of concern around the lower income strata of the United States, the wealthier cohort and the higher income cohort benefiting from a lot of the rise in the stock market, that middle income, sort of the companies that are benefiting from that. And the third would be some of the AI beneficiaries, that there is a lot of focus on beneficiaries, particularly on the revenue side. Almost all the discussions around AI tend to be around companies that are looking to improve their margins, lower their cost and raise their margins, which is important. But a relatively few number of companies have actually focused on really concrete examples of how they're using AI to drive their revenue growth. And I think that is what fund managers will embrace and will be rewarded in those share prices. I think those are three areas: healthcare, some of the consumer areas, and some of the perceived long-term beneficiaries from AI.
Well, that's where the value is. But are clients actually then shifting their portfolios towards these, or are they mostly sticking to the momentum trades?
Well, the largest stocks in the market are comprising right now around a third of the index. The idea of not owning those stocks would be a sort of challenge. You get a huge amount of risk in order to avoid those. So they tend to own those in a meaningful way. The mutual funds are underweight those stocks relative to their benchmark. Otherwise, it'd be too concentrated and violate some of the rules on what constitutes a diversified mutual fund from the perspective of the SEC. And so they tend to be a little bit under allocated to the biggest stocks, but the hedge funds are definitely still embracing those companies, which have had terrific performance. They are growing their earnings more rapidly than the rest of the market. And I think that's an important driver of their returns. They're investing huge amounts of CapEx, and that's really the story behind the AI build out. And so there's a lot of enthusiasm around that. As I said earlier, I do not believe there's a bubble in the public markets for the AI securities. I think there is a lot of concerns around the commoditization of those products. What is the pricing dynamics of what they can charge in the future? There's a significant amount of concern, and that's reflected in some of the conversations we have with investors, but they're still owning those companies for as long as they keep generating those earnings.
Let me ask you, about a year ago, you made news with a very modest forecast for long-term S&P 500 returns. We're talking over the next decade. And that was partially due to what you saw as high valuations. Valuations have only continued to rise, if anything. So do you stand by that relatively dour view of long-term returns?
The Goldman Sachs portfolio strategy team has recently published, not just a year ago, most recently published a forecast for the returns for the S&P 500 over the next 10 years. There is a range between 3 and 10%. Annualized total return, midpoint of that is around 6.5%. And it is my belief that we're probably going to be on the lower end of that distribution. It's number one. Number two, that is a return that is still positive, but it is below the long-term average. And one of the reasons for that, in my opinion, is the starting point of valuation is high. And most importantly, my concern remains around the concentration in the market. And the way I think about it is as follows, that there is a high concentration, and in a high concentration portfolio, one would expect a greater level of prospective volatility than a broadly diversified portfolio. And normally you would think about investor being compensated for the potential above average expected volatility, which would be associated with a narrow concentration market. But that is not the case. The idea is the market trades at a very high valuation. Right now, the S&P 500 trades around 23 times forward earnings. That's a pretty high, historically high valuation. Not the highest, but pretty close to the highest level. In 1999, it was 24, 25 times as an index. So it's very high versus history. Margins are very, very high. Now, they could continue to increase. That is a possibility. I think that is probably less likely. So therefore, the risk would be that you have potential multiple contraction over time. So earnings will grow, valuation comes down, and I think the valuation is likely to lead to, high valuation today, lead to a below average, still positive, but below average return in the next 10 years. Of course, I hope it's a really strong return, but analytically, I think it's likely to be below average.
Interesting. Let me shift the conversation a bit because, as we mentioned at the top of the program, you are about to end your day job as a chief equity strategist. Ultimately will be at the firm in other capacities. I'm sure this is a time of reflection for you. So let me just ask you, do you still remember your first day and what was that like?
My first day at Goldman Sachs was a very eventful day in the history of the firm. Not because I joined, but because on September the 12th of 1994, my first day on the job, I started in the morning, and that evening the senior partner resigned or retired. That was Steve Friedman, and that was a very difficult year for the firm. The Federal Reserve hiked interest rates 7 times. The Fed funds rate went up 2.5 percentage points from 3 to almost 5.5%. 10-year yields went from 6 to 8%. S&P 500 return that year was around 2%. It was a very difficult time for the firm. It had an enormous set of layoffs. So I absolutely remember my first day at the firm. There were only 2 research analysts that were hired in the fourth quarter. Myself to focus on real estate, and a colleague for 25 years, Steve Strongen, was hired at the same time to focus on commodities. And those were the 2 areas that led the firm back to profitability in the next several years. This was before the rise of the tech bubble. It was the rise of raising capital for real estate was an enormous driver of that. One of my iconic memories for the time I joined is there used to be a vice president's dining room. Everyone was in 85 Broad Street, single building, small building, old. And they had a vice president's dining room, which was available. There was no internet, so you had to call up, make a reservation. Maybe you could seat perhaps 100 people maximum. And you would be able to go through a line, get some food from 12 to 12:45. That was one seating, and then they would flip the lights and you had to leave, and then there was another seating from 12:45 to 1:30. And so that was a iconic memory. I got to use that 3 times because it closed at the end of the year. There was no cafeteria, there was no gymnasium, there was no health unit. It was a traditional office building, but there was this area that you could sign up for. Occasionally we took that opportunity to have lunch together. It was a great opportunity as well to meet other people, but I only got to use it 3 times.
So it was an inauspicious start to your career, but in some ways quite lucky because, as you said, you were in an area that ended up being a tremendous growth area for the firm and a very important area of the firm. And I always say luck has something to do with it, right? Hard work, but luck. You have had so many interactions with the most influential investors and asset allocators in the world. If you were to think back, are there 1 or 2 conversations that have really stuck in your mind?
So there are. I mentioned earlier George Soros in his book, The Alchemy of Finance. I took the opportunity to go see him and discuss that. His insights came from an analysis of real estate securities, and I was the real estate analyst. I had reason in 2015 to fly to Omaha, Nebraska to meet Warren Buffett, and I had another reason 24 years before that I met him in 1991. So we met in 2015. Of course, there were reasons why I would remember the previous meeting. I was shocked that he also had remembered that. His memory was extraordinary, and he asked a lot of questions. I would say, Allison, there's sort of several meetings and client types that resonate with me over time, and it was the way that those fund managers engaged with our research, my research and the research of the rest of the team. And so one is from a macro perspective, Paul Jones at Tudor Investments, and the way he would engage with my analysis on the equity market. And he was always thinking about what were the implications for the rates market, the currency market, the commodities market, as he would think about other ways to implement some of our views or some of our insights into equities, and how does he play that across in other areas. So I thought that process, and over the many years I had a chance to interact with him and other macro investors as well, that was an interesting way for me to learn how other people incorporate our analysis. Another approach with the hedge funds. They engage single stocks, much more specific, more tactical in nature. And I have a particularly strong memories with a number of meetings with Jim Parsons at Junto Capital, where I would go in, we did the analysis of the positions that were published on the long side of his portfolio. We would go in, we'd say, Jim, I think you should be selling these stocks, you should be buying these stocks. And we would have a very intense dialogue over an hour and a half meeting. And he has an amazing poker face. So I could never tell if he was agreeing or disagreeing or what he had on the short side of his book. And that was a series of those meetings that really stand out. And the third classification would be mutual fund managers. And there, I have a lot of meetings with Don O'Neill, who retired after 40 years at the Capital Group. And the meetings there were always about the longer horizon and what happens if X development takes place. And how do you think about that? And our analysis, we had some nearer term views, some longer term views, but he would really challenge my thought process to expand it. And so when I think back, Allison, the client meetings, that is the best part of the job, in my opinion, to engage with fund managers of all types. And some of the research, they would ask us to do some customized projects for them, which really gave a lot of enjoyment to the job over many years.
Right. And it makes your research better, having all of these different perspectives.
Absolutely. Engaging with the clients. And that was a heart of what we try to do at Goldman with our investment research, to engage with some of the leading investors in the world.
Capital markets have obviously also changed dramatically over the past 30 years of your career. When you think back to some of the biggest changes, are there any that you feel have generally been underappreciated for their impact?
My perspective, I think about the arc of my career, it was very asset focused at the beginning of my career. And in fact, last evening, I had the opportunity to have dinner with Eric Dobkin, a very prominent senior partner at Goldman. but he was the one who invented the equity capital markets on Wall Street here at Goldman. And he and I worked together on a number of equity offerings in the 1990s, and we reminisced around that. But the idea of assets and the asset value and what is a company worth and how to think about that in terms of how investors will embrace a particular company has evolved. And while it's still important, a lot of the discussions that we have now are around alpha in the market. What I mean by that are the characteristics of individual companies. So companies can be collectively viewed as part of a basket. And we started to introduce this in 2006, which is almost 20 years ago, ways of trading not just individual companies, of course, but they may group those in certain categories, whether they're a group of companies that are more exposed to non-U.S. revenues or stronger balance sheets or certain attributes of companies. And investors have been trading those over time. That's increased in my client conversations. I call sort of from assets to alpha. That existed before, but I think it's become ever more so as a trend. And so that's not something that is always appreciated or viewed, but I think that is something, an important development over the last couple decades.
And so in some ways, the job of a strategist has changed as you thought about implementation of some of these strategies. How else has the job changed over the last 30 years?
It has changed in a number of important ways. The framework that we use is actually quite similar. I think about it in terms of the economy, earnings, valuation, and money flow. And I think about those as almost four legs of a table and trying to understand where the opportunities may exist. Is it an economic cycle we should be thinking about? Should we be thinking about earnings and margins and what are the stress points, different industry groups, valuations, where there are opportunities, and where's the money flow coming from? That framework has remained pretty consistent over a long period of time. And that was a lesson that I learned very clearly from Steve Einhorn, one of my predecessors. He hired me. There has been 4 equity strategists at Goldman Sachs in the last 55 years. During that same period of time, there's been 9 senior partners and CEOs of the company. And so the 4 strategists, you had Lee Cooperman, really focused on stocks. Steve Einhorn looked at both a framework involving the economy and stocks. Abby Cohen, my immediate predecessor, really had a way of focusing on the economy, what the implications were for the equity market. Myself, I've perhaps moved the pendulum a little bit more closer to where Steve positioned it, and I was more fit into a broader perspective is important. And whether that is somebody in research, whether that's investment banking, whether that's trading, whether sales, I think that is an important perspective. And the second is to think about the fact that there's an enormous breadth of clients that are out there. And you think about sovereign wealth funds and pension funds and insurance companies and endowments and hedge funds and mutual funds, all of whom are looking at a public market or a private market, venture capital or private equity, that is they're approaching the challenge of getting returns in different ways. They have different horizons. They have different risk tolerances. And so that has made the job energizing and engaging. I traveled more than 100 days a year for more than a couple of decades. And all those different conversations are really what I will remember fondly, and particularly my engagement with colleagues here at Goldman Sachs. So it's been an honor to be at the firm for more than 30 years and to leave my mark and then also transition to my successor, Ben Snyder, who I think will do a great job.
Great. David, thank you so much for your time today. And again, speaking personally, I just, again, want to thank you for all the insights, all the humor, all the candid discussions. I can't count the number of afternoons I've spent in your office, spending much longer than I anticipated. But the stories, David, I'm going to miss the stories. And I stand by my view that nobody can light up a room like David Kostin can. So we are going to really miss you. And I am sure our audience who knows you well will agree with me.
Thanks, Allison. It's been a pleasure to be at Goldman Sachs for a long time. And also my conversations with you are among my fonder memories. Thank you.
And thank you for listening to this episode of Goldman Sachs Exchanges, which was recorded on Tuesday, December 2nd. I'm Allison Nathan.
The opinions and views expressed herein are as of the date of publication, subject to change without notice, and may not necessarily reflect the institutional views of Goldman Sachs or its affiliates. The material provided is intended for informational purposes only and does not constitute investment advice, a recommendation from any Goldman Sachs entity to take any particular action, or an offer or solicitation to purchase or sell any securities or financial products. This material may contain forward-looking statements. Past performance is not indicative of future results. Neither Goldman Sachs nor any of its affiliates make any representations or warranties, expressed or implied, as to the accuracy or completeness of the statements or information contained herein, and disclaim any liability whatsoever for reliance on such information for any purpose. Each name of a third-party organization mentioned is the property of the company to which it relates, is used here strictly for informational and identification purposes only, and is not used to imply any ownership or license rights between any such company and Goldman Sachs. A transcript is provided for convenience and may differ from the original video or audio content. Goldman Sachs is not responsible for any errors in the transcript. This material should not be copied, distributed, published, or reproduced in whole or in part, or disclosed by any recipient to any other person without the express written consent of Goldman Sachs. Disclosures applicable to research with respect to issuers, if any, mentioned herein are available through your Goldman Sachs representative or at www.gs.com/research/hedge.html. Goldman Sachs does not endorse any candidate or any political party. Copyright 2025 Goldman Sachs, all rights reserved.
You got your start in the trading pits in Chicago. Are there some lessons that you still carry with you today from the days of Open Outcry?
Oh, many. They're almost entirely risk management. I started trading my own money. So I figured out my senior year in college that I wanted to trade.
Okay. What did you study?
economics.
Yep.
Which wasn't really, honestly, it's not that relevant. But I actually met with all sorts of people who did different jobs, very successful people. And I stumbled across someone who became my mentor out in Chicago, who was a very successful trader. And I concluded, I'm never going to be bored doing this.
Yep.
So, and I've always wanted to do something on my own. So I didn't go to Wall Street, just there. I'd made some money. I had some businesses in college, so I made some money.
Okay.
Just packed it up, went out there. And yeah, when you're trading your own money and you're a young guy or an older guy, it's sobering.
And this was the corn pit?
Corn pit.
How'd you pick corn?
I was told that you lose less money in corn, and I didn't have much money to lose. So I figured, you know what, let's start there. Back in those days when you got a seat on an exchange, and it was a little exchange, we traded out lots. You'd go through this orientation class, and it was look left, look right, and not many people are going to make it. And it was all about survival. Because within 2 years, almost everyone from that first class of 30 was gone.
And how long did you do it?
I did it for 2 years.
Yeah. Okay.
Yeah.
And then quickly, the career path from there, what came in between Pitt and One River?
I lost that mentor tragically, and so I had a bit of a soul-searching period. I almost joined the military. I thought maybe finance isn't for me. I'd done well, and then I got through someone at Lehman Brothers, a very senior person there, talked to me and just said, you know what, I think you should come here. Not many people do what you've done. You should just give it a try. And I had told myself I was never going to Wall Street, so I was like, 2 years in, I'm going to go to Wall Street again.
Got it. Okay.
And after a year, I was convinced that I really didn't be on Wall Street. But my boss sent me to London, and he just said, listen, I know this is not your scene, so why don't you, and what I mean by that is I think I've always just been a pretty independent builder type person, and it was just bureaucracies are not really my thing. So he said, go out to London. It's very entrepreneurial out there. People are still smoking on the desk at the time. It was non-developed by US standards kind of business. And he just said, just figure out how to make money and I'll support you. And I got there at an amazing time, which was the ERM crisis. And so we figured out how to make a lot of money.
This is the early 90s?
Early 90s, yeah. I got there in 91. And then I ended up staying at Lehman for a bunch of years. I was a prop trader, Credit Suisse, took a year off, climbed mountains, which was another whole new form of risk management, and started a company during the dot-com period, a financial company, which was my first real operating experience of a significant company. Sold that in the 04 or something like that, and then went back into trading, first for myself, then a couple hedge funds as a macro PM, and then started One River in 2013.
Okay. In my mind, part of what you do is macro, with an emphasis on trend following, and part is whatever we want to call it, digital, crypto. As we sit here today, how do those two worlds complement each other?
I'd say what we really do at One River is risk mitigation, and we're highly opportunistic. And so trend following is part of that, but long vol's a much bigger part of our business. Okay. And we kind of bring those two things together as risk mitigants for our clients. But we're always on the hunt for things. And just as a macro investor, you don't know anything too deeply, which is both a strength and a weakness. Right. But you can cover a lot of ground. And so we got into crypto in 2020. We'd done very well for our clients through the pandemic. And then the question was, okay, what next? And one of our biggest clients and I were both very interested in what crypto could represent in terms of an expression of monetary debasement theme. And so we made a very large investment in November of 2020 that tripled over the next year. And we got out, by the way, and returned all that capital. Hopefully the biggest redemption I'll ever have. But we built a business around that as well. And so I think I saw digital as being probably a 10-year theme, and I wanted to be part of it. And so we just built out a part of the business. So I think the biggest thing that we do for our clients is bring risk mitigation together with their existing portfolios to help them compound at a better rate than equities. But we're always on the hunt for what's next in terms of risk or opportunity.
Got it. You mentioned fall strategies, hedging strategies. It's a relevant thought these days, and people are worried about valuation and worried about concentration. Hedging's not easy. Going home long vol every day is an expensive proposition. And so how do you think about that?
I think probably because where I started my career, I'd rather go home long a bit of vol than short vol.
Okay.
And that's just part of who I am. And quite frankly, I've made a lot more money during really disruptive periods than not. But I think what most investors think when they think hedging is they think it is really hard, because it is. but they don't quite think about it in the right way.
Okay.
And let's talk about the really big investors. The really big investors go, look, I have so much money that how can I hedge it? It's just not possible. And actually, I have long duration money in a lot of cases. I'm a pension plan, I'm an endowment.
Sure.
And so why don't I just ride out any downdraft? And so I think that they think about it a little bit the wrong way. The way I think about it is if you have good hedges in place and you combine it with your portfolio so that you don't use some leverage, so you don't have to take risk off the table. Then when something happens, you actually have your hedge, which produces a lot of cash, when mentally you're probably prone to make some pretty bad decisions.
Right.
You're like, I've got this big pile of cash here.
Right.
Maybe I can use it for some of my redemptions or to pay the endowment's budget or to buy some really cheap assets here. And I think that's really the right way. Like holistically, that's the right way to think about hedging and what we do. And I think it's you really can compound better than just being long risk assets if you have that dynamic in your portfolio.
And as we sit here today, just given the setup, given vol surfaces, is there anything that looks particularly compelling to you?
Vol's pretty cheap right now, just as a general matter. But I think you have to be dynamic because I mean, one of the mistakes that I think a lot of investors make is they're looking at their portfolios right now. They're going, really high valuations. I don't know about next year. Who knows what's happening geopolitically? Vol's cheap. I'm going to put a big hedge on. And what most of them do is they lock in a strike price. And yeah, they got cheap vol, but they don't know when the crisis is going to happen. So what if the market rallies 10 or 15% and then falls 25? It's going to feel pretty awful on the way down, but you don't really have that much convexity. You don't have a great hedge in place.
Right.
So I think the key is being really, really dynamic. And people are worried about valuations right now, as you should be.
All right, I want to talk about trend follow investing. It's a big part of your approach. What's the framework right now? How do you approach that business today?
So just stepping back on trend following. So I think all great investors are trend followers. They just are. Because what are you doing when you're trying to capitalize on a trend? You are foreseeing some dynamic that the market underappreciates today, and you believe will somehow get priced in over some period of time. And if you're an investor, it's not over a week, probably not over a month, probably over at least a few quarters, maybe a few years, maybe a decade. Like I was talking about crypto. I think crypto, I saw that as probably a 10-year trade. We're halfway through it.
And you're still of that view? It's about 10-year trade?
Yeah, I think that's about right. Like we were getting into Bitcoin at 15,000. It's 85, 90. It's got probably a long way to go, and we're halfway there. So, but anyway, trend following, I think as a great investor, all you're looking for are trends. And so the question is, how do you capitalize on those? And there are, at the highest level, there are two ways of doing it. One is systematic and one is discretionary. And I think the best performing investors through time will be the discretionary traders who are exceedingly good at identifying trends fairly early. They don't have to be day one, but in the first quarter of some type of new dynamic that's going to move something. And then they concentrate their investments in a fairly narrow space, could be a stock or a sector or a country or a commodity. And then eventually they get out. The other way to do it is systematically. And the advantage with doing it systematically is you take the emotion out of it. You spread your bets across, we probably trade 150 markets, let's say, a little bit more. Yeah. So you spread your bets across all these different markets, and you can essentially capitalize on trends that if you were trying to make discretionary decisions, inevitably you'd never make, or you might make some emotional mistakes somewhere along the way.
Right.
And so you're not going to make as much in that strategy as the best discretionary trend identifier, maybe someone like Soros, who is great at that, but you do very well. And the advantage of that as well is you can capitalize on periods that are pretty big dislocations, things that you didn't really see coming. It just wasn't on your radar. It could have been like this gold move, or it could have been in 2022. By being in trend following, you capitalize on the down move in equities, but also the down move in bonds, which is a huge correlation breakdown. So as an investor, a typical investor, you had built your whole portfolio betting on that correlation remaining intact, and it went the other way. So trend had a terrific year that year at a time when most portfolios really didn't. When we combine long volatility and trend following and equities, when you combine them in a leveraged way, and if you look back starting at 2007, let's say the S&P's up 6 to 7x, combination of S&P and properly built hedges is up like 2x that. And S&P hedges and trend following is up like 40x. By the way, it's not intuitive. Like that's something that early in my career, I didn't really appreciate. Right. But now I do. And so the biggest investors in the US, that's the kind of thing that these guys are looking at.
Okay. And then how do you know, this is the hard question, but how do you know at the end when it's time to ask for the check? How do you know before the big reversal comes and the end of the move comes? Or you just say, you know what, I'm going to make as much money in the belly of that move as I can, and I'll probably get hurt at the end, but that's life.
In a discretionary, and I always think about discretionary because we think about how do you codify discretionary thought processes into our systematic strategies. But in a discretionary sense, I honestly do not think it's valuation. I think it's just being able to identify when people who have been betting against a trend are feeling maximum pain. And I think you can't teach that. Like, unfortunately, I wish I could have learned that in textbook. I've felt enough of those moves where where there are times where I feel a certain way and I know that's wrong. Like I know that I want to get out of something and I know, okay, I'm sure this is wrong. It just is. I've felt this before, but it also, if you feel something in yourself that other people, the market's filled with people like you. And that's what makes highs and lows on a systematic with a systematic strategy. It's a bit different. You need to have a set of rules. And I think what I just described it's not possible to codify, unfortunately. If we ever figured it out, we have the magic money machine. Right. But I think that there are all sorts of ways just in looking at momentum rollovers, but also we're doing all sorts of research on more fundamental factors that can anticipate changes in trends. We've got some great AI machine learning types of things. I'm sure everyone is working on those things because there's so much data in the world and there are interesting ways of thinking about it, manipulating it. I think what we bring to the market is just a very strong discretionary fundamental approach that we then work to try to codify. Okay. But I think, it's not easy is the answer, and you do the best you can. And you hope that by spreading your bets across 150 markets and running a pretty high vol that over time you generate meaningful returns.
Sure. And is there anything today any trends you find particularly compelling or any that you feel like are probably in their last innings?
If we talk about it at the highest level, I think the most important trend that is unfolding in the world from an economic perspective, let's set geopolitics aside, is this debt expansion. Just because this is probably not what you were looking for, but we can talk about specific markets, but I think that's the most important factor here is that there seems to be little to no spending restraint anywhere in the world. There's some places that are trying to do a little bit better job with it than others. The US certainly is not. And I think that if I reflect on my career, which started in '89, we've had these series of financial crises and policy responses. And the policy responses more or less have grown increasingly aggressive. And the government has taken on more of the private sector liabilities, expanded debt, and tried to create this ongoing prosperity with very little interruption. And so now you're at a point where I think the size of government debt, unless we have a real productivity boom, which by the way we might, but the size of that debt and the interest obligations are pushing the government to make all sorts of financial repression decisions and rate decisions. And it probably leads to a very large financial crisis here sometime over the next decade. I think that's the most important trend to pay attention to, because in a lot of ways, like most things feed off of that. I think what's happening in equities, what's happening in policy, what's happening in gold, what's happening in oil, like feed off of that dynamic.
And the path along the way is higher rates, steeper curves, more term premium, or not necessarily?
I think that what the government has already begun and is committed to is, and I think, by the way, it's sensible. So this might sound like a criticism. I think if you and I were running the government, we would do something, more or less in the same zip code. I think we're trying to figure out how do we run the economy as hot as possible, but with an emphasis on making sure that we clear as many roadblocks for AI development as possible, which is electricity and permitting and all these things. And then do everything possible to make energy as cheap as we can, which I think is a very deliberate strategy and probably part of what's happening in Venezuela, and to try to keep inflation down to the greatest degree possible. And then do everything possible to manage interest rates lower so that the actual interest burden is as low as it possibly is. And if you can make those things happen, I think you have a pretty good outcome. By the way, I think we still end up with a crisis down the road because I don't think you're going to see the political establishment become more austere.
Right.
So I think what that does, that combination of policies, pushes that problem out 3 years, 5 years, maybe longer, probably not longer. And that'll feel really good, by the way. During that period of time, it'll feel great.
Yeah.
Okay. But I think you'll still see these spending dynamics, and you'll see whatever the crisis that comes in the backside of this AI boom is, and I think it will be significant, you'll see an overwhelming policy response. So I think you should see steep curves, and you probably do, but I think there's going to be a lot of policy action to bring those curves flatter as well.
Okay. Let's talk about crypto for a minute. Let's talk about Bitcoin. We're roughly 30% off the highs of October. What's been kind of going on the past couple of months?
God, the price action's been terrible.
Yeah.
Which goes back to like, how do you know when trends are over? You know, there was a lot of excitement at the highs. I think, number one, I'll say I don't know, but I think this is my framework for it. I think that you had a rush of essentially Wall Street guys that came in and just built out these digital treasury companies. And obviously, MicroStrategy was the pioneer in that space, but there have been so many others that have come after that. And I don't think they provide, massive value for the economy. And I think they front-loaded a lot of demand, and they created a hype cycle unto themselves, and they kind of raced forward and brought a lot of future Bitcoin demand forward. And then you just hit a point of saturation for the time being. And then, there was a lot of leverage in the system that was betting that was going to propel us to a higher level. It could have, but it didn't. You kind of ran short of buyers. And then the dynamic on a market like this is once that happens, it starts going lower. And I think that's happened at a time when the AI theme has been so explosive, gold has been, and Bitcoin is very much a momentum trade if you look at over a few month period, even over a year period. So when a lot of the people who had been deploying capital there started losing money and looking at these other things that are making money, I think you started seeing rotation. And now I would say now where you are in the cycle is you see people actually getting really bearish on it. They're like, well, there are quantum computing risks to Bitcoin, and there are, which I don't think are going to manifest, by the way. But those are the things that I've seen through a few cycles now. You get toward the bottom, people start looking for reasons why it's going to a much lower price. And then some dynamic will shift. Maybe it's the silver to, people will say, the silver to Bitcoin ratio, which means nothing, but it's so wide, or it's the catch-up trade. It'll start moving, and those others will stall. And so I think we have significantly higher prices given policy activity. But I think that's what's been happening. And it's painful when it happens, and everyone's like, why is it happening?
And then big picture, do you have a fundamental framework for the asset class? So part of me thinks Bitcoin's a bit like gold in that it's whatever one wants it to be. There's no fair value, there's no yield, there's no intrinsic value. And so in the end, it's really subject to narrative and flow of funds. But am I missing something? Am I missing a fundamental anchor point in your view?
Bitcoin is so many things. We could spend a lot of time talking about Bitcoin, and we probably shouldn't. Yeah. There's plenty to read about it. But I think that one of the things that Bitcoin can become is it can become a blockchain or digitally native form of collateral that governments really can't interfere with. And gold is such a thing. Gold is worth a lot more. If Bitcoin were worth as much as gold, it'd be like 1.3 or $4 million Bitcoin.
30 trillion assets.
And it's not, right? So gold can be used like that, right? We've gone through this period really throughout both of our careers where probably the greatest form of collateral has been US Treasury bills or bonds or dollars. And you could, they're fungible. You can post them as collateral and margin. But in a world that's fracturing, which I think we're probably creating a few spheres of influence around the world, and US is probably Western Hemisphere, and Europe and Russia have to figure it out, and China will have the East. And I think there's a growing interest by lots of governments in the world to not be on the dollar system if they can avoid it. I think Bitcoin serves as potentially a great form of collateral that can be moved instantly, effectively, at zero cost or at close to zero cost. And so I got excited about blockchain because I saw the promise of that type of world, not necessarily where Bitcoin is that source of collateral, but that technology. But Bitcoin could become that in this world. So in a low trust world where you can't just trust that if you put your money into treasuries, you're going to get it back, which Russia just discovered. It can't put their money into European banks or US banks or anything because it can get confiscated. You could use gold, but you actually have to store gold somewhere. You have to dig it out of the ground, then you have to put it back in the ground, and then you have to associate it with a token, and then you have to secure it, and you have to make sure that no one's going to take possession of that wherever it is in the world. Whereas Bitcoin actually is the first big scaled asset that could provide that source of collateral that no government in the world can touch. So I think if I were to look out over the next 15 years at what could be its biggest value, I think that could be its biggest value. Now, it's still too volatile, really, to fill that role at scale, but it's getting there. It has that chance. So if I were to think about what's the potential big win for Bitcoin, that's probably what it is over the next 15 years. Could become bigger and better things over a longer period of time, but that's kind of it. And in the meantime, it's still a highly speculative asset, and bigger players are getting involved, and some of the early players are getting out, moving on. And so it's interesting.
Yes, wildly.
Yeah.
One more formal question. You occupy a bunch of different places in the asset management business. You have the trend following piece, you have the digital piece, you have the volatility piece. If you were to hazard a guess what your business, or just kind of writ large, the asset management business looks like in 5 or 10 years, do you have a strong instinct?
Lots going to happen in that period of time. One of the big things, one of the big dynamics that we see happening, and I see from my seat at Coinbase, is this wealth transfer from baby boomers to younger people it's game on.
Yeah.
So the way that people invest in trade is going to shift from, certainly you're younger than I, but certainly from my generation older, to I think more of a speculative kind of investment mindset.
Yep.
I think a lot of what's happening in blockchain and DeFi actually over the next couple of years is going to find its way into traditional markets. There are going to be people posting all sorts of new collateral to get leverage to take other risks. And so I think we're going to end up in quite a speculative market, which means the highs will be higher, the lows will be lower. I do think over the next decade, we're going to have this debt sustainability crisis. It could be soon. So if the AI theme really craters, I think we see a huge recession in the US, and then we see massive stimulus, and you have debt sustainability concerns. And that's a crisis that starts looking a lot more like 08, but even bigger, because the government's not going to be able to bail out the market the way it has in the past, because it's the source of the problem in many respects. So I think that will change the nature of markets. So I think you're going to have younger, more speculative skewed markets. Young people have a lot of money to speculate with. I think you'll see a great move into robo-advisors. So a lot of young people, we're working on some of this stuff right now, are going to turn to AI to help them make investment decisions. I think that'll probably change the nature of some of these markets. And I think in the background, you're going to have this big debt issue, which ultimately leads to some kind of inflation. And I think that will change the nature of the asset management industry. I don't think that AI is going to make all investors obsolete. And at the end of the day, people with a lot of money, maybe someday they just give it to a machine. I don't think that's the case. I think firms like ours will, as long as we stay curious and nimble, I think we'll do really well, grow a lot.
Let's finish with the proverbial lightning round. What's your greatest strength as an investor?
I think I triangulate really well, which just means, probably like you, I talk to a lot of people. I've cultivated a group of really smart and insightful investors and traders that I talk to, and I read a lot. Probably spend a third of my time reading, third of my time talking to people, third of my time internal, the firm or firms. And I think for me, I don't care if an idea was my idea or not. I really just want to figure out how to make money for our investors and build a great firm and supply great ideas and services. And so I just think if you have a great group of people that you've talked to over a long period of time, so that you can kind of know when they get too bearish, you can sense it. When they get too bullish, you kind of know it and you can feel that in yourself, like we were talking about with market terms. So I think if you do that, if you invest a lot into that and then are a good listener, which I am, then you can triangulate information well. And I think my writing has helped me enormously. I'm sure it's helped you. When you put upon yourself the pressure to publish every week, it's a blessing and a curse. If you do that, it rewires your brain. It makes you have to organize your thoughts clearly and be able to articulate them. And that process within yourself, I think, it helps your life, your trading, your business, and investing.
What's the best piece of advice you've ever received?
This isn't a throwaway for my wife, but it is. I think I've always been a good team player, but for a lot of my life, I really kept to myself. And she pushed me to really be open. And my writing's a reflection of that. I didn't now I have a big distribution. I talk about personal things and ideas and themes and things. But like opening yourself up to a lot of people has been incredibly gratifying personally. It's been very helpful professionally. But I think it's also, when you do that, you force yourself to be more introspective. And there's nothing more important, I think, in life, definitely investing, but even in life, there's nothing more important than being introspective, because otherwise you don't keep learning. And so that really came, like when I reflect back on my life, that came from that advice.
Okay. Which investor do you admire the most?
I don't want to offend anyone by not including him on the list, but if I look through my career arc, I learned about market reflexivity through Soros. So my early years in London, I was reading everything I get that he put together. And I think his framework for thinking about markets and trading and investing and cycles and booms and busts has always helped me. And I love the fact the guy started with nothing and he had a big chip stack, and he has for so long just kept pushing it out there. I saw that early movie about Paul Jones in '87, and I've always loved that guy ever since. And I think what I admire most about him is his longevity, because I've seen a number of people who are close to me really suffered through this business mentally. And I think he's shown the path of, like, you can be a great trader and you can build out a team around you. And I think with that team, it's allowed him, I don't know if he would say this, but from my perspective, it's allowed him to sustain and be as outstanding as he has been for so long. And then I got to know Ray a bit later in my life through my writing.
Ray Dalio.
Yeah. I just admired his approach, which in some ways is kind of mine, which is probably why, in other words, he started his career through communication and trying to help big institutional clients. And I've really tried to do a lot of that myself. It's astounded me that no one's ever really tried to copy what Ray's done, because it's so successful. And so he's built an amazing business. I admire that. And I think he's obviously been a great investor. And I think he's always tried to help his clients. And I think he's trying to help younger people with advice and his wisdom. And so I admire all those things. But I don't think there could just be one investor. There are others as well. But those are some of the big names of people that I've really admired.
Okay. Last question. Where do you spend your time outside the office?
I told you it took a year in the mountains when I was about 30, and I monked out. I just climbed and skied and paraglided, read. And so I've always had this draw to the mountains. Jackson Hole is where our family spends a bunch of time now. And I love just being outdoors, altitude, nature, animals. I'm not really a tennis player, a golfer, or anything like that. No, there's nothing wrong with that. I hope at the end of the day, like, I go down with a grizzly bear or a shark or something like that, as opposed to something really, really boring.
Yeah, but
we'll see.
Makes for a good tombstone.
We don't get to choose.
That's right. All right, Eric, that's the run of it. Thank you so much for doing this.
Great. Thank you. This is awesome.
Thank you all for listening to this episode of Goldman Sachs Exchanges Great Investors, which is recorded on December 17th, 2025. I am Tony Pescarolo.
The opinions and views expressed herein are as of the date of publication, subject to change without notice, and may not necessarily reflect the institutional views of Goldman Sachs or its affiliates. The material provided is intended for informational purposes only and does not constitute investment advice, a recommendation from any Goldman Sachs entity to take any particular action, or an offer or solicitation to purchase or sell any securities or financial products. This material may contain forward-looking statements. Past performance is not indicative of future results. Neither Goldman Sachs nor any of its affiliates make any representations or warranties, expressed or implied, as to the accuracy or completeness of the statements or information contained herein, and disclaim any liability whatsoever for reliance on such information for any purpose. Each name of a third-party organization mentioned is the property of the company to which it relates, is used here strictly for informational and identification purposes only, and is not used to imply any ownership or license rights between any such company and Goldman Sachs. A transcript is provided for convenience and may differ from the original video or audio content. Goldman Sachs is not responsible for any errors in the transcript. This material should not be copied, distributed, published, or reproduced in whole or in part, or disclosed by any recipient to any other person without the express written consent of Goldman Sachs. Disclosures applicable to research with respect to issuers, if any, mentioned herein are available through your Goldman Sachs representative or at www.gs.com/research/hedge.html. Goldman Sachs does not endorse any candidate or any political party. Copyright 2025 Goldman Sachs, all rights reserved.
One question.
Here's why there isn't more fear.
Join Stephen Carroll for Here's Why, the podcast that drills into one news story each week.
Here's why big tech's soaring valuations have some worried.
And explains it in just a few minutes with the help of one of our 3,000 journalists and analysts across the globe.
This current transition with AI is happening very quickly.
When people buy EVs, they generally are quite happy with them.
Bitcoin is pretty firmly an institutional play.
Look for new episodes of Here's Why every Friday on Apple Podcasts, Spotify, or anywhere else you listen.
Here's why AI isn't taking your job yet.
Subscribe to Here's Why today, wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Erica Herskowitz. President Trump held a call with Russian President Vladimir Putin today to discuss efforts to bring a halt to the war in Ukraine. That's according to White House Press Secretary Caroline Leavitt, who posted on X that the two leaders had concluded a positive call. The discussion comes a day after Trump met with Ukrainian President Volodymyr Zelensky at his Mar-a-Lago resort in Florida, a meeting that delivered no clear breakthrough but saw the U.S. president hail what he called a lot of progress toward a possible peace deal. Zelensky says he asked President Trump to consider providing his country with security guarantees that would last 30 to 50 years as part of a peace plan to end the war with Russia. Bloomberg's Greg Sullivan says Putin might not accept such a deal as there are a couple of sticking points.
On one hand, on the issue of the territory, he has been demanding that they cede this territory and has said as recently as this past weekend that they are willing to continue their campaign militarily until they achieve their goals. On the issue of security guarantees, that's another big question. We have the U.S. and Ukraine saying that they have reached 100% agreement, but Russia has ruled out the idea of European troops on Ukrainian territory, especially NATO troops. So it's unclear what security guarantees they can formulate that would be palatable to Russia, that Russia wouldn't say would be a deal breaker.
Bloomberg's Greg Sullivan. Later today, President Trump has another high-profile meeting on the docket at his Mar-a-Lago resort. He'll sit down with Israeli Prime Minister Benjamin Netanyahu, with the two aiming to boost a U.S.-brokered ceasefire in Gaza. Bloomberg News politics reporter Laura Davison has more.
One of the issues that U.S. officials have been watching really closely is sort of accusations that Netanyahu has really been slow-walking some of the progress in the region. One of Israel's parts of the deal here is that they need to pull out all of their troops, and there will be an international security force that comes in. A lot of the details there have not yet been worked out, and Netanyahu's been hesitant to really lean into some of these points on the 20-point peace plan that they agreed to earlier in the year. So this is sort of seen as a meeting to hopefully jumpstart sort of that momentum on peace plans going forward.
Bloomberg News politics reporter Laura Davison. SoftBank Group has agreed to acquire private equity firm DigitalBridge in a deal valuing the data center investor at $4 billion, including debt. We get more from Bloomberg's Alex Semenova.
SoftBank will pay $16 per share in cash for the New York-listed digital infrastructure company. The deal represents a 15% premium to DigitalBridge's closing share price on December 26th. It's expected to close in the second half of next year, pending all the regulatory approvals that it needs to go through. And DigitalBridge is one of the biggest investment firms in digital infrastructure, with about $108 billion of assets under management.
Bloomberg's Alex Semenova. Lululemon founder Chip Wilson is nominating 3 director candidates to its board and also submitted a non-binding proposal that calls for the board to declassify so that all directors are elected annually by shareholders. Wilson released a statement saying the recent CEO change announcement was the third total failure of board oversight with no clear succession plan in place, and that the board must be refreshed so that creative brand-first experience is empowered. A new report shows a pickup in home sales. More from Bloomberg's Denise Pellegrini.
Pending home sales jumped in November, with contracts signed last month up 2.6% from a year ago and 3.3% over October. The National Association of Realtors chief economist calls it the strongest performance in almost 3 years, and Lawrence Yun credits lower mortgage rates and a bump up in salaries for the momentum. Pending home sales increased in all 4 major regions in the U.S., led by a massive monthly jump in the West. Denise Pellegrini, Bloomberg Radio.
Technology megacap.
We think that GDP will be up 2%, 2.5%, maybe higher. In addition to that, we're projecting 15% earnings growth. And with midterm elections coming up, we can expect fiscal stimulus in addition to the impact from tariffs fading. So all that is an environment where you want to be in equities.
Brooke May of Evans May Wealth. Again, we're seeing a volatile commodities market, especially when it comes to silver. The metal is now lower after smashing through $80 an ounce for the first time. This morning's historic surge is being powered by speculative trades and persistent mismatch between supply and demand. Spot silver is down more than 7% today. Gold is also on the move, down more than 3%. That's news when you want it. With Bloomberg News Now, I'm Erica Herskowitz, and this is Bloomberg.
This is Tom Keene, inviting you to join me for the Bloomberg Surveillance Podcast. It's about making you smarter each and every business day. We bring you a recap of what happened overnight in Europe and Asia, the day's economic data, and complete coverage of the U.S. market open. We cover stocks, bonds, commodities, currencies, even crypto, all the information you need to excel. Bloomberg Surveillance also brings you the analysis behind the headlines. We do that with lengthy conversations with our expert guests, the smartest names in economics, finance, investment, and international relations. We do all this live each and every weekday, then bring you the best analysis in our daily podcast. Search for Bloomberg Surveillance on YouTube, Apple, Spotify, or anywhere else you listen. On the East Coast, listen at lunch, and on the West Coast when you wake up. That's the Bloomberg Surveillance Podcast with me, Tom Keene, along with Paul Sweeney and Lisa Mateo. Subscribe today wherever you get your podcasts.
I'm Joe Matthew, inviting you to join me for the Balance of Power podcast. Every day we deliver insight and analysis on the latest headlines from the White House and Capitol Hill, including breaking news from Bloomberg's reporters and in-depth conversations with lawmakers and administration officials that you won't hear anywhere else. What are the policy changes the Trump administration is making that affect Washington and Wall Street and drive your investment decisions? From tariffs to taxes, the rules are constantly changing, which is why you need to listen every day. We do it all live each weekday, then bring you the best conversations in the daily podcast. Catch up on the headlines you missed while you were at work. Listen on your way home for the top news of the day, straight from our nation's capital and around the world. That's the Balance of Power podcast with me, Joe Matthew, and Kaylee Lines. Listen on Apple, Spotify, and wherever you get your podcasts.
picked up very sizably. So why is that given all of these headwinds?
It's interesting. It's actually very interesting. The first quarter of the year, as you said, there was a fair degree of uncertainty post-election heading into a 2025 where people weren't sure how it would play out. And so the first quarter was relatively quiet, I would say. April was extremely quiet post-Liberation Day. Heading out of April into May, you started to see a crescendo of transactions, particularly on the larger side. And then I would say the last 3 months heading into the fall and the winter has rivaled what we saw in 2021, which has been the most active. In fact, in my career, I did not think we would look back and see a period as active as we saw in 2021. The last quarter, the last 3-4 months have rivaled 2021. And if you look at the year in total now, the number of $10 billion transactions is up 100% over 2024. And so it's not just become an active year, it's become one of the most active years in history.
What is driving that, again, given all these headwinds we've experienced?
So there are definitely headwinds. There's still geopolitical risk. There's still interest rates that can restrain things. There's still black swan risks, and some of those have happened. There's still uncertainty around regulation around the world. That being said, the strategic imperatives coming out of COVID to reposition businesses, not for the next 2 years, but for the next 20 or 30, were severely challenged by headwinds, I would say, in the prior 4 or 5 years. Coming into the mid part of 2025, capital markets wide open, the ability to finance, the ubiquity of public and private capital, and most importantly, the ability to get things done. You saw a number of very large, whether they be cross-border or complex or even in sensitive industries, transactions get completed. So CEOs and boards, prompted in a large part by their shareholders, were saying to them, if there's something that makes long-term strategic sense, you should be at least looking at it. And so files that were dormant for a period of time were pulled out and looked at. And what you saw is not only did companies look at those transactions, but recognize they could get them done. And that's why you've seen such a large number of transactions.
So you mentioned this surge in mega deals. What's driving that in particular?
Well, it's really all sizes. And so we focus most, as you know, on transactions $500 million and up. And those are up 20 to 30% in total. Mega transactions, as I mentioned, up 100%. What's driving those is for a period of time, there were large transactions, either in certain industries, just given the need for very large financings, that were difficult to get done. And whether that was receptivity by sellers, whether that was the aggressiveness of buyers, or whether that was just the timing where buyers thought that they could get things done from a financing, from a regulatory, from a geopolitical perspective, the fingers have met. And if you look at the differences, 2021, every market, every opportunity was actionable in 2021. The equity markets were wide open, the debt markets were wide open, and the M&A markets were wide open. That's the first time in my career where I saw all markets wide open for an entire year. That wasn't the case in 2025. But certainly for the second half of 2025, you've seen relatively wide open private credit and public credit markets. And you've seen also the IPO markets coming back, not back to where they were, but certainly much more robust than they were. And you've seen the fingers meet on strategic imperative of scale and the reasons that we saw, again, coming out of COVID for companies to get together.
So you said all sizes. What about industries or geographies? Are there particular trends you've observed as this activity has increased?
There's certainly been some trends that have continued from what we've seen for several years. So consolidation in technology, media, and telecom continues. And you just see incredible new company formation, see incredible new technologies. We're going to talk about AI. AI is not just AI companies, where you haven't seen a lot of M&A specifically in AI companies, but everything related to AI. So that might be software, that might be real estate, that might be data centers, that might be semiconductors. All those industries, power suppliers, all those industries have seen consolidation, again, as a derivative of AI. So what I'll call is the AI universe is certainly very, very active. And we're in the early innings, obviously, the AI generation. We would expect to see more there. Biotech continues. Large cap pharma companies looking for the next molecule. That continues. But even in traditional cash flow businesses, you see it, whether it be industrial companies, you've seen a lot of activity in consumer retail. You've seen financial institutions in Europe doing a large number of transactions. So I would just say it's very broad, and that's why you're seeing the records being met in terms of the number of transactions. It's both geographically broad. Europe has been extraordinarily active. The Americas obviously is the largest M&A market, but also really across industries and across sizes.
And so let's dig into AI a little bit more. As you said, there has been an immense focus on AI and its potential to reshape businesses. So you talked about some of this activity occurring not in the AI-specific companies, but ones around it. But more broadly speaking, how is AI influencing how CEOs and C-suites are actually thinking about their strategic activity going forward?
So it is hugely impactful in the boardroom. And if you look at all the other issues, let's say, that impacted M&A over decades, whether that be very difficult financing markets, whether that be political or geopolitical risk, there's a ton of expertise in the boardroom who's been through those types of situations, who have understanding of capital markets, who have understanding of politics and geopolitics and international relations. AI is completely new. So not only is it seismic in terms of its potential impact and thinking about how to make decisions on M&A, and which are very long cycle decisions, but the skills and expertise in the boardroom is very limited in and around AI. And so boards and management teams and advisors are having to both advise and make decisions on something that is super impactful, but there's a very short experience base, and that's nobody's fault. It's just, it came on so quickly. And so that's the decision making in the boardroom that's very, very difficult. And there's not an M&A situation or an M&A decision that's being made without extraordinary consideration about what is going to be the AI impact, not only to our company, but to the target company or the company that we're merging with. And so those are very difficult assessments, but those assessments are being made. And the most impactful conclusion is that if I'm a large company, I want to have a lot of cards in my deck because I'm not sure how it's going to play out exactly, but I need to be nimble, flexible, and have a lot of opportunities to play depending on how AI comes out. And that's why you've seen a lot of drive to get larger and have scale in different businesses and different product lines.
Right. So it's increasing part of their longer term strategy. I mean, it has to be this AI term.
Every company.
We're also seeing a lot of companies spinning off parts of their businesses or realigning their portfolios. When we think about that type of strategic decision making, how has that evolved over the course of the year? And do you think it'll continue?
Yeah, I would say 2025 has not been different than what we've seen now for well over a decade, which is simplification, and the drive to simplification continues. The conglomerate discount persists. If there are businesses that either are better owned or there's a better owner for a given business inside of a larger company that creates value for shareholders, I would say that boards and companies have become very facile and very familiar with the simplification move to achieve and deliver that value to shareholders. And you can't ignore the fact that activism is still pervasive. And so activists continue to look at every company and think about, should they be a portfolio? Should they be separate? And will there be value creation in those separation alternatives? So the path to simplification continues, but that's not a new trend. That we've seen that, certainly for well over a decade.
Right. And actually, if I'm correct, shareholder activism is at a 5-year high. So very active part of what you're seeing right now.
Yeah. And I'd say the blur that started 5, 10, 15 years ago, it's a question of there are traditional activists that raise funds to be an activist, but traditional shareholders, traditional institutions are much more active. Not that the big institutions are activist, but they are much more vocal, generally privately, but sometimes publicly, with whether they think a company should take a strategic action, whether that be simplification, generally less about doing a merger transaction until it's announced in front of them. But certainly on portfolio, activists and active shareholders are both looking at that very carefully.
Right. So activism, as you said, longer term trend. We have seen so much focus on private markets. When we spoke last year, there were many private equity sponsors that still had a lot of dry powder. That seems to be changing. Talk to us about how that's impacting activity.
Look, private equity is still between 30 and 40% of the M&A market. At its peak, it gets closer to 40, maybe a bit over 40 in the last few years. Given that they've had a more difficult time monetizing their portfolios, it's been more towards the lower 30s, but still a huge part and frankly, growing part. We're in the second or third inning of the private equity recovery. And when I say recovery, getting to a market where they'll be able to do significant monetizations of their portfolio companies. So we're still in that second, third inning. That being said, they continue to invest. They've been able to, many of the funds, raise significant amounts of capital. But now private equity has gotten much broader. Before it was traditional private equity funds. Now private equity can be sovereign funds doing transactions directly, sovereign funds partnering with corporates. It can be very large family offices. Part of what the tech world has created are extraordinarily large family offices that invest either alongside or directly, much like private equity. Private equity is half of it. Private capital, now private debt, obviously has become very large as well. So when you think about the private markets in totality, private equity, which has grown in a lot of ways, and private capital, private credit, which has grown tremendously, those are pools that are fostering M&A, that are looking to be doing creative structures, not just for private equity, but private capital with corporates, whether it be funding some of this investment that we've talked about with AI or other ways, are extraordinarily large parts of the capital structure now. So there's no shortage of capital, whether it be equity or credit, for companies who want to do things.
Interesting. If I think about what we've just discussed, Stefan, what's striking to me is, and you always emphasize this, it's strategic when you think about this activity and how C-suites are thinking about this. But if we think about heading into 2026, it feels to me a little bit like we had this very strong pent-up demand for this activity, which led to a very long pipeline and the extraordinary activity levels you've seen. Would you characterize this as pent-up demand that has now been somewhat satiated, or do you see the pipeline extending into 2026 and beyond?
Well, first off, from our perspective, my perspective, every transaction has to start with, does it make sense strategically long-term? Full stop. That's the simple test of whether it makes sense to look at something and obviously eventually to do something. That test has to be met in spades. At times, you'll be able to get things done. At times, the financing can make you do something or not do something. But bottom line is it has to be strategic from our perspective in terms of, does it make sense for you to do it? When you look at the statistics, the percentage of GDP or some of these very large macro measures of M&A relative to some of these larger statistics, we're still running below historical averages. And so there's been many years post-COVID where people weren't able to get done, and we operated well below historical norms. So I don't think we're at a point where, all right, the amount or the degree of strategic activity is done, that we've gotten through it and that the activities over the last few months, there'll be ebbs and flows. I mean, things always ebb a bit, you generally head towards year end and the holidays and whatnot. But when we look at our new mandates, checks that come in, those numbers are still running at 21 levels or higher. And so that's our best forward indicator as we think about things that may happen into 2026. But the new checks, the new concepts, and a lot of it, frankly, on the very larger size, is still pretty nascent. Even though it's up 100% over 2024 and 2025, it's still not at levels that we saw in some prior years in terms of 10 billion up transactions. And a lot of the new checks that we're seeing are either in industries or companies or geographies where we expected it to happen, but it hadn't happened yet. And a lot of those are very large in size.
So what is your outlook for activity in 2026?
So a couple factors. If you look at the foundational pieces that are really driving the extraordinary activity right now, availability of capital in both the public and the private markets, the desire for strategics to reposition, for companies to reposition and get bigger, have more cards in their portfolio, all of that remains. The ability to get things done from a global regulatory perspective, obviously many things have gotten done. So those foundational forces continue to drive. Also, I mentioned private equity. Private equity, we think, is in the second or third inning of its recovery, both on the investment side, but most importantly on the monetization of the thousands of portfolio companies that they sit on. So expect to see that step up. If those things all continue as they are right now, and you continue to have private equity recovering, 2026, we'd expect to be similar to what we're seeing now, which is at or near all-time high levels.
What could derail that outlook?
Lots of things, and it can happen any given day. I would say geopolitical risk is obviously large. We have not seen the real recovery in cross-border. And so any geopolitical instability always could put a quell on that. You could see credit markets tighten. Are there some idiosyncratic, either corporate issues around credit in the financial services sector or in industrial corporates or other, private credit in scale is not something we've seen before. How does that dynamic evolve as we go through credit cycles and others? All that's to be known. But what I'm highlighting mostly are there could be idiosyncratic things, but the fundamental drivers, so availability of capital both in the public and the private markets, the resurgence in the IPO market, the desire to continue to position strategically, the ability to get things done. Those are really the forces we look at, which is why we are reasonably but cautiously bullish on 2026. That being said, we always recognize that there are things that could slow it down.
As always, thanks so much, Stefan, for joining us again.
Thanks for having me.
Thanks for listening to this episode of Goldman Sachs Exchanges, which was recorded on Thursday, November 20th, 2025. I'm Allison Nathan.
The opinions and views expressed herein are as of the date of publication, subject to change without
News when you want it with Bloomberg News Now. I'm Erica Herskowitz. Israeli Prime Minister Benjamin Netanyahu and U.S. President Donald Trump are scheduled to meet this hour to discuss the ceasefire in Gaza. The two leaders will also touch on Iran, which is reportedly developing chemical and biological warheads for its ballistic missiles. More from Bloomberg's Laura Davison.
And this also comes at a time, as you mentioned just a few moments ago, where there's more concerns about Iran and its position in the region. They have there's been more saber rattling from Iran, and that's been a key issue for Netanyahu as well, where he sees Iran as sort of Israel's number one enemy in the Middle East.
That's Bloomberg's Laura Davison. Netanyahu's visit comes on the heels of another high-profile get-together for the president. Ukraine's Volodymyr Zelensky met with Trump at Mar-a-Lago yesterday. Zelensky said he asked the president for U.S. security guarantees lasting as long as a half a century to help deter any future Russian invasion. Both leaders also acknowledged that key issues remain unresolved, including the status of territories in the east of Ukraine. More from Bloomberg's Greg Sullivan.
President Trump said that they had made some progress toward that, but there was no additional details, and it's unclear where they stand on that. Moscow has been seeking this territory in eastern Ukraine in an area known as the Donbass. Ukraine is concerned because part of it is heavily fortified, and if they cede it, that could leave them vulnerable to future Russian attacks. But it's also a politically charged issue. Zelensky, it would not be popular among Ukrainian people to simply cede territory that Kyiv still controls, and also legally hard. There'd probably have to be a referendum. So it doesn't seem like much progress has been made. Russia has shown no signs of backing down on this, and even over the weekend, President Putin said that he's willing to continue pursuing his goals militarily. So the two sides still seem rather far apart on that issue.
Bloomberg's Greg Sullivan. Earlier today, President Trump held a call with Russian President Vladimir Putin to discuss efforts to bring the war in Ukraine to a halt. White House Press Secretary Caroline Leavitt posted on X that the two leaders had concluded a positive call. Meanwhile, President Trump said the U.S. had struck a big facility in Venezuela as part of its campaign against alleged drug trafficking operations there. It was unclear what target he was referring to. Trump made the comment in an interview on Friday with John Katzimatidis, a Republican Trump supporter and owner of WABC Radio in New York. The White House did not immediately respond to a request for comment. Pending sales of U.S. homes climbed by more than expected in November as a modest improvement in prices and mortgage rates encouraged buyers. An index of contract signings rose 3.3% to 79.2 last month. That's the highest level since February 2023. The gain was broad-based across regions and exceeded all but one estimate in a Bloomberg survey of economists. SoftBank Group agreed to acquire private equity firm Digital Bridge Group in a deal valuing the data center investor at $4 billion, including debt. More from Bloomberg's Alex Semenova.
SoftBank will pay $16 per share in cash for the New York-listed digital infrastructure company. The deal represents a 15% premium to Digital Bridge's closing share price on December 26th. It's expected to close in the second half of next year, pending all the regulatory approvals that it needs to go through. And Digital Bridge is one of the biggest investment firms in digital infrastructure with about $108 billion of assets under management.
Bloomberg's Alex Semenova. Lululemon Athletica founder Chip Wilson is pushing for changes to the board before the yoga wear company selects a new chief executive officer. Wilson is one of Lululemon's largest shareholders. He nominated 3 director candidates for election at the 2026 annual meeting. They are formerly from companies including On Holding, ESPN, and Activision. Optimism reigns at the big banks and the boutique investment shops. All 21 prognosticators surveyed by Bloomberg News predict the U.S. stock market will rally in 2026 for a 4th straight year, marking the longest winning streak in nearly 2 decades. Cameron Dawson is with New Edge Wealth.
The trend has been predominantly up, and it has been up really since we emerged from those lows in April. And as we look at overall technicals of this market, it still looks very strong. We're still very much in an uptrend. If we look at things like breadth, which is just the number of names that are participating in the rally, it is still very healthy. And that's a really important contrast to where we were this time last year.
Cameron Dawson of New Edge Wealth. A slide in tech mega caps is denting U.S. stocks as traders trim risks at the start of the final week of 2025. The Dow is down 2/3%. The Nasdaq down 0.75%. The S&P is 0.5% lower. The 10-year Treasury yield is at 4.11%. The 2-year Treasury yield is at 3.46%. Meanwhile, gold and silver plunged as traders booked profit following a powerful year-end rally that sent both metals to record highs. Spot gold is down as much as 5% today, marking the biggest intraday drop since October and the second time this year that the precious metal plunged that much in one day. Silver tumbled 11% in its biggest intraday decline since September 2020. Both metals posted a sharp retreat from fresh all-time highs that triggered signals that their rally to records had run too fast too soon. That's news when you want it. With Bloomberg News Now, I'm Erica Herskowitz, and this is Bloomberg.